Hi, I'm Emily, and I'm here at GameStop to figure out how to get some cheaper games. Do you have any of these 3 games on your current wish list? Well, you can get 20% bonus trading credit towards these games if you trade in any game at GameStop. For example, hello sire, may I please trade in this game that I do not touch? I see this is worth $20, and with the 20% bonus trading credit, I'll get $24 off Diablo 4. Also, for GameStop Pros, that 20% gets bumped up to 30%, so I would get $26 off, right?
Yeah, sure.
Thanks so much. This promotion ends July 1st, so make sure to go to GameStop to trade in your games today. Hi, I'm Emily, and I'm here at GameStop to figure out how to get some cheaper games.
The ego on you.
Good morning, June 28th. Market just opened. We're going to be streaming stocks, options, futures trading all day. Watching the SPY, watching BBBYQ, GME, live, whatever comes our way. Sub up, like up, comment down. Happy money sticks around. It's 9:35. Powell's supposed to be speaking right now. I don't know. There's a pretty big level here on barbecue, actually. I'm curious to see if it rejects this. This was the OTC high that we bought through yesterday, so kind of anticipating it resisting here, but not trying to have bias. I can go either way, but I'm not going to be buying it here. If it comes above it and retest it, then I'll buy it on the turn this into support, but at this point this is still resistance. But yeah, barbecue's up almost 9%, 3551. Very nice. See if it busts through here. I don't know if Powell's late or what's going on. Oh, 3580. That is that level. That was the prior OTC high. And it's going above it. Let us see. I mean, this could have been the handle yesterday. Literally could have happened that quick, which is crazy to think about for how long the cup took to build. And I actually reviewed some of yesterday's live stream, just watching this whole thing play out. And in the morning when it was rallying up, we looked at the fib levels and it was, I even mentioned 30 cents, like it would be a handle of 30 cents. Just it happened so fast. There it is, above that level.
Hello and welcome back to the final panel of our conference.
There it is.
Inflation is lingering. The European Central Bank, the Federal Reserve, and the Bank of England have all raised rates. Even the Bank of Japan is considering unraveling its decades-long ultra-loose monetary policy. The question now is how long will policies have to stay in restrictive territory
Yeah,
to
still
bring
no shares
inflation
on
back to institutions' 2% goals? And is it possible to do so without creating a recession? Ladies and gentlemen, the members of our next panel will bear a great deal of responsibility for bringing inflation back down to 2, and not only that, but keeping it there. Sarah Eisen, the closing bell anchor at CNBC, will be moderating this session. Sarah, over to you.
Yeah, it's kind of rejecting there. We'll
Let
see.
me just say, as a business and financial journalist who started out in foreign exchange,
This is pretty much as good as it gets. So thank you for having me talking to the Big Four today. And what I love, I'm excited for this conversation because it's always fun when everybody's in different places and going at different speeds and maybe disagreeing, if you dare to do so today.
She's
So thank
nervous,
you all.
man.
President Lagarde, I'll start with you as the host of this meeting. On the View from Europe, I'm curious where all of you are in terms of this policy path. We've certainly seen a fight against inflation. You've been very clear that there's more.
Yeah, Iron Tea's up 7.4.
How much more?
Thank you so much, Sarah. It's very nice having you in this closing moment.
Well, good morning. Good morning, Malava. Morning, Passing Cloud. Morning, Tao. I don't think that court's going to be live on barbecue. Morning, Tasty. Morning, Ace. Thank you for your gifted membership, Ace. Jaded man. Well sniped. Morning, Kevin. One with the algo. What did you snipe there?
Our interest rates by no less than 400 basis points in very short order, less than a year. And we still have ground to cover.
Passing Cloud. Congratulations.
I think that,
as I
Ace said earlier on, we are data dependent. We will
yeah, send me a link if it's streaming. I don't think it's streaming.
That we have ground to cover, and if our baseline,
You guys have a link for it.
we also know that we will very likely hike
Morning,
again
Jan.
in July.
Cliff, if you have a link for the hearing,
That I will
10.
not tell you, and for a very simple reason that I just mentioned, we are data dependent.
Why is Jan so quiet?
And we'll tell you, for the September meeting, we will have received a lot more data, information, survey results, and it's going to be another projection meeting prepared by the staff of the ECB. So we will have a lot in our hands to
Turn this up a little bit.
Governor Bailey, you surprised the market recently, raising interest rates by 50. You did a double. Why did you feel the need to do that?
Well, it really picks up on the theme that Christine has just developed. First of all,
Yeah, it's rejecting their barbecue.
Turned out to be much more resilient.
Just find some more consolidation.
I mean, there's many good aspects to that, but what goes with that resilience is signs of a very tight labour market, which is showing through in
Another RSI divergence, just like yesterday.
But also showing.
I'm not selling anything here.
An unemployment rate of 3.8%, which is historically right at the low end. So that resilience is coming through that way. But when we looked at again, to Christine's point, when we looked at the data, because we too are being driven by evidence at the moment, the cumulative data, both particularly on the labour market and on the inflation release we had, which to us showed clear signs of persistence, caused us to conclude that we had to make really quite a strong move at that point. It was justified. My own view on that was, if we were really of the view that we were going to do 25 and then we were really sort of baked in for another 25 based on the evidence we'd seen, it was better to do the 50. And then we will, as Christine said, we will be evidence driven. So we will wait for the next set of evidence for our next meeting, which to Christine's point again, will also be one.
That's a nice trend. Look at that trend that we just made this morning.
Have you received a lot of flack for the move?
Well, I think at the moment I can understand why there are critics of us and central banks. We have a job to do. I'm very clear that our job, all of us are very clear, I think our job is to return inflation to target, and we will do what is necessary. I understand the concerns that go with that, but I'm afraid I always have to say that it is a worse outcome if we don't get inflation back to target.
Something I know you've all been saying. Chair Powell, you've said it many times, and yet you paused, but you're not calling it a pause, and you're not calling it a skip. So what are we calling it?
Well, first of all, Sarah, thank you, and Christine, thanks for hosting us here in Sintra. So what we're calling it is maintaining the level of the federal funds rate at its current level for this meeting. Thank you. And we did that. If you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago, and we think so. We've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long. We started at negative real interest rates, and we've now moved up to where we actually are in restrictive territory, but we haven't been there very long. So we believe there's more restriction coming. And what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created, there's strong wage gains, and that's driving spending, driving real incomes and driving spending, which is driving more demand. And
All right, I'm in there too.
Labor market. So the labor
Thanks for
market
the link.
is really pulling the economy.
Appreciate it, Spooky Boy.
And my colleagues and I, as you will know,
I'll keep that up. We'll flip to that once that starts.
The median was quite a strong majority, actually wanted 2 or more rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
IRNT popped up there for a sec, 23 cents.
Rates at the last meeting, especially, I think it was a surprise that it was a unanimous decision to hold rates steady. When you said a majority think that they still need to go farther on raising rates.
It's really just as you get closer and closer to.
I like the trend here on IRNT.
What we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming from these, through the pipeline from rate hikes that we only made now, in many cases, 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike.
We've not decided that. So the only thing we decided was not to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way. It may not work out that way. But I wouldn't take, moving a consecutive meetings off the table at all.
I'm trying. Governor Ueda.
She's bringing all the jokes
this morning. It's great to
morning.
talk to you. We haven't heard much from you outside of your policy meetings in Japan. I think the world wants to know why you're the global outlier here. You have decided to maintain your easier monetary policy in the face of rising inflation. Why?
So a simple answer would be, although the headline rate of inflation is above 3%, which is well above the 2% inflation target, we think underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
Like going down.
Even though we've seen measures, including core, right, higher than the 2% level.
Yeah, the usual core is also above 2%.
IRNT's been running, man.
But let's say
it's already up 12%, but trend is nice.
Wages,
even this day, we're like, this could be starting a trend. And it did, and
it has risen, but is now running at around 2%. Now, if you want a 2% inflation rate,
eyes flushing a little bit.
Wage inflation that's consistent with that would be slightly or well above 2%. If you assume
testing 1 2 3.
Yeah, it's working.
So there's still some distance to go, we think.
And as a result of your policy being
Very
different than all
cheeky.
these policies of your
Nervous.
colleagues,
She's
the yen
cutting
has
through it
gotten
well,
very
comedy.
weak and continues to weaken by the minute. Is it too weak?
Well, the yen is being influenced by...
Literally same exact pattern we had yesterday's high on barbecue. RSI divergence with some big candles.
Banks.
And we're coming down now, you can see.
We'll see.
Just see what support it holds.
Monitor the situation very carefully.
26.98,
Monitoring the situation for
23.50.
intervention purposes.
Maybe the low you want to see. Low.
It's the jurisdiction of the Ministry of Finance.
Might hold higher than that.
Decisions on intervention.
President
Forex
Lagarde,
policy.
how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation. For you to feel comfortable taking a pause or potentially going the other way?
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered,
Overstock's up 6.
inflation was, I think
Doors
the
up
highest
11.
reading we had was 10.3. We are now at 6.1 headline.
Doors ripping, man.
Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy and that is visible for people, for the consumers
Adobe's up
of
23.
Europe, but we're also looking at underlying inflation. And on that front, we are not seeing enough tangible evidence of the fact that underlying inflation, particularly the domestic prices, are stabilizing and moving down. So we're looking at as many measurements as we can, because we want to be in sufficiently restrictive territory for long enough so that we are confident that we reach our 2% medium-term target.
Why is it so sticky, Governor Bailey? And why is your inflation rate higher than that of Europe's?
Well, let me distinguish headline and core for a moment. So with headline
Barbecue's
inflation,
down 3.5.
I do expect it to come
31.50.
down markedly this year, as we've been expecting for some time. And a lot of that is to do with the fact that the unwind of energy measures in the UK is on a sort of somewhat longer track, so that we will see some quite sort of discrete sort of jumps down in headline inflation in the UK throughout the rest of this year. And indeed, actually, energy prices are now somewhat weaker anyway than we thought they would be even quite recently. So it's core that's the issue, just as Christine has said. Core is much stickier. I think I come back to the labour market again. We have a very, very robust labour market and strong labour market in the UK. One of the striking things about the UK is that the size of the labour force is smaller than it was at the outbreak of COVID.
IRNT's ripping 19%.
Of the labour force. We're seeing some reversal of that now, but we're still not back to where we were pre-COVID. So that is causing the position in the labour market to be very tight. And I see this when I go around the country talking to firms, because what they say to me very frequently is that their plan is to retain labour as much as they can, even in the event of a downturn, because they've been concerned and it's been difficult to recruit labour. So that's certainly taking place. So I would say there's a backdrop of a very tight labour market going on.
Is it Brexit related also?
I don't think Brexit is a part of that labour market story. I think a lot more of it is actually to do with, frankly, the response to COVID. I mean, we've seen people. The UK is a little unusual in this respect. We saw people come out of the labour force during the COVID period. Other countries have tended to see that position reverse more quickly and more strongly than we've seen in the UK.
Governor Wada, when it comes to the inflation path for you, I mean, I know you'd like to see it continue to rise from here, right? What would it take for you to really strongly consider abandoning the yield curve control and negative rates?
So we have a forecast or a projection of inflation path that looks like it's going to go down for a while toward the end of this year on declines in import prices, and it's spilled over to domestic prices. And from there on, we are
trend line.
forecasting some increase in the rate of inflation into 24. But we are less confident about the second part. If we become reasonably sure that the second part is going to happen, that could be a good reason for a policy change.
If you see a steady increase?
If we are reasonably sure that the second part of the forecast is going to.
But didn't you learn from these three that inflation turned out to be not transitory?
Excuse me?
I mean, wasn't one of the lessons from the last year that inflation wasn't transitory and that there are some elements in it, was not, and that there are some elements of it that are sticking and proving difficult to fight?
Right, so the second part is the sticky part. But it's still, as I said, we think less than 2%. We hope to make sure that it's going to go up to 2%.
Chair Powell, we've seen some progress in the U.S. Certainly, if you look at the headline CPI from 9% down to 4%. I know you're focused on core, but what would make you feel better about it, that you could remain on hold?
So the progress on headline inflation coming down is certainly welcome and ought to help keep inflation expectations anchored. But I think it actually helps to think about core inflation broken into three pieces. The first of which is goods inflation. And we've seen goods inflation coming down for 6 months 25%. And that's because supply chains are improving, shortages are more or less gone, and also because consumption is moving back to services and away from goods. So that part of the story makes sense. Housing services is the next piece, and between that and goods, you have a little bit less than half of the total index. And you see now the new rents that are coming in are at lower increases or no increase, and so there's significant disinflation in the pipeline there, but it's going to take 12 months or 18 months to get there. The place where we haven't really seen much progress is in non-housing services, which is a little more than half of our core PCE inflation index, and that's, you know, hotel services, travel services, food service, you know, financial services, healthcare, those things. It's a generally very labor intensive. Some of it's quite cyclically sensitive, but some of it's not. The point is, that's where we're not seeing a lot of progress yet, and the reason is that, or one explanation for it is that
Cameron, you're supposed to forget
labor
that.
costs are really the biggest factor by far in most parts of that sector, and so what we need to see, we've seen a lot of signs of softening in the labor market, but it's just kind of beginning. We need to see a better alignment of supply and demand in the labor market, and see more softening in labor market conditions, so that inflationary pressures in that sector can also begin to subside.
Are you surprised that hasn't happened yet after 500 basis points of tightening already in a little over a year?
Yes, I think widely it's been surprising that inflation has been this persistent, but I think the bottom line is that policy hasn't been restrictive enough for long enough to start to see those effects. And you know, the service sector is not especially interest rate sensitive, by the way, as opposed to, for example, the goods sector. So we wouldn't expect it to be the first to be affected, but we would ultimately expect, as demand softens and as the labor market conditions go more into balance between supply and demand, we would expect to see inflationary pressures subside in that sector as well.
Do you guys coordinate? Do you talk amongst yourselves?
Yeah, of course we do.
I mean, do you call before policy meetings?
Can I
Yeah,
just,
please.
I just want to follow up on what Jay said, because I think he's completely right. And I think that this is what I call the catch-22 issue, where we have an expected catch down, where manufacturing eventually will align, or services will align on manufacturing, and that would be the logical consequence of the lag time that it takes for services to align with manufacturing, and to, you know, see prices go down in that sector. The catch up is that of labor, because it is, as Jay said, labor intensive. It's generally relatively low productivity and low skilled jobs in those sectors, and also those jobs that are going to seek the catching up with pre-COVID times. And how that catch down, catch up will be resolved is going to be critically important for where inflation is heading. Because if we see inflation going down in that service sector, and movement of wages while increasing at a moderate pace, then we would be in a relatively good place. But that is totally question mark for the moment.
Yeah, it sort of raises the question, Chair Powell, about whether we need to see a much higher unemployment rate in the US, and you're all dealing with a tight labor market, to finally really break inflation.
So, you know, that the way we think about that is that there seems to be a path still for labor market conditions to soften and for demand and supply to get back into balance without the kind of large job losses that have happened in many prior cycles. And the reason for that is the level of job openings that still exist in the labor market. So it's still set 1.7 job openings for every person who counts as unemployed. That has been coming down. Actually, the number of job openings has come down now by almost 2 million. And what you're seeing is wage pressures are still high, but they're definitely coming down. You're seeing surveys of workers and businesses suggest that the labor market is not as tight as it was a year or two ago. So you're seeing a job creation is beginning to come down. There are a number of indicia that would suggest that we're getting the softening that we need. We're getting it slower than we'd expected, but nonetheless it's happening. So it's still a possibility there. But you know, it's so uncertain right now that in my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible, and of course, many forecasters do predict that.
Is Europe in recession, President Lagarde? I mean, we've seen 2 negative quarters of GDP. I don't know how you define it.
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant, to say the least. And the expectations for Q2, particularly in the industrial sector, if I look at PMI numbers, are not giving us great hope that there will be a strong recovery. We see a second half of 23 up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
Do you agree with Chair Powell? Do you think you can get away with this tightening cycle without dragging Europe into recession?
Our baseline does not include a recession, but it's part of the risk out there.
Are you willing to tolerate a recession?
Well, the interesting thing for us is that if you go back to last November, when we did a forecast, we were predicting quite a long but quite shallow recession. And the economy, as I said earlier, has turned out to be much more resilient so far. Now, I think you can sort of point to a number of things that underlie that. One of the things I would point to is the fact that we've had a very sharp fall in energy prices in Europe. And that obviously has helped with the whole question of the terms of trade shock that we've been having. It's done quite a bit to reverse that terms of trade shock, and that feeds through into national income. So I'm not surprised that we've had this reversal in one sense. What was surprising, but actually very helpful, was that, of course, we did have this big fall in energy prices and a much better winter, frankly, than we thought we would have. So, we're going through this year now in a more resilient position than I expected. So we're not currently forecasting it, but obviously we have to watch it very carefully.
How's the Japanese economy faring? I mean, it's very exciting if you look at the Japanese stock market at a 30-decade high. What's happening fundamentally?
It's doing fairly well. I mean, apart from the contribution from some inventory investment, domestic economy is expanding at a pace slightly above potential, I think, driven by pent-up demand. We relaxed pandemic-related restrictions in May, and this is stimulating consumption and investment. There's also green GX, DX-related business fixed investment taking place. So investment is fairly strong at the moment. We think the economy is going to expand at slightly above potential for some
Morning, David.
But there's, of course, a lot of uncertainties going forward.
We're waiting for the acquisition before starting the coverage.
What may happen in Europe and the United States.
I asked if you guys coordinated or talked about monetary policy before. I mean, does that happen? Should it be more coordinated? Because you're all doing different things right now.
Well, I mean, I'll start. I mean, obviously what we don't do is say, what shall we do, what shall you do? Because we're all setting monetary policy for our areas, and that's the law in all of our areas, actually, so we don't do that. But we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. We've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
Yeah. I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over-tightening?
No.
No.
No, you don't. You approve of the policy. You've had a very tight labor market for a long time in Japan, even before COVID.
Yes.
Demographic issues
demographics.
There. Yeah.
It's working in a way to tighten the labor market for quite a long while. And it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering, easier to fight inflation last year when the economy was doing better, but now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing albeit at a modest pace. As I mentioned earlier, though, yes, there was no question. The first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. We've seen what that looks like, and it's just something that we have to do. It's one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding of inflation expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend here.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this idea that a lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting as it has been said, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other policymakers to actually consider those ideas and to explore them and to weigh the cost and benefit and all the rest of it. But at this point in time, I think we have to be as persistent as inflation is persistent, and we have to be resolute and decided and determined in reaching the target that we have set, and not debate the target as we are running that race.
But it does raise the question, Governor Bailey, about how far inflation will come down to.
It does, but let me reinforce what Christine said. What is the inflation target? It is the definition and practice of price stability. In our legislation, it is what price stability is taken to be. That is the 2% target. And I don't think anything has changed in terms of what we mean by price stability. And I think that's a very important point to start with. It's the anchor that we have to always maintain. Now, in terms of bringing it down, yes, we're facing, have faced and are facing the biggest challenge for a very long time. But we have to meet that challenge. I don't think it is the right thing to do to say, well, this is all a bit difficult, let's change the target. I really don't think that is the right thing to do. I think that would be a very bad thing to do. And I think, although I very much agree, as Christine was saying, that there are things we understand about inflation expectations and things we don't understand about inflation expectations. I think taking risks of that nature with inflation expectations, but also fundamentally changing what we mean by price stability when there's no good reason to do that, I think would just be the wrong thing.
How do you read, Governor Ueda, the inflation expectations? Because they've crept up in Japan as well.
Yes. We've been for a long time trapped in a zero inflation expectations equilibrium. So we've been trying very hard to move this to a 2% inflation, 2% expectations equilibrium. To do so, we had to de-anchor expectations from zero, raise inflation expectations, and in the future, we'll have to re-anchor them at 2%. This is a formidable task, and now we are seeing signs that inflation expectations are rising. But as I said, not to the extent that we are fully in the 2% inflation expectations equilibrium.
It also raises the question, you mentioned the labor market and some of the post-COVID changes about just how COVID has distorted the data and has made travel, for instance, so strong for so long. And I wonder, Chair Powell, how you look at the COVID impact on the economy and how it's changed the way you make forecasts and you think about what's happening right now.
Well, I think there are changes, and we don't know how persistent they will be. Certainly work from home, and you can see the effect on commercial real estate, particularly office real estate and the surrounding retail that's suffering in many major cities. We don't know how long that will last. It feels like some part of that will be persistent and will last. You mentioned the data as well. I guess response rates to a lot of the data that we collect and the other organizations collect, the response rates have gone down, and you're seeing a lot of volatility in some of these data series, more so, I would say, more so than we've seen historically. So the data are even a little bit foggier than they usually are.
Little cup and handle here.
In terms of what the
Hourly.
effects of COVID, it's going to have long-term effects on the economy. There may be loss of productivity. There's certainly been, for a generation of kids, some loss of education and training. I think it's hard to say how persistent all this will be.
What is your level of concern of commercial real estate, since you mentioned it in the U.S.?
It's something that we, of course, are watching carefully. The way it lays out is the large banks don't have large concentrations of commercial real estate, so that's a good place to start. A surprisingly large part of exposure to commercial real estate is in the banks that are under 100 billion. But there, the worry is more banks that have a high concentration, and they're relatively few. So it's something that we're carefully monitoring. Bank supervision has a playbook for this. So supervisors are talking to banks about their concentration in real estate and what can they do and how do they manage themselves out of this. It's something that we're well aware of. It's not a surprise, and we're focusing on it.
Is it one of the reasons you were cautious in the last meeting?
Commercial real estate? I wouldn't say so. No, I just, generally speaking, it was at the last meeting. It was about, what's in the pipeline, how far we've come, what's in the pipeline. I will also say that, though, that the bank stress part of the decision, in my thinking anyway, was the bank stress that we experienced earlier this year. There's a fair amount of research showing that when something like that happens, bank credit availability and credit can move down a little bit with a bit of a lag. So we're watching carefully to see whether that does appear. Of course, tightening in financial conditions is what we're doing intentionally. So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
Yeah, it gets into the question about lags. How long are lags, Governor Bailey? And do you expect to see more?
It's a very interesting question in terms of the transmission of our monetary policy decisions. So if I can just illustrate it with the UK case, and obviously it's not the only part of the transmission mechanism, let me be clear, but it's an important part, and illustrate it with the UK mortgage market. So we've seen a big structural change in the UK mortgage market since the last tightening cycle of monetary policy, which of course, accepting passage of time, was about 20 years ago actually. And that change has been a change from a variable rate mortgage market to a fixed rate mortgage market. Now, I must say, obviously with Jay here, it's not a US style fixed rate mortgage market. It's a much shorter term. So the average term is often around 5 years. But we know, and we think around about 85% of the stock of UK mortgages are now sort of in that part of the market. So we know that the transmission of monetary policy is going to be slower as a result, because obviously it depends upon the sort of the timing and the sequence of those fixed terms coming to an end often. So we have to judge that. I mean, it's another factor and another sort of element of uncertainty that we have to judge when we're taking our decisions, which is how much of the tightening that we've already done has come through and how much is yet to come through. And we know that referring back along quite a way into the past isn't going to help us in that respect. So we have to sort of formulate those views afresh. And so it is part of our decision-making calculus is how much more has to come through, when will it come through, and also how powerfully will it come through. And all those things are things we have to take into consideration. And as I said, history isn't going to be a great guide for that, given the change in the market.
So a year? What's a lag?
Well, what you see, and of course you can compute, is the sort of the profile of mortgages coming up for renewal, renewed terms, and we can see that over the next year or so, there's quite a lot of fixed rate mortgages are coming up for renewal. So yeah, we can factor that in. There is another element, I say, of uncertainty as to just how that will work its way through.
President Lagarde, how do you think about the lags?
No, we're still waiting.
Think of the lag in three steps, if you will. The first one is transmission in terms of tightening of the financing terms that are made available and how markets absorb the decisions that we make. And on that front, we have a good and reasonably rapid transmission. We see it in rates, we see it in volume of loans, and on both accounts, there is a good absorption and a rapid transmission of our monetary policy decision. But that's only step one. What we need to see is step two and how it materializes on investment by corporate, and for households, it's predominantly mortgages. And for the euro area, there is a lot of heterogeneity, because you have markets where mortgages are at fixed rate, markets where mortgages are at floating rates, some that are readjusted every so many years. So we have to look at all those data very carefully. But it seems that the transmission is likely to be less rapid than it had been in the past, because there are many more fixed rate mortgages now in the euro area than there was, say, 15 years ago. And that's not it. We need to see it then, channeled to the third step, which is inflation. So we want to see that transmission strength through step one, step two, step three, and make sure that this is really having an impact in terms of the fight we have against inflation.
Governor Ueda, do you worry about the impacts, the lagged impacts of their policies on the global economy and on your economy?
Oh yes, but for ourselves, we haven't had any serious monetary tightening for 3 decades. I was a board member of the BOJ 25 years ago. Then the policy rate was about 20, 30 basis points.
Wow.
Now, minus 10 basis points. So,
and it doesn't sound like it's changing anytime soon.
So in terms of that, the lag in the effects of monetary policy could be at least 25 years. We'll see what will happen if we get to normalize policy seriously, but we'll have to be very careful here.
Be careful what you wish for, I guess. So, Chair Powell, are you more worried about the lag impacts than they are because they're still hiking rates?
I don't know. I wouldn't want to compare. I would just say again, so what's different this time is actually, though, that markets move substantially in anticipation of moves. So by the time we lifted off in March of 2022, the 2-year had moved from 20 basis points up to 200 basis points. So financial conditions now move in expectation, and the whole modern communication strategy really helps that along. So that is different. What may or may not be different, and we also haven't had this kind of tightening in 3 decades, really. We've had tightening, but this looks more like tightening cycles from the 70s and 80s. So what we see is a picture of literature that has, the older literature says, a year or two for activity and add a year for inflation. There's new literature that says it's much faster than that, and I think we just have to use our, to watch and see what's happening. There are beginning to be, there are reasons to argue that it would be faster this time or slower this time, but I just don't think we know at this stage.
Well, it kind of gets into the question about the markets, and you're saying that it's a transmission mechanism. You're all talking very hawkishly and saying there's more work to be done and we're still worried about inflation. The markets pretty much think you're almost done, all of you guys. Maybe one more hike in July and then done, and then into cuts next year. Is that wrong, President Lagarde?
I look at the data we have, I look at the mandate we have, I look at the transmission lag, and we've decided for ourselves that we would use 3 criteria. That's what we are focused on. Of course, we are not completely oblivious to what happens in markets, but we have to be guided by what the mandate is, what the data delivers, and what criteria we take into account in order to determine our policy and to establish our stance going forward. That's the only way to go.
But I guess, there's financial conditions, and I don't know, Governor Bailey, are they working against you? You're trying to fight inflation, and MSCI World is up nicely this year.
Well, by the way, the market, I don't think thinks we're nearly done at the moment. They've got a number of further increases priced in for us. My response to that will be, well, we'll see, because we are, as we were saying earlier, we're essentially evidence-driven in that sense. So, we'll
Spies ripping up here
based on that. I think you're right to point out, as you said earlier, and I would draw this point out, that there are 2 parts to this. There's where the peak is, and then how long it's sustained beyond that. And I think both of those are relevant. Both of those are things that will, sorry to state the bluntly obvious, will emerge with time. But I've always been interested that the market thinks that the peak will be quite short-lived in a world where we're dealing with more persistent inflation.
Right. They did finally price out the cuts in the U.S. a few weeks ago. Market was primed for cuts. I assume you were pleased to see that that's no longer the case.
So if you go back and look at forecasts from the participants on my committee on inflation, you'll see, we've been consistently thinking this is going to take some time. It's going to be a process that will take longer than we would have hoped. And it may well be a bumpy process. But markets have gone back and forth between pricing and what appearing to price in pretty quick declines in inflation to coming back to being more in alignment with the thinking of the committee. And that's where we are right now, is closer to where committee participants are. But as Christine said, we're not focused on what the market's forecast is. We have our forecast, all of us who are on the committee. We work hard to develop an understanding of what's driving inflation and what the path forward for inflation is. We make our best estimates. And that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less. And of course, if that day comes when that turns around, that'll be great. But we don't expect that. We don't plan for it.
So is it counterproductive to you that the stock market has rallied, the bond market has rallied? The market is fighting the Fed. The market thinks you're closer to the end, and that does make financial conditions easier.
I thought you can't fight the Fed. Wasn't that the?
You can't fight the Fed, but they're fighting the Fed. Is that a problem?
No, I don't see it that way. I don't look at it that way at all. Honestly, we have different jobs. Our job is to bring inflation down to 2% and sustain maximum employment. That's our job. That's what we think about. We look at the data, and that's what we care about. And markets react. Different parts of the market react in different ways. It's just not something that is a principal focus of our work.
But it did seem last year like you wanted a weaker stock market. You used the word pain at Jackson Hole. It seemed like you were trying to communicate that financial conditions should tighten, and less so this year. Is that right?
Not really, no.
Okay.
Of course, we work through financial conditions. That's what we do. Our rate and all the things we do and say work through financial conditions to affect the real economy. That's how it works. But it's broader financial conditions. So we're not focused on any one market. We're never thinking, let's do this to this market. It's just, in general, let's communicate what we want to do.
Happy Wednesday to you, Daniel.
And why we want to do it. And financial conditions adjust. And that's really all we can do. We do not target particular parts of the market, although of course we do monitor market conditions.
So you don't care what the stock market's doing?
I look at broader financial conditions. It's one of many, many conditions, along with interest rates, credit spreads, everything, all of the conditions and the availability of credit. It's one of many, many things. Again, we don't focus on any one thing as the key thing.
Governor Ueda, how important is it to you, the markets, as it relates to financial conditions and the mechanism for monetary policy?
You mean the stock market?
Stocks, bonds, currency.
So stock prices have been rising fairly sharply since spring this year. Stock prices theoretically are affected by interest rates and investors' view of the economy. We haven't changed interest rate, so probably investors have become more optimistic about the future of the economy. Of course, we don't want serious financial imbalances in the economy, so we keep monitoring.
How do you think about, President Lagarde, the risks to the economy, especially geopolitical risks? In Europe now we were all glued last weekend to the news out of Russia and the Wagner rebellion, and we're wondering if now political instability in Russia presents a further geopolitical risk to the global economy.
Well, I think I look at it, we all look at it, and we are all concerned about geopolitical development by virtue of the profession that we have, because it does have an impact on supply chain, it does have an impact on trade, it does have an impact on the uncertainty, and we can only say that at this point in time, uncertainty is high overall, and a big factor of that uncertainty has to do with the geopolitical difficulties and conflict or quasi-conflicts that abound at the moment. So yes, we are looking at that, but do we have to make a moral judgment on this, that, or the other? This is not the job that we have, but it clearly has an impact on how the economy is going to change and be transformed, and whether it will have an impact that is inflationary or disinflationary, I think is also to be determined. I think there will be various schools of thought along those lines.
Yeah, I wonder how you think about next winter. I mean, Europe got lucky.
We hope it's mild.
What if it's not?
But storage is, 69%? Michael, the expert on Isabel's panel, said that 69%, and we are going to hit 95% by the end of the summer. So that should put us in a good position for the winter. But I'll say one thing, which probably we had not factored in sufficiently, and maybe that applies to all of us. It's the resilience of our economies and the resilience of the entrepreneur, the corporates, the way in which we have sort of, in a matter of a few months, reorganized ourselves. Just think 1 year back, everybody thought that the German model was dead, that Europe was going to be completely on its knees. Well, these things have not happened, and the resilience has been demonstrated at all levels of society.
I totally agree with Christine on this. That resilience, I mean, you see it when you talk to businesses. I spend a lot of time talking to businesses, and I've spent a lot of time in recent months talking to food-producing businesses to try to understand the sort of, the slower than, frankly, we expected decline in the rate of food inflation. And one of the things that I get quite consistently, and this is where sort of the Ukraine-Russia situation comes through for real, is they say, well, last year we brought forward our sort of supplies to a much greater extent than we would normally do because we were not confident we could actually get them. Consequences, we've locked in higher prices for, sometimes they say 6 months to me. And that, of course, is affecting the passage of inflation, particularly for food prices in this case. So these things do have a very direct effect and are continuing to have a very direct effect, actually.
But there's nothing central bankers can do about that, is there?
Well, I think the first thing we need to do is understand it. That's a good starting point. Well, we have to then design.
You can always just keep crushing demand, but you can't do anything about
food supply.
food
Well, we have to design policy. I mean, we have to design policy and take our decisions with the best. We always take policy. We always take policy decisions on a forward-looking basis. So we have to do it with the best information and understanding we can get of these things.
So to what extent, I guess, is the war in Ukraine driving supply side inflation for materials around the world?
Well, following on from what I was just saying, I think the conclusion I draw from that is, and this is what the businesses tell me, is yes, we are going to see actually a fall in the rate of food price inflation, for instance, but it is taking longer than we expected. So that's what we have to factor in and decide how best to, in a sense, to respond to that with monetary policy.
It's not just Russia. Governor Ueda also, we're following the tensions that have increased between the U.S. and China, between Europe and China. Do you think that's having a material impact on global growth?
Well, at least there's a tendency to relocate production sites out of, say, China into other Asian economies, including to some extent Japan. So in the short run, this is having a small positive effect on the Japanese economy through business fixed investment. But in the longer run, there will be inefficiencies all over the place. So we'll see.
So Japan's a beneficiary of the flight out of China?
In one sense and in the short run. But in the long run, I'm not sure.
I mean, Chair Powell, how do you think about, it's obviously a risk and it hurts trade. How do you think about the U.S.-China relationship as it impacts the economy?
So that is the way we think about it. Of course, we don't have any role to play in the relationships between the countries. But, China's a very large, important economy. It's a big trading partner, mainly consisted of us buying things that are made in China. I don't think, and of course, the Chinese economy came out of the COVID and looked like it was recovering strongly. Now it doesn't look like that. It looks like it's slowed down, and there's some issues there. From the U.S. standpoint, at the margin, that probably means a little bit less global demand. I wouldn't say it's a first-order consideration for us, though.
How does Chair Powell referenced the disappointing nature of the Chinese economic recovery. How does that play into Europe's recovery or the global growth picture?
Well, first of all, I think we have to be attentive to the emerging market economies at large. At the moment, they are producing about 60% of global growth, some of which is now a bit more focused on domestic development and consumption, and less so on trade. But if you look at the trade volume numbers from China to many other countries, particularly the advanced economies, that has not changed significantly. So the trade volume is still significant. And I'm not breaking any news here. The Chinese authorities themselves say that they're likely to have a 5% growth this year in 23 rather than the 6% that they had initially forecasted. So that will have an impact, given the size of the Chinese economy, on global growth at large. We have to, when we do our projections, when we look at the economy, we look at the global economy, and then we sort of narrow down and zoom on the European economy and the euro area in particular. But everything that happens in China, in the United States, in the UK, in Japan, in emerging market economies actually matter for us because we are strongly interrelated and have been trading with each other for a long time. And if anything we've learned from COVID, in addition to the pain and suffering for many, is the fact that we are vastly dependent for the supply of rare earth and various metals that will be critical for the development of the economy of tomorrow if we decide to firmly go towards the green economy that we should be aiming for.
What's the yield on that, Cameron?
As an open economy, one of the things is just exactly as Christine says in terms of how we do our process. One of the things that we spend quite a bit of time on is world export prices. Now, actually, in the recovery from COVID, and of course this was the supply chain shock, we saw quite a big contribution to goods price inflation from world export prices. We're now seeing those prices definitely start to weaken. So that will be another determinant going forward of policy.
As central bankers, do you plan for the worst case scenarios on the geopolitical front? I mean, if China invades Taiwan, then what? What does a central banker do? Is there a contingency for that, Chair Powell?
We use our tools to achieve our legal mandates, if that happens.
Got that Fed speak down. You'll hold a special meeting. especially. No, I mean, it's a volatile world we live in, right? And then
So
there's
we do
impacts.
have, in every FOMC cycle, we look at, our staff works up 6 or 7 or 8 alternative simulations, and they simulate, different things. It's not so much geopolitical events, though. It's more different ways the economy could play out. And we all the participants read those and think about them and talk about them, and they come up in our meetings, we talk about them. So it's very helpful because you can't get too focused on the modal path in a world where it's just very hard to predict the economy, even in normal times, it's very hard to predict the economy, let alone times like today.
What sort of simulations do you talk about?
I'm going to leave that to your imagination.
I bet I can think of a few. President Lagarde, Chair Powell did talk about, one of the things that I don't know that there was a simulation of is we had a few bank failures in the US this year. And I know it forced some of you into action to shore up banking systems. Are we in good shape now? Is the global and European financial system in good shape? Have we healed?
I can only speak to the banks over which we have supervision, and those are the euro area, the European banks, but I'm looking at the euro area specifically. We have been, enforcing Basel III to the entire banking sector. The capital ratios are very high, 15.3% if I recall. The leverage coverage, the liquidity coverage ratio, very high as well. So we have not experienced the turmoil or the difficulties in Europe, and Europe does not include Switzerland. Thank you very much. But we are extremely attentive. We reinforce the stress testing constantly. I'm very pleased to see that the Basel III agreement has now been reached, as I understand, between Parliament, the Council, and the Commission, so that we can actually roll out Basel III with as limited exception as possible. And we have to continue doing that job.
Any lessons that you took, Governor Bailey, from what happened earlier this year?
Well, let me start with a sort of bit of backdrop. I think it's important, drawing on what Christine was saying, I think it's important to, in a sense, reflect the fact that the regulatory changes we made after the global financial crisis have paid off, in the sense that we've been through, and we are going through, some huge economic shocks. And the banking system, certainly I can speak again as Christine does, I can speak for the UK banking system, is resilient to them and is doing what we want it to do, which is support the economy, not the other way around, to be honest, going back to the crisis. So that's an important starting point. Now, I think there are important lessons from, important issues that we have to reflect on from what happened. Christine made her subtle reference to Switzerland. Well, there's a huge sense of irony in the British, Christine. Look, there is obviously a question posed by the Credit Suisse, handling, which is, are the resolution plans for the major banks that we've spent the last 15 years developing fit for purpose, or are they not fit for purpose? And if, well, I'll come to that. If they're
Thank
not
you for the
fit
extra
for
time and
purpose,
helped us to
then
get
of course we
organized
cannot
in the
fit
shuffle of the papers, working overnight to get ready for today. So we really appreciate that.
No problem at all.
Thank you.
I'm glad to help you in any way I can, and appreciate the effort.
Thank you. Your Honor, for the record, Andrew Glenn, Glenager, Bergman, and Fuentes on behalf of the ad hoc bondholder group. I believe we have an agreement on one thing and a disagreement on another. The agreement is that we're going to go right into the evidence with Your Honor's indulgence, and then we'll deal with the law at closing. That's okay?
One of the things I've written down here is waiving opening statement.
Okay, good.
Going right to these.
Good, we're on the same page there. The disagreement is that this is our motion, and we have one witness, and that's Ms. Etlin. It's our motion, it's our burden of proof. We would like to go first with Ms. Etlin, as I think the rules of procedure typically require. Counsel, I believe, wants to make an application to go first, which we disagree with. So,
thank you, Your Honor. Rush Howell from Kirkland and Ellis on behalf of the debtors. Wouldn't say even necessarily a disagreement, just another option, because it can be disjointed in my experience to have the adverse direct and then the direct right after. We just propose we would start her with our direct, and then he can cross, but we're fine either way, Your Honor.
But wasn't Ms. Edmonds direct admitted into evidence already? and then at the first day hearings, and then we said parties could cross-examine if they wanted to, and you know, and I do realize that it's a little bit of a procedurally different situation, but I think though it is their case, and is that this is the only witness? Is that right?
The only witness, Your Honor, yes.
Yeah, and then, you know, I guess the other issues that come up are whether this is in fact cross-examination or direct examination, and then what happens thereafter, which are subsidiary issues that I thought of. But I don't know if you've.
We're not gonna, the bondholder group is not gonna be doctrinaire about what happens after the direct or my adverse direct and counsel's friendly direct cross. Whatever Your Honor decides after that is fine with us.
I agree with that, Your Honor, and what you propose makes sense. Only point I want to raise is that that's absolutely correct. Her declaration was already admitted into evidence at the interim and the final dip hearing, but we are going to have some supplemental direct that's not part of a declaration to explain a few things related to the projections from Ms. Etlin today. But we're fine proceeding that way, and we understand that he's going to treat this as a cross, be able to lead, for instance, and then
Right, and the technical rule, I guess, is that cross is limited to the matters on direct, but that wouldn't apply here. So you could you have supplemental direct. That's what goes in, and I just think that again is kind of a concession to the realities of the situation and the way this should proceed.
And Your Honor, I just wanted to make something very clear too. I have no objection to counsel replowing the ground that I've covered if he's prepared, Ms. Etlin, just to make things smoothly. I'm not going to object if he asks the questions again, and I think that's going to make the rest of the day go smoother.
Okay, great.
Thank you, Your Honor.
Those are the two issues. So actually I'm saying that the bondholders case should be presented first because it is their motion, and I'm going to allow it to proceed that way. But with all the other stipulations or agreements that we reached just now, the other housekeeping issue that I have is the issue of the sealing and confidential documents, and I just thought. I'm not sure if the parties discussed that, probably did, but I'm not aware of what the resolution was or if there was one, but if you could.
There has been, Judge. I think where we are on that is all the exhibits that we're going to present relate to the company's cash expenditures in the past. I think the controversial point, and one of the points that led us here today is how much is the 6th Street deficiency claim going to be? And that is contingent on a number of items, including ongoing sales. So I think what we're prepared to do, as discussed with counsel, is we're going to present a theoretical range of outcomes. We don't know where the case is going to end up on those outcomes. And it's unfortunate because if we knew, as a matter of fact, that 6th Street was going to be paid in full out of their pre-petition collateral, we wouldn't be here today. So at one end of the range, I think we're stipulating that's a possibility that the GUCs would not have any recovery. And at other, hopefully better outcomes down the road, they would have a recovery. And I think that's all we're prepared to present to the court today.
Yeah, with that, Your Honor, that we wouldn't have any confidentiality problems. Obviously, we don't want to go into any specifics related to that, but it sounds like we're not going to. I'm not sure, frankly, we even need any questions on it if we both agree that there's a range where at one end, the GUCs could not get anything under the contemplated settlement arrangement, and at the other end where they could, right? And I think that's relatively common sense as well, but we don't want to have somebody getting up and hypothesizing about recoveries from asset sales and things like that haven't even occurred yet, obviously.
All right, Mr. Hillman, you're rising anyway, so.
Good morning, Your Honor. Dave Hillman, Proskauer, on behalf of 6th Street as dip lender and pre-petition. is inherently speculative. I did hear from counsel that there are low ends of people's estimates, there are high ends of people's estimates. But I do note that Mr. Glenn said 6th Street's deficiency claim. He may have his own view of what values are, but I don't believe that valuation today has any relevance. The issue is not before the court, and it is still yet to be determined how assets will be monetized. So yes, I would want us to stay far away from anything that would chill bidding. And if people have a crystal ball, I would like to know what tomorrow's winning lottery ticket numbers are. We don't know the value of assets that are yet to be monetized. So.
Well, doesn't that kind of go to if there is a deficiency? We don't know that. No one knows that at this moment.
Correct.
That's why I when he said, Mr. Glenn said deficiency claim, which I don't, as I understand it, there may be one, there may not be one, and none of us sitting here right now knows, although we're all hopeful that there may not be one, but we don't know. Okay.
Thank you.
All right. So as I understand it, the question was about blocking on Zoom, but as I understand what just transpired, that's not going to be necessary.
We agree, Your Honor. Obviously, we reserve in case there's a question asked that surprises us in that regard, but I think we've, with the exhibits that have been presented to us and with our discussion, I think we shouldn't have that confidentiality issue today. Thank you.
Certainly, if it ventures into an area that you believe is covered, or Mr. Hillman believes is covered, or the creditors committee believes is covered, then stand up and you will be heard.
Thank you.
Thank you, Your Honor.
So with that, I think we're ready to proceed. So you call your first witness, sir.
We call Holly Etling, please.
That's interesting, man. Very interesting. Research on the Glenn Fellow. Oh, is that guy from BB show we're talking about?
You solemnly affirm the testimony you're about to give before the court will be the truth, the whole truth, and nothing but the truth from the testimony.
I do.
Oh, Glenn, Glenn here in the court, you're saying?
You don't have, you can state a business address. You don't need to state any personal address.
Thank you, Your Honor. So Holly Felder Etlin. My business address is Alex Partners at 909 3rd Avenue, New York, New York.
They retested that high. Didn't break it though. On barbecue.
Good morning.
Good morning, Ms. Etlin. Are you ready to roll?
Yes, Mr. Glenn.
Thank you. Now, Ms. Etlin, you have served as the Chief Restructuring Officer and Chief Financial Officer of the debtors for some time, correct?
Yes, I have.
Okay, and that's since approximately February of this year?
I've actually worked with the debtors since December 22, and I was appointed as an officer as part of the first, I think, first round of amendments and default cures. I was appointed as CFO, interim CFO. And then, of course, with the filing of these cases, I've taken on the title also of CRO, and the CFO is no longer interim.
Okay. And I consider you, and I believe you might consider yourself, the preeminent financial advisor for retailers going through restructurings, including Chapter 11 cases, correct?
Thank you very much.
I'll take that as a yes. And you've, in fact, overseen a lot of retailer liquidations during your career, correct?
Both successful restructurings and liquidations, yes.
Okay.
I tend to believe that the restructurings outnumber the liquidations, which is one of the reasons I have preeminent next to my name.
There you go. There you go. Now, we worked together on the Borders case. I was debtor counsel and you were the financial advisor in that case, correct?
I was the CRO and then the CEO in that case, yes.
Borders books?
Great. And that actually was a liquidation as well, correct?
It was.
I mean, as well.
And you know,
dude,
the group of liquidators that comes into these cases and liquidation cases and bids and actually conducts the liquidation sales, correct?
Yes, I do.
Okay. And you know the process for conducting going out of business sales, correct?
Yes, I do.
You're very familiar with that, right?
Yes, I am.
Okay. And you are also very good at forecasting what the store GOB sales will generate, correct?
I actually usually rely on a model that we receive from one of the major liquidation companies that plots out the sale and what they expect to have happening, since they're actually conducting the sale as our agent.
Okay. And you rely on those because you consider that information to be accurate, correct?
Yes, they're experts in plotting out the sale.
Okay. And the DIP financing in this case was $40 million of the new money, correct?
Yes.
All right. And you took in all that money in the first week of the case after Judge Papalia approved the DIP financing, correct?
Yes, we did.
Okay. Whose idea was it to have a single draw DIP financing new money facility for the first week of the case?
I honestly don't remember exactly who originated the idea. We had been in cash dominion where the banks swept all of our cash every day and applied it against the loan. So we basically had no cash. And as part of the discussions with the ABL and the FILO lenders prior to the bankruptcy, we indicated that we would want money advanced immediately upon that, because as you know, we filed with $3 million in the bank. So it was part of an overall discussion. I don't remember who originated the discussion, but I certainly made a request for DIP financing and for funds to be made available to us early in the case.
Okay. But
I had $3 million.
Seek approval for DIP financing in the second, third, fourth, fifth, sixth, and so on. You didn't need new money for that period of time, correct?
I'm not sure I entirely agree with that. I needed the new money and then it flowed through. We were disconnecting the cash dominion process. So we were actually going to get to keep our money and use it consistent with a fairly tightly controlled budget. So it would be typical in my experience for the DIP loan to be made up front in a case. So I don't think I gave it much thought one way or the other.
Okay, but you took the cash in the first week of the case, went into the bank account, and then you used it for reserves and other expenses, correct?
Yes, it was very important to be able to show our employees after the horrific prior 4 months of operating essentially in and out of default and in cash dominion that we actually had sufficient money to pay them certain things, for example, their Warren Reserve.
Okay, but you didn't forecast any need for new money DIP proceeds after the first week of the case, correct? Only the use of cash collateral.
The money is fungible, Mr. Glenn, and so that money came in along with other monies, and that was additional money. I actually asked the lenders for more than we received in the form of a DIP because I felt it was very important, as you know, in these large cases at the front end of the case, to really show a more than adequate cash cushion. And for a $5 billion retailer with 800 stores, operating with just a few $1 million in the bank is not something that generates confidence either in the employee base or the vendors.
Okay, but I just want to narrow in on my question.
Tell him, Alan.
You didn't forecast any need for new money financing in your budget after the first week of the case. Yes or no?
Objection, asked and answered.
I don't believe she directly answered the question.
I don't believe so either.
So the forecast showed the money coming in week 1. By virtue of it coming in week 1, there was not a need in week 2 or week 3.
Okay. And you didn't forecast the need for any further draws in those forecasts, right? After the first week.
There were forecasts floating around where I was asking them for more money, but ultimately the forecast we settled on was the one where I got what I got. In week 1, I wasn't going to get any more from them. And that's what we had.
Okay. And as you sit here today, you don't know whose idea it was to have one draw up front in the first week of the case? Do you?
In my experience, that's typical.
I'm asking if you know, not whether it's typical
No.
in this case. You don't know.
No, I don't remember.
Okay. Who negotiated the dip on behalf of the debtors?
I did, principally along with help from K&E and some help from Lazard.
Okay. But even though you were the primary business person other than Lazard who negotiated this dip, you don't know whose idea it was to do a single draw at the beginning of the case, do you?
No.
Okay. Now, your forecasts did not indicate a need for another dip draw. We talked about that. Is that because you had some degree of confidence that the GOB sales that you've conducted and overseen during your career would produce the cash showing it would not be necessary for another dip draw?
No, that's not how I would characterize it at all. The way I would characterize it is, again, as I've already stated, we wanted more money in the bank to operate the business. The business had been in a state of almost pandemonium due to the shortage of cash and the deteriorated nature of the business in the months leading up to the filing. We were perpetually in default. And we were having a very difficult time understanding what vendors, we were paying literally to cutoff notices. In a $5 billion company, we were paying literally store operations when somebody would stop picking up the trash because they were stretched that far. And so it was very difficult for us to predict what our cash needs would be. And so, again, as I've stated before, I asked for more money than we received. We ultimately, in a back and forth with the advisors and the principals to both the ABL and the FILO, settled on the preliminary budget and the preliminary amount they would give us. And I had to live within that. And I had to fund the things that I had to fund. And that was where we ended up.
And you have lived within that, haven't you?
So, yes, it's been painful at times, but yes.
Okay. And so as part of, well, let me ask you this question first. As part of the dip, the $40 million, the price of that to the company was the $200 million roll-up given to the FILO lenders, among other things, correct?
Well, it was a uniform negotiation that also involved the agreement by the lenders to allow us to fund certain reserves at the very beginning of the case that were imperative for us to retain our employee population and potentially preserve an opportunity to sell the company as a going concern, which was what was stated in court on the first days. So there was that issue, but there was also allowing us to fund certain reserves. And there were a whole bunch of other things that were negotiated. It was kind of a package deal.
Okay, but one of the charges that the lenders imposed on the company, the obligations that the lenders imposed on the company, was a $2 million roll-up of pre-petition debt in exchange for that $40 million, correct?
Yes.
And that wasn't the debtor's idea to have them do that, right? That was the price they charged you.
That's correct. That was proposal came from them.
So I believe you have an exhibit binder in front of you, I hope. No, does she need one?
No, sir.
Let me approach the witness with that, Your Honor.
There's a very, very teeny task here. This is going to get interesting.
Now, tab 1 of your binder, which I think we're going to call BHG1, is your first day declaration in this case, correct? In support of the DIP financing, right?
Yes.
Okay.
Yes, it's my DIP declaration as opposed to my first day declaration.
I offer exhibit 1 into evidence, BHG1.
No objection.
Thank you. Now, as part of this declaration, there is no disclosure of the cash that the company has at this point in time, correct? You could take a moment to look at it.
You have Exhibit A that's referred to in my declaration? Because I believe there was an Exhibit A attached that actually showed our budget and cash flow.
The budget, I believe, was attached to the credit agreement, not your declaration, which we have
Well, in
separately.
paragraph 17, it references the budget attached here too as Exhibit A.
Okay, well, we do have that. It's tab 2, I believe. And perhaps you can confirm that's what you're relating to. We'll call that BHG Exhibit 2.
Yeah, I just wanted to look, some of our budgets actually show beginning and ending cash, and I just wanted to make sure that I could answer your question accurately.
Mhm.
So I don't believe there's a specific disclosure, but as I've stated, we had $3 million.
Okay, so your testimony today is $3 million, but this chart shows, in fact, a $0 cash balance, correct?
I'm not sure where you're reading a beginning cash balance.
Okay, well, there is no disclosure of cash balance. There's a disclosure of ending cash of $10 million. Do you see that?
That's correct. That was part of the DIP agreement as well, which was that we agreed to pay any excess generated in the business to the lenders, first the ABLs, then the cash collateralized ELCs, and then the DIP and FILO.
Okay, so
It was pegged at 10 by agreement. It wasn't always 10 during the case.
okay. And your testimony today is that there was $3 million in a bank someplace. Is that correct?
That's correct.
Okay.
On that Monday morning, yes.
Was there any restricted cash in the system at that point in time?
If by restricted cash, you mean cash held at various servicing agencies, sure, like Fiserv and American Express, but those were reserves that were not going to be returned to us.
Okay. And was there any other cash in the system other than the $3 million that you've identified and the cash that was in those restricted accounts?
You're talking about a Monday morning after the filing of the bankruptcy case.
Yes.
So nothing had hit our bank accounts other than that.
Okay. We'll come back to that in a moment.
I'm sure you will.
Now, you have disclosed the current cash balance in your other declarations that you filed in other bankruptcy proceedings, have you not?
But sometimes I do, sometimes I don't. In this case, because we had effectively zero, I don't think it was a big issue.
Okay. Now, the first day hearing was on April 24th in the afternoon, correct?
Yes, Monday afternoon.
Okay. And you filed bankruptcy, the Chapter 11 petitions the evening before, correct?
On Sunday. That's correct.
Okay. And up until that time, you had Friday sales, Saturday sales, and Sunday sales that you were trying to reconcile and understand what those actually produce, correct?
I wouldn't characterize this as trying to reconcile and understand what they had produced. Again, we were spending most of our time focused on getting a $5 billion public company with 800 stores and 12,000 employees into a successful filing. I did know what the sales were. I do receive daily sales reports as part of the management team.
Okay. When in the business day or the weekend, at what point of the day do you receive those reports?
I receive them at the beginning of the business day for the prior day.
Okay.
Generally sometime in the morning, sometimes they're late. We've been having continual systems issues.
These are the sales reports, not the cash reports.
That's correct.
Okay. When do you first receive the cash reports for the prior periods?
For a weekend period,
Let's start with the weekday.
it generally, because the majority of the company's sales are via credit cards, there is a 2 to 3 day business day processing period from the date of the sale until we get the report back from the credit card company.
Okay. And when does the cash hit your bank account?
Typically in pieces. For weekends, it would hit Tuesday afternoon, and then also there's another piece that comes in on Wednesday. I believe American Express is a little bit slower than Visa and MasterCard.
Okay. And what about Friday? When would the Friday cash hit the bank?
That would be the same.
Okay. So it would be Monday?
No,
It would be Tuesday.
so it'd be Tuesday and
So,
Wednesday,
so Friday, Saturday, and Sunday, you get on Tuesday.
generally, yes.
Okay. And you have a sales report. Let's talk about that for a minute. Now, we've asked for a copy of those sales reports, but we have not received them. So I don't know what's in them. What do the sales reports reflect?
They reflect sales by store, gross sales by store, for the applicable day. Sometimes there are stores that are not online and don't transmit properly, but generally it is intended to reflect all stores, all sales for the previous day. And then there are various cuts of the data relating to, by category of sales and, pots and pans versus linens and things like that. But I generally look at the summary reports and look at the reports by region.
Okay. Let's go to the budget, BHG Exhibit 2, which I offer into evidence.
No objection.
Thank you. Okay. So I think you've testified that this was the budget that Judge Papalia saw on the first day in connection with the DIP hearing, correct?
Yes, I believe so.
Okay. Now, do you understand as you sit here today, what the standard is for approval of DIP financing on the first day of a case, as opposed to the second day of the case after the creditors committee is formed? I know you're not a lawyer, you've done this a long time. Do you have any understanding of what the standard is?
I was just rising to object that it calls for a legal conclusion.
Yeah, I object. I sustain the objection to the extent he's asking for a legal conclusion, but if Ms. Etlin has some understanding, non-legal understanding, then.
That's correct. That's what I'm asking for.
I'm trying to remember a case that I've done in the more than 35 years that I've been doing this work, where we didn't get the DIP approved on the first day, at least as to a preliminary matter. So,
But do you understand the standard for that as a lay person?
I'm sorry. I cannot specifically recall. If you're trying to remind me about something, you could ask me specifically what you understand the standard to be.
I'll get back to that in a moment. Now, you prepared this budget with the Alex Partners team and the Bed Bath & Beyond management team, correct?
Yes, we did.
And this shows, if you look at number 1, the column on the left, that the company does not have sufficient liquidity to pay all of the expenses in this first chart, in this first column, I should say, without the DIP financing, correct?
That's correct.
Okay. And we have here operating disbursements of 86 million, collections of 56 million, and that creates an operating cash flow deficit of $30 million, correct?
That's correct.
Okay. And we see down below the column or the line DIP flows with the $40 million. Doesn't that reflect the inflow of the DIP financing?
Yes, it does.
Okay. Now, you were in court in the first day. I believe Ms. Geyer informed the court that there was a, quote, $30 million hole that needed to be filled in the first week of the case, correct?
That's correct.
Okay, and that's a reference to this $30 million negative cash flow position here, correct?
Yes.
Okay. Now, I'd like you to go to Exhibit 3. Exhibit 3, we'll call BHG 3, is your broader first day declaration, which was in support of generally all the other relief in the case and providing the court with background about the case, correct?
Yes.
Okay. Now, like you to turn to paragraph 81 of this document, please.
I'm sorry. The exhibit I have stops at paragraph 60.
That's a problem. Bear with me for a minute.
Mine actually has it.
We have other copies. We can. I'll swap it. I'll swap it.
Hard to say what. Don't have it.
It's a very, very long declaration. It was a very long declaration.
Wouldn't
You trade
expect
me?
you to memorize it.
Okay, no.
Thank you.
All right.
Now, your declaration projected the proceeds of the proposed sales of the debtor's assets, correct?
I'm sorry.
One moment, please.
Sure.
We don't have to do anything. It's flushing down there. Still kind of pull flagging. Barbecues, barbecoating. Below VWAP, still below that resistance level. You see it break and test that for support.
Well, do you recall projecting in your first day declaration, we're going to find this because I don't have the right paragraph number here, approximately $718 million of proceeds from GOB sales. Does that number?
Where are you?
I'm just asking her because I'm trying to speed this up. So do you remember projecting $718 million of proceeds from the sales from the GOB sales?
I'm sorry, Mr. Glenn. I would have to go look at this quickly.
We'll come back to that. Okay, so when you filed the Chapter 11 case, did you have an opinion about whether there was enough collateral to repay the 6th Street debt without resort to any of the unencumbered collateral? In other words, that their regular collateral would be sufficient?
Your Honor, first for the record, Michael Mervis, Oscar Rose. I object to the question to Santa Claus was unencumbered versus encumbered collateral.
I sustain it to the extent he's asking for a legal conclusion, but again,
Not.
handle it the same way. If Ms. Eklund has an understanding based on her extensive experience and what she was dealing with at the time and negotiating, then she can testify to that without getting into legal conclusions. You can.
That's the question.
So I'm not specifically recalling what was collateral and what wasn't, but I would say the following. When you're liquidating a business this large, there are things that you can predict, that you know what the proceeds are going to be, or that you can reasonably predict them within a range. And then there's a whole host of other things like claims and recovery of LCs and other kinds of things that there is a fairly broad range around. We were satisfied that within the period of the case, leading from the filing of the case to the creation of the liquidating trust, which is the intent at the end of the case, that there would be sufficient cash to run the case and provide a recovery to the senior secured lenders. But that was my focus, not in coming to necessarily any formal conclusion as to somebody's ultimate recovery from their specific legal collateral.
Okay, so let's turn to page 32, paragraph 81 of your first day declaration. There's a section there that is under the legend value maximizing liquidations.
I'm sorry, my first day declaration.
Exhibit 3.
Yes, paragraph 81
I don't have-
refers to NOLs.
Yeah, I think there's a problem with the binders. I'm gonna have to come back to that. We will fix that. Apologies. Okay, so the next subject we're gonna cover is
Judge's face.
okay, so the DIP budget again. The DIP budget was prepared and filed. What was filed at 11:47 the day before the first day hearing, correct?
I'm not sure the time of the filing. I'm not in charge of that, but if, Candy wants to stipulate to the timing, they can.
Yeah, it's on exhibit 2. It's at the very top. It gives a timestamp. It's
Okay,
after 10 o'clock at night, the night before.
that's not unusual in
Okay.
a situation like this.
Okay, thank you. And then the hearing was held the next day, correct?
That's correct.
Okay, and then the judge approved the roll-up. That was effective on the first day of the case, correct? In the original DIP order. You don't know. Okay, I'll move on. Okay,
I'll look at your honor
All right.
because he was.
Yeah, that was.
it's in the record. I don't. That was more for foundation. Okay, so the next question I have is the second DIP hearing. Okay, you prepared a second budget the day that was published the day before the second DIP hearing, I believe on June 14th of 2023, correct?
Yes.
Okay, and the DIP budget was filed with the court at 11:47 p.m. that day, and the hearing was held at 11 a.m. on June 14th of 2023. Does that sound correct to you?
I guess so.
Okay,
I
thank
was
you.
present at the hearing. Again, I'm not in charge of making court filings, so.
Fair enough. And at that hearing, there was the announcement of the settlement with the committee, correct?
Yes.
Okay. Now, let's go to that budget, which is Exhibit 4 in your binder. Oh, and I offer Exhibit 3 into evidence, EHG 3.
No objection.
Okay. an evidence.
EHG 4. Now, did you prepare this budget for submission to the court?
I'm sorry.
Did you prepare this budget for submission to the court?
Yes.
Okay. And as we understand it, you can correct me if I'm wrong, this is the first budget that was presented to the court and publicly announced to the stakeholders since the budget presented to the court at the first day hearing, correct?
On the public record, yes. However, we were required to provide the ABL lenders, the FILO lenders, and the UCC professionals a weekly update to the budget. So every week they received a variance report and an update to the forward budget from the moment that the committee was formed and hired professionals.
Okay. Now, I'm going to go back and forth between the first dip budget and the second dip budget. So if you could have them both at your fingertips. So
give me a second. I'm going to
Sure.
open up.
In the meantime, let's offer exhibit 4 into evidence, please.
No objection, Your Honor.
In evidence.
Okay, so let me know when you're ready.
Give me a sec. Just trying not to knock the microphone. There's very little room up here. Okay.
Okay, so the first week budget in this case, the actual results for week 1 show positive net cash flow of $89 million and ending cash of $93 million for the first week of the case. Are those numbers accurate?
Yes, they are.
Okay, and going back to your budget for the first week, you projected ending cash of $10 million. So apples to apples numbers between these two budgets, the actual cash flow generated or the ending cash generated was $93 million versus $10 million in the budget by which Judge Papalia approved the DIP financing, correct?
Yes, due to both a positive variance in cash receipts and a positive variance in disbursements, which resulted from the inability of our cash management bank to get our disbursement accounts open timely. They were focused on getting our payroll accounts open, and unfortunately, operationally, that bank is not super fast. And so many of the things that we anticipated making disbursements for in week 1, we were unable to do so because the bank accounts weren't open.
Okay, we're gonna get to that. I just want to make sure that the court understands what the numbers mean. Am I correct? Ending cash in exhibit 2 is the same metric as the ending cash in exhibit 4.
That's correct.
Okay, so there was an $83 million positive variance to the company, correct?
Yes, sort of.
Okay, and
Sort of.
well, that's what the numbers say. It's 83 million. I'm just doing the
I
math.
understand it, but in that number is also the entire amount of the reserves because I didn't have an open bank account to transfer it to, and it was originally included as a disbursement. If I don't have a bank account to transfer it to, it was sitting in the bank account. It was segregated.
I understand. We'll get to that, but I just want to make sure we start with the foundation of the numbers. $83 million.
So do I.
Okay, thanks. Okay, so again, you may disagree with me, but we're just going to do some math. If we didn't have the dip in week 1 and we subtracted that number from the $93 million, the company still would have had another $53 million of cash in the bank account at the end of the first week, correct? That's what the numbers say.
Of which 31 of it was reserves.
Okay,
we had negotiated for.
Okay,
So
fair enough.
That's not available to me.
Fair enough, and we're going to get to that. But numerically, if we remove $40 million from the system in week 1, the company still would have had the ability to pay all the expenses that it actually paid in week 1, correct?
Object to incomplete hypothetical. If the question is, is 93 million less 53, she can answer that, but I think it's far more complex than that question.
Well, he's going to have the opportunity to elicit that from the witness. I just want to understand if the company would have been able, with $40 million less, to pay all of the expenses that it actually paid in week 1. Isn't that what the numbers say?
Is that, so the question is limited to week one and without, just as a slice of time or?
Yes, it is.
A
A slice of time.
specific period of time without considering all the other things that
Yes.
come down the line and the reserve and all.
Yes, yes.
Your math is very good for a lawyer, Mr. Glenn.
Thank you. You taught me well. So let's go to the second period, okay? That $93 million number is carried as the beginning cash in the second column in Exhibit 4. Do you see that? There's $93 million there, right?
Yes.
Okay. And then there's ending cash of $69 million. Do you see that?
Yes.
Okay. So if the company never got the dip, it still would have had $29 million in its bank account at that point in time, correct?
But at that point, I needed to have $1 million in reserves.
Okay. When in this period did you pay the reserves?
Part of them were paid in week 2, and part of them I think were paid in week 3.
Okay. So did the company suffer immediate and irreparable harm because you did not pay those reserves in week 1?
So it would have, had the company's employees known that those reserves were not funded into a segregated account on that day, we assured them that that had happened. So we had a big problem with retaining employees, given the disjointed and very, very difficult process the company had been through. And we assured them, and I assured them in week 1, even though it wasn't technically segregated, that it was there, funded, and segregated.
Okay.
So shame on me, I guess.
Okay, but the question is, the company's still operating and it did not suffer immediate and irreparable harm because you deferred those expenses, correct?
It did not suffer that harm because I told people that they were funded and done, even though they were not.
Okay, so let's go to
this judge. There's Ryan Cohen in the back.
let's go to the third week. Well, actually, let me ask you this question first. In Exhibit 4, but not in Exhibit 2, there's a line at the bottom, and it says, any weekly ending cash amount in excess of $10 million is subject in all respects to paragraph 26 of the final order. What does that refer to?
That was added by counsel, but I think what it means is that the fact that the lenders have not forced us to sweep down to 10 million doesn't mean that they don't have the right to do so.
Okay. All right. So let's talk next about this first week. When did you learn what the actual receipts were, or what they were likely to be for the period of Friday, Saturday, and Sunday preceding the petition date?
When did I know that what they were likely to be?
Yes.
Not until we actually saw them. The company had $300 million in gift certificates outstanding. And as Your Honor noted in day one, lots and lots of 20% coupons everywhere in the world. So we didn't know exactly how much of those sales would be offset by the redemption of those items until we actually got the cash receipts. The company's systems were just not set up to properly track that, and we were always reconciling in arrears to what we got.
Okay, so when did you know or have some concrete understanding of what it was likely to be for that period of time? Friday, Saturday, and Sunday. When was the first time you looked at the sales reports? You looked at the cash receipts? When did you know what the range was likely to be?
Just object to the compound question. There are a lot of questions in there, I think.
I'll rephrase it. When did you know what the cash position was likely to be?
Let me shortcut this for you.
Sure.
The company had an extended history up to that point because of the deteriorated nature of the business of doing approximately $5 to $5 million in sales per day. So upon the announcement of the potential pending bankruptcy on that weekend, sales on Saturday went up to 6 million. And on Sunday, they went up to 8 million. So that would be $1 million and another 3 million. So maybe $4 million more than normal. Again, we didn't know if that was all gift certificate activity, or frankly, if we were giving up regular sales to gift certificate activity. The big change in sales that is reflected in the results for that week, that very first week of the case, really didn't occur until Monday. And I would not have known the actual sales number for that until Tuesday morning. And we did $13 million in gross sales on Monday.
Okay. So,
and then it continued forward at that rate that week. And so that's why you see that big variance in that week.
Okay. So if the dip hearing had been held one day later, we would have had a lot more information than what we actually had, right?
Not necessarily, because it depends on the reconciliation of the cash. If you're going to the cash component, again, we had an extended negotiation with the DIP lenders about the restrictions on gift certificates in the budget. And we had proposed $40 million, $20 million per week for the first 2 weeks. And potentially there was a budget we prepared at one point that had $20 million a week for 4 weeks. We ultimately settled on, in the court process, $10 million for each of those 2 weeks being cashed in the form of gift certificates in the budget. The actual for those 2 weeks was $43 million.
Okay.
Which would directly reduce cash receipts dollar for dollar. And we didn't know at that time what that level of activity was. We knew it was high in the stores, anecdotally from the store managers calling in and saying, we're getting inundated with gift certificates. Are we supposed to accept them or not?
Okay. So going back to the ending cash, okay, you have in your original budget $10 million for each of those periods. And then going forward in the second budget, you have 93, 69, 34, 36, 34, 24, and then it goes on from there. Did I read that correctly?
I'm sorry, what are you referring to?
The ending cash in Exhibit 2 versus Exhibit 4. Exhibit 2 has ending cash of $10 million across the board. The ending cash in the final DIP budget shows significantly higher numbers for the first 6 or 7 weeks, correct? 6 weeks.
Yes, because of the surge in sales in those first couple of weeks, we had a discussion with the DIP lenders because we were concerned about what would happen after. Remember, we entered these cases substantially out of stock, with only 65% approximately of the normal inventory levels in the stores. And we were afraid with those high sales that we would run out of inventory and that sales would tank, which, as you can see, is exactly what happened starting in week 3 and then continuing forward.
Okay. But
so rather than pulling out money that they would have trouble procedurally giving back to us under the terms of the lending agreements, they left the cash in there so that we could cover operations and that they didn't oversweep cash at the beginning of the case.
Okay. So, but the ending cash was projected to be in every period $10 million in the first budget, and it's tens of millions of dollars more than that in the budget you filed before the second date. That's what the numbers say, right? No commentary. That's what the numbers say.
That is what the numbers say.
Thank you. Okay. And then there's something else in both of these that I want to draw the court's attention to. Okay. Let's look at the ABL balance numbers in the first one. There's a 82 with parentheses, a 36 with parentheses, and a 7 with parentheses in the first budget. What does that refer to?
That's the amount outstanding on the ABL.
Okay, so why does the ABL in your first budget go from 82 to 36 in those two periods?
That was the agreement that to the extent that there was cash available, that we would be paying down the ABL during that period of time. The ABL sits in front of the FILO, and we were selling off their collateral. At all periods of time, we were actually in the lending formula overdrafted. We entered this case with a negative $89 million overdraft.
I'm going to ask you to answer the questions I've asked. Council can ask you questions on redirect or on direct. So the difference in that ABL pay down is, am I correct, is the net cash flow is 45 and 10 is the ending cash balance. Is the delta, it says 36, maybe that's rounding. Is that the cash sweep that you're talking about to pay down the ABL?
Yes, I believe so.
Okay. Now, if we go to the second budget, there's a pay down of $50 million to the ABL in the second week, correct?
That's correct.
Okay. And then the third week, 28 million, and then the ABL is completely paid off, right?
That's correct.
Okay. So
except for the LCs.
Except for the LCs. Thank you. Okay. Now, am I correct, based on all the numbers that you actually generated, had you not taken the dip, the ABL still would have been paid off. It just might have taken a little longer.
Again, object to the incomplete hypothetical. If it's just a math exercise, that's all it is, but she's testified that there are a lot of other things that went into it.
I guess, just can you restate?
Sure. Does the actual performance reflect, if you hadn't had the dip, that you would have been able to repay the ABL, albeit maybe longer for, over a longer period of time?
You can, if you know the answer to that, you can answer it.
Yeah, under this hypothetical, that would be correct.
Okay, thank you. Now, let's talk about rent. Now,
she could have said, I don't know.
Going back to Exhibit 2, you projected the payment of rent of $26 million in the first week of the case. Do you see that?
Judge even gave her an out.
Okay.
Yes, I do.
Thank you. Okay, and if you go to the second budget, there's a number of $23 million that's paid in the second week of the case. Do you see that?
Yes, I do.
Okay, and the deferral of those payments from week 1 to week 2 did not cause the company immediate or irreparable harm, did it?
The rent is due on the first of the month. In order for the landlords to receive the rent on May 1, which was Monday of week 2, it needed to be paid and released on Friday. I am very conscious of the rules in this court, which require me to pay things on time. So if you want to assert no irreparable harm, did any landlord haul us into court jumping up and down and screaming that they were not paid on time? No, they did not. But do I intend to pay things on time? And were they budgeted to be paid on time? They were. And they were not because our bank accounts weren't open.
Well, that's not 100% true, is it, Ms. Etlin? You made a stub rent payment during that week, didn't you?
We made some wires at the very last second to a few landlords that we could get out the door. But we have 800 stores. Those are a very complex set of ACH transactions, and the bank account necessary to do that was not open. I got out what I could via wire with people running around with their hair on fire on Friday.
And in fact, you were behind on paying rent going into the Chapter 11 case, were you not?
Yes, we were.
Okay. And so
We were called in default, and we were not allowed to pay that by our lenders until we filed.
okay. But the fact that you deferred the rent, paying the rent the day it was due, as opposed to the Friday before, did not cause you immediate and irreparable harm, did it?
No, it did not.
Okay. Now let's go back to the first DIP budget. There's a line here called non-merch vendor expense. And that's $14 million reflected here. Do you see that?
Yes.
Okay. Now, if we go to the actual performance for that period, you only paid $1 million of those expenses, correct?
It's not entirely accurate. In our rush to put the original DIP budget together, we included the amounts redeemed, estimated to be redeemed for gift certificates into that line rather than in the cash receipts line. And in the actuals, it's reflected as net against the cash receipts line. So the cash receipts have been appropriately reduced for the amount of gift certificates actually redeemed.
Okay, so that number was adjusted to another line item on this report, and these robust results are net of the expenses that you're identifying, these non-merchant vendor expenses.
That's correct.
Thank you.
Net of a much larger number. It was more than $20 million.
Okay, so you have in the first budget $83 million of non-merchandise expense in the first 5 weeks, and then you have $71 million for the entire 13-week period in BHG Exhibit 4, correct?
That's correct.
Okay, and is it your testimony that the delta between those two numbers is only the was it the gift cards or the coupons, whatever you just testified to?
No, there were other differences. Again, it's a $5 billion company in a fairly substantial state of disarray. We did our best based upon the run rate that we had experienced pre-petition to estimate post-petition. We also had to add in, that line contains also charges for things like freight and DC operations for our 3PLs. And we had to undertake to take almost $200 million out of our distribution centers and shift it into the stores during that period of time. So we needed to estimate what those charges were going to be. The ultimate run rate turned out to be much more elongated than we had forecast and less than we had forecast.
Okay, let's talk about the payroll expense once again, so we have a clear record about this. Exhibit 2 shows payroll of $42 million in the first week, and Exhibit 4 shows $17 million of payroll in the first week, correct?
That's correct.
Okay, and am I correct that the delta between those two numbers are the reserves we've been talking about, the Warren Reserve, and I think the Severance Priority Claim Reserve?
That's most of it. And then there's another piece that was a closing bonus that was due to managers of stores. It hadn't been fully processed as of week 1. We thought it would be, and it was ultimately paid in week 2.
Okay. Now, The reserve is an account that you set up to pay these liabilities at some future point in time, correct?
If you're referring to the Warren and the priority claims reserves, that's correct.
Yes. Okay. And those payments are made when you give notice to the employees or actually fire them, correct?
It's paid to the employees as they exit the business. That's correct.
Okay. And has that started happening?
So yes,
Okay. But those reserves were not, strike that. The reserves are still in the reserve accounts today, right? Isn't that one of the disputes we're having, that's being held up pending this dispute?
the reserves still are sitting in those accounts pending the departure. The major departure we'll have from the business of people who are eligible for these New Jersey Warren payments will be at the end of July, because it'll be the major downsize in the corporate staff and the closure of the New Jersey stores. And so, but yes, they're still there, and it was important to be able to show our employees.
Okay.
I'm not going to go any further because you're going to tell me not to answer that you haven't asked.
Please.
So-
I'm sure my colleague will ask you all these questions. So now, isn't it the case?
Yes, he's taking notes.
Isn't it the case that even Sixth Street asked the company to send out warn notices before the filing to avoid a pre-petition expense for this?
Hold 1 second, please. That is, that whether Sixth Street asked Ms. Etlin to send out Warren Act notices is hearsay, but, you know.
Well, I'll withdraw the question and go at it in a different direction. Ms. Etlin, did the company consider filing or sending out warn notices before the Chapter 11 case?
There was an extensive discussion about when or if we should provide warn notices to employees. As you know, Mr. Glenn, in our own experience together, it is very controversial, and management is highly opposed to giving warn notices to employees until the very last moment, specifically because of the disruption it causes in the flow of the business. And so, yes, it absolutely was discussed, and the company was highly opposed.
And creditors had asked you or the company to do that, and the company decided not to anyway, right?
Same objection, but.
I think this goes to their state of mind. It's not for the truth of the matter asserted. It doesn't matter whether it's true. If they heard it and disregarded it, that's independently relevant.
Well, I'm not sure that it's actually relevant to this motion.
Well, just repeat your question again.
I'll withdraw it. Okay, but the bottom line is, okay, you created this reserve. You asked the judge to have them funded in week 1. You didn't fund it in week 2, and the payments actually won't go out the door, the majority of them, until July. Isn't that a fair summary of what you've testified to?
No.
Okay, when are those payments actually going to be made to the employees?
Well, let's start with the first part of your hypothetical, Mr. Glenn.
Sure.
So the money came in week 1. It was accounted for and segregated in our accounts, but it wasn't put into the specifically designated bank account because we couldn't get our lender to open that bank account. As a matter of fact, technically that bank account wasn't open for 4 weeks. We ultimately repurposed a different bank account to hold this stuff. It was incredibly important that I be able to stand up in front of all of our employees who were absolutely convinced that they were not going to be paid for this in this case. They did not believe management. They were very concerned. And I have been asked individually at least 50 times by employees, is my money safe? Is my money in a reserve? So it was very important that I have it funded in week 1 and set aside. So it is, as to the second part of your question, it is absolutely true. The majority of it is not being paid until the majority of our employees depart at the end of July.
Okay. So,
and it will sit segregated until that day so that they know it's there for them and that they are assured in a process that they find very scary that they will be able to be paid.
Okay. I'm going to try to ask this question without raising confidentiality issues, but please feel free to stand up and correct me if I'm plowing over ground that shouldn't be plowed. So unencumbered collateral. Okay. The unencumbered collateral in this case, as you understand it, we've talked about it, includes at least the lease designation rights and litigation rights. Again, I'm asking you as a layperson.
Yeah. They're both rising. And it's
So a person, Your Honor, to the extent that it's relevant, that's on the objection of the city call.
Same objection.
As a layperson.
Yeah, yes, it's my understanding as a layperson that you cannot grant a security interest in lease designation rights outside of bankruptcy. That's not normally done as part of a lending environment.
Okay. Now, the WARN Act and priority reserve amounts in this budget are approximately $23 million. Am I correct?
I think it's 21, but yes, with the Warren piece, and there were other reserves on top of that, the priority claims reserve, and then of course the professional fee reserve.
Okay. For the WARN Act reserve though?
21.
Okay. And isn't it the case that you valued the lease designation proceeds well in excess? I won't give the exact number, I won't give a range, but isn't it the case that you forecasted the lease designation auction to produce well in excess of that? And in fact, it has produced well in excess of that number. Well in excess of that number.
Yes.
So there were other cash proceeds that you knew or believed would be available to pay those WARN Act liabilities, but you thought it was important that the employees knew that they had that upfront in a reserve account. Isn't that what we're talking about now?
Your Honor, I'm sorry, I object. I object to the other proceeds.
other proceeds.
Okay, I'll rephrase the question. There was value available to pay that reserve that's so important to the company to fund, but you wanted it funded on day one versus when the lease designation proceeds came in, correct?
I'm not sure I would draw the conclusion that there was value available to pay those things in a highly complex case where there are multiple moving parts. I couldn't guarantee that. And I certainly wasn't going to hang my hat on that. So the first part of your question, the answer is no. The second part, the answer is absolutely. I was very clear with all the lenders that we needed that reserve funded upfront so that we could retain our employees in order to maximize value in these cases.
Okay. Your Honor, can I have a 5-minute break so I can just wrap this up? I think I'm close to the end. I want to make sure I cover everything I need to cover.
Sure. And then let me just ask this then. Will other counsel, I'm not limiting it, it could be, the debtor, it could be the lender, it could be the creditors committee. Would you be ready then to proceed immediately after, or would you still need another break?
I think I'd probably be ready to proceed immediately after. It kind of depends on what he goes into and how long he goes after this break, but I could try to do that. Yes, Your Honor.
Well, I'm just asking because I just hate to break for 5 minutes now and then then have 10 minutes of testimony and then break again. But if you need it, then I'm going to give it to you. I just was trying to get a handle.
No, I think we should be good. So
okay.
Thank you.
If it's helpful, I don't anticipate that.
Oh.
So, I mean, we'll wait and see what happens.
Okay.
Okay.
All right. That
Your
is
Your Honor.
Yes.
This is Marshall Huebner of Davis Polk. Good afternoon. I represent the ABL lenders who you heard a very little bit about. I may have 9 questions for Ms. Etlin, and I will be ready.
Okay, that's fine.
Be about 5 minutes.
Yeah.
Thank you.
Okay. Well, just let us know when you're back. Okay. Thank you.
Thank you.
Thank you.
This is pretty funny. I'm having to adjust the volume. I hope it's not too bad because the guys over here are super quiet. Judge sometimes is super quiet. Etlin is pretty loud, and then Glenn is pretty loud. I don't know if it's all right. Spy ripping up here, maybe making head and shoulders. We did hit yesterday's high here, so I kind of think this was the handle on this inverted cup. But we could have just done a cup here. No handle. So this is a very crucial spot actually on the SPY. We break here, or this is resistance. Been trading it a little bit. Had some trades in here for this long. Got chopped out in here a bit. It opened a short back up here near the high, which I'll close out if we break through that. You guys are hilarious. I have to stay muted. I'm just laughing in chat. Cameron, thanks so much for helping and answering questions and all the insight. Really appreciate it. The judge and media. No, they're taking a 5-minute recess. Did you do these A's? There's the honorable judge. His name? Pescadelli or something? He's just waiting for his calls to go to the moon. When awesome. Well done, Ace. Barbecue's kind of just hung out around VWAP there. Like low volume. It's very strong today though, 2.5% up. So kind of respecting this trend that we set yesterday. It also lines up actually with a couple points down here. So we'll see what holds, but breaking this 35.70 definitely going to be a resistance. This is the OTC high again. So just have to wait and see. But melting up. Might have a, I don't know, go either way. Like to see that broken. The downside. See what becomes support. Not sure if this trend line will hold. If this trend line holds, I mean, you can see we're coming to a wedge, so it's going to break out one way or the other. They just want to make sure no one would walk and business could continue. Yep. No, that's... Yeah, he's trying to get down to every last little penny. Because bondholders want to make sure there wasn't any extra money for them. I think that's kind of the broad overview. Ah, Germany versus England. Multiple MAs. Go to settings. So hit moving average and then type in whatever ones you want. Then go to style. You have to check mark them. Which ones you want to go up. I don't know if you're still wondering, Tasty. Excuse me. My fibs? These lines aren't actually fibs that I have here. It's my own fib. I just use this fib retracement. Usually fib retracement or fib extension. So we'll hear when they're back. Audio's still on. Yeah, I know, it was kind of confusing the first time for me too. I'm like, what? Make much sense. Alright, SPY's coming up. Maybe retest this high. And to clarify, this full trial that they're going through right now, I don't think really has. I mean, we might get some insight, but it really has nothing to do with us shareholders. Like, we're so far down the totem pole that he's not. Yeah, it's not like. I mean, yeah, we might hear, oh, they made, we might get some insight into what's going on with the company, but it's not pertaining to if we're gonna, if our share price is going to go up, or if we're going to get shares of a new company that are, whatever, we're going to make money on this investment. So it's just kind of entertaining, and I'm interested in the outcome. Oh, I wanted to keep watching the Powell. I paused it. I could go back, but I think it's over now, so I can't finish it. Well, barbecue's coming down there a little bit. 29.89, like 30 cents. One of the supports from yesterday. Well, his topping wicks isn't bullish. Yeah, 30 cents is kind of a big level, actually. Not imperative that we hold above that, but a nice support. Yeah, if there's not much good on the baby hearing, I don't know how there'd be much hope left. I don't think we're gonna hear that today, though. I don't think we'll hear the results of that for, I don't know, a few days maybe. I don't know how long do we have. There's a little bounce on barbecue. Back up to VWAP. If it turns it up for me. Loud enough. You'll probably be able to tell the outcome of the baby hearing, because there'll be probably some price action from it for someone that knows. Maybe not, but us individuals, retails are usually last to hear. That's why just looking at the charts and the TA is usually the best. So Joby got kind of the go-ahead from the FAA. That's why it's ripping. Let's see, what did they say? Joby marks production launch, receives permit to fly first aircraft built on production line. That's pretty big. Joby receives FAA nod to begin flight testing, electric air taxi. GME is up 2.5 today. A bit of a bounce with the SPY. Root's up 16%. Guess I could have held that another day. Internet up 12.25. It's come back up to VWAP also. Yes, Tesla. Tesla's getting its inverted handle. I just watched a couple clips of it. I wasn't like watching. I'm sure that was hilarious though. Captain America underwear, you know it. Yeah, I think the auction is set for today, but I just don't think it's on a. I don't think it's publicized. The shield on his bum. This is up 3%. Leaf SPY breaks this high. I mean, we're listening for it. You'll hear it. Yeah, I mean, the highlights I saw of it were pretty hilarious. Retesting the high. Thank you guys for your likes. There's a new high on the day for SPY. It's 12:08. We're at 39 likes. Well done. We just broke yesterday's high there. 437.27. What I was saying yesterday, I thought we maybe could climb to for the full handle. Or right around there. So maybe look out for head and shoulders here. We won't be calling the reversal yet, as we've just been in bull flag after bull flag. But bull flag is the beginning of formation of head and shoulders too. So this could be our shoulder. This could be a shoulder. And a head. And this could still be a cup and handle here on the hourly. So that's why this keeps going, and we come back down and retest that for support, that breakout, then yeah, I think we could have pretty big upside past this 437. Maybe even a gap fill to that 438. And then this inverse cup and handle would be invalidated. We're just being a chop. Probably retesting the highs again. So big level here. Buy is ripping there. Up 0.25%. Judge is like, you want 5? I'm gonna take 10. You're taking all my time, Gwen. Dish is up 2.5, continuing to bounce off of that $6 area. Good to see. Iron Tea up 12.25. Dave's flat. Peloton's down 2.8. Here's see if it bounces off this support it's built here. Like 650 and 7.29. Trupanion down 1.7. A nice support here though. Still rallying. GME getting some steam from it. It's up 3.14. Root. I am Root is up 17%. More news on that? So. Tesla 258. 3.25. Also, he's cleansed that back down. There's a little rejection on SPY maybe.
Examination of Ms. Etlin.
I don't believe I offered Exhibit 4 into evidence, so I'm doing that now.
No objection. Your Honor.
Thank you. Ms. Etlin, if you could please turn to Exhibit 5 in your binder.
I have it.
Okay, so for the record, Exhibit 5 is a document summarizing the company's disbursements and collections from the week of April 24th to April 28th, correct?
Yes.
Okay, I offer Exhibit 5 into evidence.
No objection.
Okay, so, thank you. So this document reflects the cash that the company had as of the close of business on each of these days, correct?
Yes.
Okay, and the cash balance on April 24th, which is the day of the first dip hearing, at least as of the end of the day, was $30 million rather than the $3 million starting number that you were talking about earlier, correct?
But that included $12 million in Canada, which we obviously don't have access to because Canada was in its own corresponding case. So the actual correct number at the end of Monday for the US will be just under $18 million.
Fair enough. Okay, and that $18 million is your testimony is that that $18 million was not known or knowable when you took the stand at the first dip hearing in this case?
That's correct.
Okay. Did you have any projection at all about the sales that you would generate for that day before you took the stand? Anything?
So the projection was as reflected in our budget, which we were anticipating since the GOB wasn't set to start until later in the week. I think we were projecting maybe $6 or $7 million that day.
Okay. And
in sales, not in collections.
Okay. So we see here 29 million on April 24th, going up to approximately 98 million on April 28th, correct? Those are the cash balances for those days.
Inclusive of Canada, again, which we have no access to.
And the dip.
So, yes.
And the dip,
so
correct?
The US is 88.
Okay. So you were able to pay all of the disbursements reflected here. We subtract the dip and we subtract the Canadian proceeds, and you have tens of millions of dollars in cash, correct?
That is correct.
Okay, now let's go back.
At the end of the week.
Okay, let's go back to Exhibit 2, which is the first day dip budget. Okay, now we've talked about the issue of immediate and irreparable harm and the deferral of rent and the WARN Act reserve into week 2. I'd like you to focus on week 2. So we have here $45 million of net cash flow and $10 million of ending cash, and you had repaid $36 million of the ABL, correct?
That was the forecast, yes.
Okay. So irrespective of payment of the ABL, we take that away. How much cash would the company have had at the end of week 2? We take the, if we took out the 2 payments or any payments of the ABL before the end of week 2, how much cash would the company have had under this budget?
You added it back to the 10, we would have had 46 million.
Okay. So,
which was approximately the amount of the net cash flow for that week.
Okay.
In week 2.
Okay. And in week 2, were the collections higher than expected?
Yes, they were.
Okay. So based on actual results, am I correct? Without the dip, you would have had enough cash to fund your WARN Act reserve and pay the rent, but you couldn't have paid down the ABL that week with no dip, right?
I think that's the way the math works, yes.
Thank you. Now, let's go to your first day affidavit, and I think we have solve the mystery of where this page is. It says value maximizing liquidation on page 32. If the court, there's two documents in one, and I think that's where even I was confused. If you got to start at the beginning and go to page 32, you'll see paragraph 81, and there's a legend there that says value maximizing liquidation. Are you there, Ms. Etlin?
Yes.
Okay. Now, it says here that the debtors estimate that the aggregate net sale proceeds from all sales, capital S, will be approximately $718 million. Where did you get that number from?
That's the estimated net proceeds from the GOB sales as modeled by Hilco and agreed to by us and incorporated into our forecast. However, it does not include, and net can be confusing here. So just if I could take a moment.
Sure. Actually, I was going to ask you that.
So there's still $474 million of actual corporate costs with that same period of time. And you can see that in Exhibit 4.
Okay. So this projects not a amount that covers all of your debt. It shows a deficiency claim. Is that what you're testifying to?
No, I'm not saying that there's a deficiency claim. I'm saying that this is just the GOB proceeds. It doesn't include the proceeds from all the other assets that we would liquidate, all the other litigation causes of action, all those other miscellaneous assets that a big company like this has. But I'm pointing out that it is net proceeds, or NOLV, net orderly liquidation value, as defined in this, which is the net of the direct operating cost of the stores, but not the operating costs of the company as a whole. And there's another $474 million of expenses that you see in Exhibit 4 associated with that. However, this is only this asset. It's not the sale of the IP assets, the leases, other kinds of things.
So based on your first day declaration and the other submissions to which you have personal knowledge for the first day, did you disclose to the creditors whether there would be sufficient coverage in the pre-petition collateral to pay the ABL lenders and the FILO lenders?
It's the same. I had two issues. On the first, calls for a conclusion. What was the pre-petition collateral? Second question. It's not going to be
Well, I'll explain the relevance, Your Honor. We're going to, after Ms. Etlin steps down, we're going to provide the court with some documents, if counsel will indulge me, about the timing of the request for NDA, the fact it's been levied against us that we were hired, I think, 3 hours before the first day hearing, and therefore we were there. We should have known everything, that we could have objected. And my point is that part of the reason we're here on reconsideration is not only that there have been facts that have been elicited since then, but the effect of this on the first day, I think, is a highly relevant issue in terms of whether Your Honor would consider vacating it. So I think this is a question of what was disclosed. If she knows the answer, she can disclose it, but I do think it is relevant.
And the question, as I remember it, was whether the pre-petition collateral was sufficient to pay all the lenders.
Was there any disclosure of whether the pre-petition collateral, the GOB sales, other collateral as you understood it as a layperson, would or would not be sufficient to repay the ABL loan and the FILO loan in connection with the first day pleadings?
I guess I'm just wondering, you see, was there any disclosure? Is that kind of presumes that someone asked about it, or that there was
this is a notice issue. This is notice, whether they gave notice of the effect of this roll up on day one. Counsel represented in court that the lenders already had substantially all of the pre-petition, all the collateral of the company. They did disclose at some other point that lease designation and litigation was not part of that. I think that was in the papers. My question is, did they tell their creditor body what they projected the deficit, if any, in the FILO lenders and the ABL lenders recoveries would be that would grab that other collateral.
My objection is an objection to facts not in evidence that there even was such a number, right? And that it would even be determinable as of the first day of the cases to exactly what the proceeds are going to be over the entire course of the case. I think it's the same issue we've already talked about. And so I think it's an unfair question to ask for whether something was disclosed when we haven't established what that was.
That's a question for his cross-examination. This is a question of whether there was disclosure. He's right. That's not in evidence yet. I'm trying to get it in evidence whether or not there was, because I don't think there was, and I don't think that's a controversial point at this point.
But that's what, I guess that's, I think what's part of the objection is, and what I'm having a little trouble with myself is that there's assumptions built in there that there was knowledge of that number and that it required to be disclosed. And I'm not sure that either of those things has been established.
I don't know that they were required to disclose it. I'm asking whether they did disclose it. I will ask the foundational question.
How can you disclose something if you don't know?
We haven't established whether she knows or not. So why don't I ask that question?
Okay, well, that you weren't, I don't think you were at that point. You were at whether it was disclosed.
I'll withdraw it and
which
start over.
Which I
Okay.
I am sustaining the objection.
Thank you. Did you or anyone else on behalf of the company analyze the prospective recoveries of the ABL and FILO lenders when the case was filed?
I'll just object to foundation as to whether she knows whether anybody else in the company did something or not. As to her personally.
Whether she knows, that's the question.
At the time of the filing,
Yes.
before we set up any sale process, before we'd gotten approval from the court to sell assets, before any of that?
Well, you have a disclosure here of $718 million in GOV sales. My question is, did you build off of that and assess what the creditor recoveries of the secured lenders was going to be? A range, a number, anything, to your knowledge?
No.
Okay, so when the company went into the bankruptcy, the Chapter 11, it did not actually know what the effect of that roll-up would be on general unsecured creditors.
You're asking me for a legal conclusion?
No, I'm asking for a financial conclusion.
But they were a secured creditor pre-petition.
But they got the roll-up, and I'm asking you, did the company analyze what the effect of the roll-up would be on unsecured creditors that was approved on the first day of this case? Was there any analysis done?
I'm not sure whether there was or there wasn't. It wasn't our focus.
Okay, let's wrap this up. So you've already paid off the ABL lenders in full, correct?
As of this date, yes.
Okay, and that occurred weeks ago, correct?
Yes.
Okay, and have you now paid off the DIP loan in full?
No.
Okay, when do you project repayment of the DIP?
Mr.
Sure. We're talking about the cost of the roll-up that the court approved and whether there's been sufficient cash to repay the DIP over a very accelerated period of time. We paid $200 million for a $40 million facility. What I would like to know is how long is it going to take, or has it taken, to pay that off in full out of the company's cash flows?
I'll let her answer the question.
Thank you.
So, the answer to your question with regard to the DIP is I don't know, because certain asset proceeds are being applied to certain aspects of the FILO loans, and certain other cash proceeds are being applied to the DIP. And that's determined by the FILO lenders themselves, as opposed to us.
Okay. Do you have any approximation of what the outstanding DIP balance is today?
I'm sorry, I don't. I didn't check it before I walked into court.
Okay. Now, we've agreed to keep the potential ranges of creditor recoveries at the end of the day confidential. But isn't it the case that we spoke last Saturday, you and I, along with other people from Kirkland and my office?
Yes, we did.
Okay.
You ruined my Saturday afternoon. Thank you very much.
I'm sorry. Well, okay, we filed the motion on a Sunday. Isn't it the case that during that conversation, the lower end of the ranges were discussed, and it was disclosed that at the lower end of that range, the general unsecured creditors, even with the committee sharing formula, could recover nothing in this case?
You were asking questions about what we had forecast to have turned to cash during the case. And the lower end of the range of what we would actually realize in cash potentially during the case, as opposed to during the liquidating trust period, the lower end of that did show a deficiency. But it didn't include assets that have a long tail associated with them that will be received during the liquidating trust period. And again, it was the low end of the range.
Okay, and isn't it the case that Sixth Street could recover in the tens of millions, if not in the hundreds of millions of dollars, in respect of its rolled up claim?
I object to the form question. Also, I think both those things are correct. So can you rephrase the question? Or?
Sure. You've testified as to lower end recoveries to creditors based on the ultimate disposition in the sale process. I'm asking you, if that happens, isn't it the case for the lease designation and the litigation proceeds that Sixth Street will recover in the tens of millions of dollars from the unencumbered collateral, which benefits from the roll-up?
I think that was the same question.
Well, we've talked about projections of recoveries. I'm asking you the question, do you have personal knowledge of what the recoveries are going to be for the lease designation and the litigation? Do you have those projections?
I have some preliminary numbers from the lease designation recoveries. All those transactions have not closed, but we have preliminary auction results that have not been disclosed to the public yet. So I believe you're aware of what they are.
I am. And I think what I would propose to do is submit some kind of a confidential submission about what those are, so we don't get into that today. That concludes my questioning. Thank you very much.
What?
Here. Are we ready to proceed with
Gonna end it like that?
direct examination in a way?
Yes, Your Honor.
Just want to make sure that we have moved into evidence all of the 5 exhibits that we've relied on up until now, which were 1, 2, 3, 4, and 5. I just want to make sure the record is clear.
My luggage combination. Yeah, I think we believe all of those.
Yes.
We didn't object to any, and I believe they were all admitted.
I believe they're all in. I know they're all.
Oh, yes. Don't interrupt you in the middle. It's okay. Thanks.
Your Honor, may I approach the witness with a binder?
Surely.
Only if you take this one back. There isn't room for more than one up here.
And Your Honor, I believe we've provided a copy of this same binder to the court before we began. Terrific.
Thank you.
So thank you, Your Honor. Rush Howell from Kirkland and Ellis on behalf of the debtors. I suggest proceeding by me just going ahead and doing this direct exam, it's still in the move-in's case, but I just think it's more efficient than closing their case and opening, and then we call Ms. Etlin again.
I agree
So-
with that as well.
No objection.
No objection.
So thank you. And good afternoon, Ms. Etlin. I don't have I didn't have a clever pun ready, like, are you ready to roll, as Mr. Glenn did, but so I'll just say, I think there's a definite need for your testimony. So thank you for being here for my pun.
Mr. Howell, you're doing very well on 3 hours of sleep.
Yes, thank you. So Ms. Etlin, before I turn to just a little bit of background, and Your Honor, I'll do my best not to try too much on ground that we've already covered, but I want to ask you an important question, which is, as you sit here today, Ms. Etlin, do you still believe that entering into the dip was in the company's best interest?
Absolutely.
Now, I want to talk a little bit about your background. I think Mr. Glenn cut through some of it, so I'll just ask a few questions. How long have you been working in the turnaround and restructuring space?
More than 35 years.
And how many
I
total?
was 12 when I started, just for the record.
I remember that. It was the Doogie Howser of turnaround professional. Around how many total engagements have you worked on in that space?
Oh, probably 60 or 70, maybe less. You know, when I do a company side assignment, it's generally full time.
And what's your role with the debtors here?
I am the CRO and CFO.
You served in similar roles before this case?
I absolutely have.
And what experience, if any, did you have with retail companies prior to your work with the debtors?
I specialize in retail companies. Approximately 2/3 of my work over the past 35 years has been on retail turnarounds and restructurings.
And have you ever served as CRO, CFO, or in a similar function for a retail turnaround or a retail bankruptcy?
Yes, and CEO.
Are you a member of any organizations in the field of turnaround work?
Yes, the TMA, the ABI, the AIRA. I work in Sol. I think that's it. It's an alphabet soup.
And have you received any accolades for your work in the turnaround field?
Yes, I have. I'm admitted to the American College Bankruptcy and also III, which are both invitation only honorary organizations. I received 3 Turnaround of the Year awards from the TMA for 3 different successful turnarounds, 2 of them in the retail field and 1 of them in the occasional not retail case. Let's see what else. I was named Woman of the Year in Restructuring a number of years ago. I hold CTP and CRA designation, CIRA designations.
Thank you. So let's turn to your work with the debtors. You testified that you began work with Bed Bath & Beyond around December of last year. Is that right?
That's correct.
And I know you covered this a bit, so I'll just ask you at a high level to give the court a picture of the debtor's financial situation during the time period that you worked there up until the filing of the bankruptcy.
Okay. I'm going to try to keep my adjectives to a minimum because the Kirkland team at least have heard all of them to date. But this was probably the most difficult retail case that I have engaged in that I was presented with a $5 billion retail company that was out of inventory and out of cash. They had missed their sales forecast for the Christmas holiday period by 40%, 40. They were down on comp store sales. And in January and February and March, we were down 60+% in sales. And what that physically means is that you're not even covering the costs of running the stores, much less the corporate overhead of the business. The company was losing, from a cash perspective, approximately $100 million a month. There was no money to buy replacement inventory. And so because we had an ABL facility, each day when we sold off inventory and couldn't afford to replace it, our borrowing base went down. And so part of the money that we collected had to go to pay down the lenders because their borrowing base was going down. It was terrible. We were in default the first time of multiple times of default across 4 months. in the January timeframe. And at that time, prior to the first equity deal being done, we had overdrafted the company by approximately $198 million. That was out of formula with the lenders. It was so 198 million. It was right before the equity money came in February. So we were in a very, very deep, difficult hole. We did three different equity tranche transactions. One, the publicly announced one with Hudson Bay, and then the at the market deal when the stock price fell to the point that Hudson Bay was no longer willing to participate. We brought $350 million approximately money in equity into the business. But of course, given the cash burn, that wasn't enough to sustain the company. During that entire period of time, management and we and our investment bankers were trying to find somebody to actually buy the business or save the business without a bankruptcy filing.
And you talked about being in cash dominion a bit during the first exam. Was the company in that position at multiple times in 2023?
Continually until the filing. One of the agreements of the filing was that we would no longer be in cash dominion. We would no longer have our cash swept daily.
And I want to move, you talked about $198 million over advanced in sometime in around February. I want to move forward to right before the filing. Did the debtors need a cash infusion at any point immediately prior to filing?
Oh, we did. And by the way, I want to put that in context. In all the years that I've been doing this work, I've never had a company be more than about $20 million overdrafted. So 198 million was a record for me. We hit an $89 million overdraft the week before we filed, because we agreed with the lenders that they would advance us an additional 54 million in order for us to file these cases in an orderly fashion.
And when did that additional $54 million come in?
The week before the filing. And so when we measured it, we measure our borrowing based on that Saturday. So the Saturday night before we filed, we were at negative 89. So we were approaching, a fairly large number once again.
And did that context of the previous 4 months have any influence on your views about the company's cash position and need for a dip heading into bankruptcy?
Absolutely. And it not only had an impact on mine, the company's employees was very well known inside the business that the business was in trouble. A number of management people had left. People were bailing left and right. They had no confidence in management and were very, very concerned that not only would they lose their jobs, but they wouldn't get any notice and they wouldn't get paid. So it was a very, very difficult environment leading into that period.
So did you view there as a need for that $54 million cash advance in the week immediately preceding filing for bankruptcy?
Oh, absolutely. And we needed the money that I negotiated. Again, I've testified that I had asked for a much bigger dip amount because I really wanted to be able to show everybody that we had more than adequate cash to operate, since everybody had a little bit of PTSD going on for the last 6, 7, 8 months.
I just want to briefly turn in talking about the $54 million advance. I want to briefly turn to Exhibit 9 in our binder. And specifically page 10, footnote 5. And let me ask you first, Ms. Etlin, or I'll tell you, this is the final dip order. You've seen this document before.
Yes, I have. It's quite voluminous.
And I'll offer Exhibit 9 into evidence. It's, I think, docket 729, final dip order.
No objection.
In evidence.
Thank you, Your Honor. So if we look at, we're just going to look at one sentence. So sorry to do all this to do that, but bottom of page 10, footnote 5 talks about emergency rescue loan. Do you understand that to be the $54 million we've been talking about?
Yes. It is.
It says the emergency rescue loan reduced the debtor's need for post-petition financing on a dollar for dollar basis. Do you see that?
Yes.
And do you agree with that statement?
Yes.
Okay, you can put that away for now. You talked a bit about this, so I'll just ask a general question because I think you've covered it some, but you're familiar with certain reserves set up by the company that were funded via cash coming in from the DIP lenders, both via the 40 million and I guess the 54 in front.
Yes.
And could you describe those reserves for the court?
Certainly. There are two that were intended to be funded very much upfront, although one ended up being negotiated to be funded a little bit over time. And then there's also the professional fee carve out and reserve that gets funded as the fees are incurred. The other two are loosely referred to as the Warren Reserve, and that is the reserve for the New Jersey Act. And I apologize, Your Honor, I don't know the exact name. We call it New Jersey Warren. It's the 90-day working notice period plus mandatory severance, and also PTO where it's required to be paid. And so it was $21 million. That's the Warren Reserve. In addition, we had an additional amount that was set aside to pay priority claims. I think that was approximately $8 million.
And you were at the first day hearing, correct?
Yes, I was.
And at the first day hearing, Mr. Sussberg discussed a dual track sales process so that we could also attempt to have a going concern. Do you recall that?
I do.
Okay. And in your experience, would a going concern sale have been possible without an administrative Warren Reserve?
I don't believe so. Again, I think I previously testified today how many employees actually have asked me both individually and in groups about whether or not they were secure on that issue.
And is there still an effort for a going concern sale going on today?
We have an auction underway in New York that I'm unfortunately missing for the baby business, and there may be a going concern sale for that. We've already determined that for Bed Bath & Beyond, there will not be one, and that sale to Overstock closed this morning.
Okay, so I now want to move forward to talking about these DIP budgets that came up quite a bit in your examination by Mr. Glenn. At the time of the filing, you submitted a declaration related to the DIP financing in addition to your first day declaration that's already been admitted to evidence. You recall that?
Yes.
Okay. Do you believe that declaration was accurate at the time that you filed it?
Absolutely.
In that declaration, did you discuss the debtor's need for debtor in possession financing?
I did.
In assessing the debtor's need for DIP financing, did you work on putting together a DIP budget?
Yes, I did.
Is that an exercise that you've done before this case?
Just a few times.
Around how many times in your career have you worked on putting together a DIP budget?
60, 70 times.
And some of those are for retail companies, right? In fact, the majority are for retail companies.
Most of them are for retail, yes.
And can you describe just generally the process, not in a ton of detail, but generally the process that goes into putting together a DIP budget?
Usually at the time that we're preparing the DIP budget, we have been in at the company for weeks, months, sometimes many, many months, and have been handling the 13-week rolling cash flow forecast process for the company. So we look at the run rates that we know about. We look at other activities that we're going to engage in. For example, I previously testified this morning that when there's a GOB sale involved, I typically take our chosen liquidator and have them prepare the sales curve and the budget along with us so that the sales curve we're projecting is consistent with what they expect to have happen in the sale. And that's what we did here. Hilco assisted us in preparing that budget using their expertise in GOB sales to actually put those numbers on the page. And then we forecast anything else in cash receipts that we knew about. And then we put in the disbursements. It's, you know, it's a science and an art form, both, because you often cannot predict what will happen in a case the first couple of weeks after the filing. You don't know, for example, in this case, when you're going to get bank accounts open, it's usually something I can better predict. But you don't know also who among your freight vendors comes forward and demands immediate payment, or they will stop, delivering inventory to the stores. Sometimes that takes, you get that all resolved in the first week. Sometimes it takes 2 or 3 or 4 weeks, which is what it did here. And that's because, frankly, they were just so sick of us not paying them that they were kind of slow to even call and show up.
And were you comfortable with the projections you made at the time that you made them here?
Yes.
Are DIP projections typically 100% accurate when later compared to actual cash flows in your experience?
They never are.
Why not?
For all the things I just described.
Now, would the cash projections have looked different for week 1 and onward had the company not received the $54 million advance on Friday before filing?
Yes, very.
All right, so obviously you're aware that the bondholder group has raised issues with the fact that the projections ended up different from the actual results, right?
Yes.
Okay, so I'd like to walk through that a bit. Have you prepared any materials to assist the court in understanding why the actual results differed from projections?
I believe we prepared a table that was included in the response by our counsel to the motion to reconsider.
So I'll ask you to look at the last tab in your binder, and I'll ask, I think we may be able to put this on the screen to make it easier for folks. It's Exhibit 12. If not, we have the hard copies, but I'll have you turn to Exhibit 12, which is this chart you were just referring to. Thank you. Ms. Edlin, do you recognize the document that's both on the screen in front of you? Hopefully it's the same document.
It is, and I do.
Was your team involved in creating this document?
Yes.
What is this document, just generally?
So it shows a comparison of the forecast of the original budget for the week ended April 29th to the actuals. And then it has the variances highlighted in the far right-hand column.
And this was based on information that was pulled from just comparing the two DIP budgets, correct?
It's compared the DIP budget to the actual results.
Thank you. Does it look accurate to the best of your knowledge?
Yes.
I'd move to admit Exhibit 12.
No objection.
Okay, it's an evidence.
Okay, so I'd like to walk through these categories, and we have a couple of numbers there. So I want to start on number 1, which is go forward collections. What are go forward collections?
Yeah, so you'll see that we list both store liquidation sales and go forward collections. We were almost throughout the period of time we've been employed by the debtors, we have been liquidating waves of stores, even pre-bankruptcy. And so we make a distinction between store liquidation sales, the sales that are actually under liquidation with Hilco helping us as our agent, from the collections of stores that are not under liquidation.
And for number 1, for go forward collections, we see a forecast of 10 million and an actual of 56 million for a variance of 46 million. Do you have an understanding as to why that variance occurred?
Yes, the principal reason was it was anticipated that the Hilco GOB sale would start earlier than it did. It didn't start until Thursday of that first week. And we had originally forecast to shift into liquidation potentially as early as Monday. But at the time, we needed them to land in 450 stores and commence liquidations all across the country. It took an extra couple of days to really get that properly organized and commenced.
Okay.
So part of it is a shift between the two line items. And then part of it is the sales variance that Mr. Glenn and I were already talking about.
And we'll talk a little bit more about that sales variance, but I guess if you look at number 1 and 2, you're kind of saying you ought to look at those in combination.
Correct.
And just could you explain for the court why that is?
Well, because the second one is store liquidation sales. And because the liquidation sale didn't start until later in the week, we only had certain amounts of cash receipts coming in. Remember, if you start a sale on Friday, we only got some minimal cash receipts on Thursday. We got some minimal cash receipts on Friday associated with that sale. And then rolled into the weekend, there wouldn't be cash receipts on days that the bank is closed.
And the total variance between the go forward collections and store liquidation ends up around $11 million if combined. Is that right?
Correct.
Now, would that variance, had you known about it, the $11 million, have changed your mind about the debtor's need for a dip?
No.
You talked about this a fair amount, but when were you aware of the actual cash receipts that came in during the weekend before filing? So Mr. Glenn asked about it a couple of times, but Friday, Saturday, Sunday before filing, when would you have known the actual cash receipts?
Midday on Tuesday.
Okay. And did you have any preliminary reports of cash receipts at the first day hearing?
No, I just had some information on sales. And as I've testified, sort of the anecdotal commentary coming up from the stores that they were getting presented with a lot of gift certificates, and the gift certificates were running way ahead of our forecast.
And so I just want to be clear. I think you've explained this, but you didn't have the cash receipts. You did have the sales reports, for instance, from Saturday and Sunday, and you testified, obviously, you were very busy getting ready to file a $5 billion company for bankruptcy. But I want to understand why it wouldn't be that just those sales reports alone would have guaranteed that, hey, come Tuesday, my cash receipts are going to be higher than I thought they were.
Well, first of all, the sales didn't really, as I've testified, that we were running at about 5 to 5.5 million in sales per day prior to the filing. On Saturday, it ticked up to 6 million in that day. So that's a $1 million variance. And on Sunday, I think it was around 8 million. So now that's a 3 million. So between those 2 days, I was only ahead $4 million. That's not very much money. The big tick up happened on Monday. And I would not know until Tuesday, even what those sales were on Monday, because I don't get the sales report for Monday until Tuesday. Monday was 13 million. And then it continued at that level through the week.
So understood. So you don't even see the large sales uptick until after the first day hearing, but also even for the smaller sales uptick that occurred on Saturday and Sunday, you testified that doesn't necessarily lead to higher cash receipts when you see that on Tuesday. And can you explain why that is?
Sure. So I think I previously testified the company had about $300 million in gross gift certificates outstanding. Now, probably some substantial number of that have been lost and were not going to be collected, but we had only forecast getting, and this was, very heavily negotiated in the budget with the lenders. We had only forecast actually being presented with 20 million in total gift certificates in the first 2 weeks, 10 million each week. And so if I sell you something for $100 and you've got a $20 gift certificate, I'm only going to collect $80 of cash because you're going to use your gift certificate like cash. It'll still show up as a sale of $100, so I'll see it in the sales report. And so what we were concerned about was how many people really still had these live gift certificates and were actually going to come into stores and use them. And as we went through the weekend and we were getting a lot of feedback coming up through the store ops team saying, wow, we're getting a lot of gift certificates presented. So what we were worried about was we had forecast, the sales amounts that we had forecast, and we were afraid that we were going to be, disproportionate with gift certificates. And as it turned out, that was the case. We had people redeem about more than double what we had forecast in the way of gift certificates.
Right.
$43 million in the first 2 weeks.
In other words, a lot of those customers that you talked about rushing to the store would have grabbed their coupons and said, I better use them now. So you may have a lower percentage realization on your sales.
Right.
Okay.
Right, they grabbed their coupons and they grabbed their gift certificates if they had them.
Okay. All right, and then let's take a look at the, I don't think we talked about it earlier, the third line item there where there's the sales tax and other receipts. Can you describe, if you have an understanding, where that $9 million-ish variance comes from?
It's principally due to a check from a vendor. We had, because the company had been in such a state of disarray with regard to its vendors, many vendors had been prepaid for goods that weren't entirely delivered, or they were prepaid at face value, but then the company had a rebate agreement with the vendor that when they reached certain volume, they would get a discount back. And so we had 3-4 dozen large vendors who had the equivalent of what we call a debit balance, which means they owed us money because we'd been paying cash for inventory for months. But when we took the discount, ultimately reconciled, which we would do quarterly, and took the discount, they actually owed us money, and we'd been chasing them for that money. This is one of those vendors. They had approved and agreed with us on the payment, and then they'd been saying the check is in the mail for a period of time. And we had actually put this in week 2 to be received because we didn't believe them when they told us they had processed the payment, and it actually arrived in week 1.
So not something you knew at the first day hearing that would come in?
No.
Okay. And I want to ask, because now we've talked about all the variance in collections, but based on your experience, years as a turnaround professional, even if you had known that the total collections would be around $21 million higher for week 1, would you have then decided that there was no longer a need for a dip?
No, I think I previously testified. I always wanted a dip, and I actually wanted a much bigger one than they were willing to give us.
Okay, so I want to now turn from collections to disbursements. And we can start there with number 3, payroll. We see a forecast of 42 million and actual of 17 million for a variance of $25 million. Do you see that?
Yes, I do.
And in the bondholder group's filing, they referenced statements from the first day about a $30 million hole tied to payroll, statements that were made by the debtors. Do you recall seeing those statements in the motion here?
I'm sorry?
Sorry, that was the 3 hours of sleep question right there. The bondholder group referred to some statements made by debtors counsel that we had to fill a $30 million hole that were made during the first day hearing. Do you recall those statements being made?
I honestly don't. I was working on about that much sleep at that point.
But at that time, did you have, were you of the view that there was a payroll hole that needed to be met right away at the start of the case?
Yeah, that is the reserves that we've been talking about. So that $25 million variance that you see is basically 2 things. It's the $21 million in WARN and PTO reserves, which I think we've more than adequately discussed. And then I also testified that there's another $2 million of bonuses that we pay managers for staying through liquidation sale. We had a wave of store closures that we had started pre-petition. And we got authority in the first days under the payroll motion to pay that bonus. We thought we would pay it in week 1, and it actually was paid in week 2. And then there's always a slight variance because again, there are hourly payroll in here that may go up or may go down for the distribution centers.
And when were those payments, those payroll payments that were budgeted for week 1 and actually made?
The ones that weren't made?
Correct.
They're made in week 2. And again, as I testified, technically we probably should have shown it as a disbursement because we had the money for the reserve and it was segregated in our accounts. It was just funky the way we showed it and projected it in this, budget.
Got it. So it was already set aside in the first.
Yeah,
week.
it was already set aside in week 1.
If you had known you had an extra day or 2 to make those payments, would that have changed your view as to whether the debtors needed DIP financing?
No.
All right, now turning to rent, again, a $25 million variance. Could you explain to the court your understanding as to why that variance occurred?
in our bank accounts. Um, they're under the operating procedures that major money center banks have these days. They are required, when a company files bankruptcy, to freeze all the bank accounts. And then they wait to get a copy of the court order authorizing the use of cash and authorizing the cash management system to reopen those accounts. The process internally and the internal control process that exists governing that takes a while. And one of the biggest concerns we had about the timing of this filing was we had a payroll due that week. I could not miss paying payroll, and it had to be paid on Thursday. It needed to be funded on Wednesday. The money had to be there. And that was part of the advance that we got the week before, that was money that was actually then set aside to pay payroll from that $54 million advance, so that it would be sitting in a segregated account ready to go. But we still had to sweat through the internal control process at the bank, with them getting all the approvals internally and everybody seeing the court's order, and it goes up the chain and down the chain. And, there's a lot of people in a big bank that had to approve it. And my experience has been that it takes usually almost all the way till Friday to get bank accounts open. We were assured by the lenders that they would do everything they could to get as many of our bank accounts open by Thursday so that could happen. They did get the payroll accounts open. They did not get most of our disbursement accounts open. So while we had accounts open on Friday that we were able to wire $1 million from, that we had wire information from the landlords, the rest of those, 500 landlord payments, those go via ACH, which is like an electronic check, Your Honor. But it's a input list that the bank has that's associated with a specific bank account, and that bank account wasn't yet reopened. So, I wanted to pay the rent on time. The rent was due on Monday. It had to go out on Friday in order to be counted as on time, and we just couldn't do it. Wasn't that the intent wasn't there.
So you anticipated making those rent payments by Friday on the when you filed the DIP budget, correct?
Yeah, we thought we would be unusual and pay our rent on time.
Well, if you knew you had an extra day or two to make the payments, would that have changed your view as to whether the debtors needed DIP financing?
No.
I think we already talked about the non-merch payments on the adverse direct, so I'll just move on to Hilco payments. Who is Hilco?
Hilco is our liquidation agent.
And what's your understanding as to why that $4 million variance occurred there between the budget and the actuals?
Again, a bank account issue.
Now, over the period between when you filed the initial projections, April 23rd, and then when the final DIP budget was filed on June 13th, that had the actuals, were you trying to hide the actuals from third parties? Was that something that you didn't want discovered?
No, we were required under the terms of our lending arrangements to provide. Well, first of all, we're required to provide daily receipts and disbursements to our lenders. Then we're required to file a weekly variance report. Then we're required to file with them a updated budget every week. And as soon as the committee was formed and hired professionals, they got all of those reports as well, including we had a folder already prepared for them that went all the way back to January with information of the various projections and variance reports that they got access to on May 18th was when we opened access for them. So I assume that's about the time that A&M, who they hired, asked for that access. So everybody had all that information all the way along, and frankly, a lot more information than I've ever had to give anybody in a case.
Did you think there was anything nefarious about the misprojections here?
No, and nobody ever said anything to me that was nefarious. I would have been pretty offended.
And had Bed Bath and
Which
Beyond
not been good for them, because when I get offended, people know that that's a problem.
had Bed Bath and Beyond misprojections before in your experience while working at the company?
Yes, it was a very difficult environment. As I've previously testified, we had a hard time even understanding what was due and payable, because so many things had been not paid and then were not paid. Until then, the vendor threatened to cut us off. We had stores in the waves of liquidation that Hilco was running for us in January and February. Hilco actually had to step in and pay certain expenses on our behalf and then just bill us for it, because we had last minute refusals to pick up trash, repair broken windows, escalators, fix HVAC units in stores, because those people had not been paid for months and months and months. So it was very, very difficult environment. We did pretty good at payroll. We did pretty good at professional fees. We did a decent job at sales. And then everything else, we did the best we could to manage it within the cash we had and also try to predict it accurately.
Did you believe the projections that you made at the time that they were filed with the interim DIP budget?
Yes, they were the best that we could do.
And did you think they were made in good faith at that time?
Oh, completely.
Let me just ask you, what is your understanding of the downside if you decide we don't need a DIP, we'll file without it, and you're wrong?
Objection calls for speculation.
Well, there was a whole series of questions right along the same lines about if you need that.
Some of them were objected to, but
Right. Right, but we did allow the testimony about whether there was whether there was sufficient funds for this, that, the other thing. And can you repeat the question, sir?
Yeah. The question is, in your experience in turnaround industry, what is the downside if you decide that you don't need a DIP, you file without one, and you're wrong?
Well, it depends on the situation. I have filed a number of cases where we had substantial cash at the time we filed. We hadn't been in cash dominion and having our cash swept, and we didn't need a $54 million over advance the week before. And in those cases, that's fine. We can survive on cash collateral, and we agreed to do so with our lenders. But in this case, that would have been devastating. First of all, every employee in the company practically was dialed into that first day hearing. They were all wanted to know that they were going to have assurances that they were going to continue to get paid. And they viewed, rightly or wrongly, that DIP loan as being critical. I believed it was critical.
And did you have an understanding as to whether the DIP lenders had a lien on cash collateral?
So to the best of my knowledge, they certainly did.
And did you have an understanding as to whether they would consent to the use of cash collateral, like you described has happened in other cases?
Not without a protracted negotiation. And I would think probably not, given the situation.
Did you have an understanding as to whether the DIP lenders would advance the $54 million the Friday before the bankruptcy without also having the DIP?
Well, it was a whole unified negotiation that had gone on for approximately 10 days prior to the filing, from the moment we were defaulted for, I don't know, maybe it was the 5th or 6th time. It was what's going to get funded. So, first of all, they stopped funding, and then we had to agree daily with the ABL advisors and the FILO advisors what even was allowed to get paid daily. Then we were negotiating the over advance that would be required, the DIP loan, the DIP budget, and the reserves. All of that was going on simultaneously in that 10 days, and it was all a package deal.
And based on your experience with turnarounds and restructurings, did you think it would be good business judgment to begin these cases in a litigation over the non-consensual use of cash collateral?
I did that once with a company in Sacramento and filed in Delaware, where we litigated cash collateral for the first 3 months of the case. I would never do that again. It was painful beyond belief.
Just a few more questions, and then if I could have a minute to confer, I think I'll probably be close to done. But Ms. Etlin, when you filed your declaration on April 23rd, did you believe a dip was necessary?
Yes.
When you came to court on April 24th, did you still believe that a dip was necessary?
Yes.
Looking back today, do you still believe that a dip was necessary at the time of the filing of this case?
Yes.
And based on your 35 plus years, since you were 12, of experience in turnaround situations, do you think it was a reasonable exercise of the debtor's business judgment to ask for a dip on the first day?
Yes.
If I could have just one moment here. No further questions. Thank you. Thank you, Ms. Etlin.
All right, so now would be kind of the cross, a redirect, recross, and it's 125 about. I'm not sure how much Mr. Glenn has, or it seems like it might be a good time to take a break.
Mr. Hubner reminded you he was on the phone. I don't know if he's still planning on asking questions.
All right.
Or not.
Yes, Mr. Hubner.
Your Honor, good afternoon. I have 4 questions. I think I'll probably need under 60 seconds, if that's okay with the court.
Yep, Miss. I was reminded by Ms. Etlin here. I'm sorry, I forgot, but it was getting close to a break time.
Oh, that's okay. It will be under 1 minute if now is convenient.
Okay, go ahead, please.
Sure. Ms. Etlin, can you hear me clearly?
Yes, Mr. Hubner, and I would never forget about you.
Thank you. Just a very few quick things. Number one, Mr. Glenn asked you to subtract arithmetically a few times $40 million from several different numbers in the projections. Do you remember that?
Yes, I do.
I'm going to ask you a slightly different question on the same topic. Do you believe that if the company had entered Chapter 11 with no DIP loan and no agreement on cash collateral, and that was part of your announcement of the filing, that all of those numbers, liquidity, receipts, disbursements, would have been, as Mr. Glenn was suggesting, $40 million below the numbers they actually turned out to be?
Well, first of all, I wouldn't have had authority to even make any disbursements, so I wouldn't have made payroll that week. That would have been pretty awful.
Right. So you think on the whole, would those numbers have been better or worse than $40 million below what they actually were? Let's just take liquidity, for example.
Well, first, getting technical here, if I didn't have an agreement with your clients and Mr. Hillman's clients on use of cash collateral, you would have just continued to sweep my cash. So I wouldn't have had any cash, right?
Okay, let me move on, Ms. Etlin. 2 more questions and then I'm done. Obviously, the company did file with an announced DIP loan and with agreements with the lenders. Do you believe that that was helpful in keeping the company together and in keeping employees at the stores doing their jobs?
Absolutely. We had trouble previously in some of the first waves of liquidation with employees actually not showing up for work because they were concerned about being paid.
Sure. And second to last question, what would have happened to incoming receipts, to cash, had a large number of employees just not shown up to work? Because as you testified, they were very afraid they would never have been paid.
We wouldn't have been able to open the stores.
Okay, and how would that have affected cash receipts over the opening weeks of the case?
There would have been no sales.
Okay. And then apologies for the final question, which is a little bit sharp, and then I'm done. Having heard what you heard today, having been cross-examined or directed or both by Mr. Glenn, do you believe that any of your prior testimony, including your first day declaration, was either fraudulent or perjurious, or do you stand by it today as being true and correct based on what you knew at the time?
It's true and correct, and how dare you use those terms?
Thank you, Your Honor. I have no further questions.
Okay. So now we're at that same point.
I do have questions. I think it would be humane to have some lunch now, though,
I
because
think so too. Edmund's been on the stand for quite a while. It is getting close to 1:30. There are, well, you've been here before. There's some local deli up the street and a pizzeria across the street, but how much time would you like for lunch? And
As little as possible, I would say, Your Honor, so we can come back and wrap up the day. That would be my request.
all right.
We need to feed the witness.
I was gonna say 1:15. I mean, actually, it's 2:15. I lost an hour there. So 2:15. Why don't we come back at 2:15 and that'll be the redirect, recross, and then limited to anything that may come up if there's any further need on the debtor other side.
And Your Honor, any guidance as far as closing argument is concerned? Timing perspective?
Yeah, I thought where we would be was that we would finish up the testimony, and if you wanted to make your closing arguments, we would do that today as well if it finished up in time.
Yeah, we would very much like that.
that's fine.
Sounds like everybody would like that, so that's what we'll do.
Great.
Great.
Thank you.
Thank you. Thank you.
All right.
Before we go off the record, I just on the reserves, I've just heard so many different numbers that I just want to. I'm looking at the interim order, and it has a priority claims reserve of 15 million, a wind down reserve of 5 million, and a warn reserve of 16 million. Are those are the right numbers?
Final is different than the interim, Your Honor, stated on. So you're obviously correct. That's what it says in the interim. At the final, same paragraph, there was a reduction of $5 million. So the aggregate of what you're looking at there is 36. The final is 31. Because you remember that.
Okay, that's what I was not. That's what I was not.
Right.
The final was like settlement with the creditors committee and a number of other moving pieces, so things changed. But at the interim, you are 100% correct.
All right. Okay. Thank you.
Thank you. Where are we eating?
Where are we eating? All right. We'll keep that on, so we'll hear the audio when it pops on. Very interesting. Are you guys hearing anything in there that's not known? I feel like Ollie said some stuff that we didn't know about, but I don't have a good handle. If you weren't watching The Spy, I wasn't talking, listening to the court hearing. A nice head and shoulders here, right of resistance. So the line we drew from previous support there, watched it right here. You had your head and your shoulders, so did grab shorts on the futures there, and I missed the options on TD. I have it default the limit, I guess, limit order, and not market. And there's no reason to do limit orders on SPY options. There's so much liquidity. It's usually 1 cent spread, and so I always do market orders. I put in the order for put. Actually looking at the 1 minute on another chart, and I put an order right here for put. It was like a 435, I think it was. I don't know. It was 9 cents. I was gonna get 4 of them, just real small. And it was a limit order, and like it didn't fill. I was like tinkering around. It started dropping. I'm like, oh, it's a limit order. I just, yeah. So I didn't get filled on that. This contract went from 5 cents to 50 cents, or no, sorry, 9 cents to 50 cents. I was like, for this drop, but I had it on the futures at least. So, anyways, we do have a kind of an inverted cup and handle being formed here potentially. We do have that head and shoulders, and this is a rejection of that point. So maybe a large inverse cup and handle on the SPY. It might be a big turnaround here. If this keeps grinding up, probably invalidate the handle on this inverse cup. But I think we have a little more room. About somewhere right around here, though, it should show signs that it's a handle on this. If it is, otherwise it's just trading in a range. We'll cruise back up potentially. Barbecue stayed pretty flat around VWAP. GME came down and touched VWAP with that dip on SPY, 2.3%. Yeah, SPY's kind of moving up more there. We'll see. Expecting it to kind of reject VWAP, but didn't. Yeah, the baby auction is taking place right now, actually. As you heard, Etlin was going to be there, but gotta be here. One thing you heard was that there was no buyer for Bed Bath at all. And a hope would be for it to merge without help for the main company. What was it yesterday we were hearing about them maintaining the Bed Bath & Beyond brand? What happened if an airplane fell on me? I know, I was like, what would happen if the doors were closed? Well, we wouldn't have cash receipts to look at or to go through. Looks like we are maybe getting it there. The handle. It'll take time. Looking for a retest of the low and potentially a new low. I know they have to go through all that stuff just for the record and to be thorough. Don't want to leave anything up for speculation. But I like your rendition. That's something I was going to. Yeah, that was the Bye Bye Baby auction is going on right now. So I don't think we're able to tune into that though. That was freaking hilarious, dude. She's just totally straight faced, like, yeah, you ruined my Saturday with that. Even the judge didn't laugh. He was just like looked over at him. Looked over at Glenn with complete and utter disgust. Yeah, that was great. I don't know. I mean, I feel like we're cheering on for Holly, but I don't know. Maybe it's Glenn that maybe the bondholders and all that would be better for us. I honestly don't know. I don't know if any of us really do. And this part of it doesn't even really matter that much anyways, so I guess it's fun to see regardless. Yeah, so this looks like it might perform in a handle. I did get puts this time, and I did market order. Fortunately, probably not as much of a downside move, because these did what, like 400%, 450% here to here. So unless if we get a big flush down to 433, maybe 433.50, I might get the same return. We'll see. They're up 20%. Less time on the day means, you know, they can move faster. Yeah, he's just trying to skim for the bondholders, which I don't think really matters to us at all. But it's interesting to hear, and to hear the different to hear Holly kind of go over the circumstances they were in. I've not really heard that at all. You know, they dropped filing reserve for the last 6 months, but for someone to just kind of explain it, like the kind of dire situation they were in, and without a bunch of tinfoil of Ryan Cohen is doing this on purpose and all this crap. That was interesting to hear. Yeah, they were in serious trouble. And yeah, they wanted to sell it without going to Chapter 11. Makes sense. Couldn't. Where's Owl, man? Generac's up 3.3 today. I don't know why I shorted calls on the breakout. Or no, it was before the breakout. Yeah, it was here I shorted those calls. I'd like to think I would have had the good judgment to not short him yesterday. Because now my short calls... My short calls are down 500%. Long calls are up 486%. What? That's because the credit I received was smaller, so still positive play. I'm trying to roll my short leg up a strike and out. But geez, this thing's taking off. Yeah, the long call's up 500%. Committed fraud. Yeah. She's pretty offended by it. She's made it clear. Even that that other guy that came in on the video is like, did she say I'm offended you asked that or something? Thanks, BX. Same to you, man. Just went for the record. Yeah, it kind of seemed like that, but I wasn't sure when she said she was offended by the question. You miss us? Sorry to hear that, BX. Barbecues had a nice consolidation today, up almost 4%. Let's see, is it Wednesday? And you can kind of even see it holding this trend, like it's a little bit below it, but even the bottom of these candles has that upward trajectory, the same angle of these. Very interesting. See which way it breaks now. Up or down. Now converging with VWAP.
So I think that you're
Gen
saving money
I.
somehow, but we today on this name, Daiwa actually downgrading Uber Technologies to outperform from buy, raising its price target to $51 a share from $42. They did cite its valuation behind the downgrade following the stock's recent strength. They do still remain constructive on the name. They did raise their price target, they said, to reflect these higher bookings growth at Uber's mobility operations and increased profitability at its delivery segment. They believe that Uber's global scale and cross-platform synergies make it best.
Yeah, I mean they're killing it on dropping their debt, so
while navigating potential downturns and regulatory
just setting up
cost pressures.
a pretty good seeming opportunity for
this is definitely more
takeover.
42 buys, 4 holds, no underperforms, no sells. Nothing even leaning slightly negative in this name, all things considered. Now the average price target of around $50 a share
no, I hear you.
Around 11% upside. So this analyst price target at 51 just puts it slightly above the average. So definitely on the more optimistic side. The highest price target though is $75. So it seems like the street still sees more room for this name to run even with its 80% rally this year.
And going back to its debut, less than 5 years ago, it really has gone nowhere. I know it's been higher, it's been a lot lower, but this is essentially where it's, debut as a public company was in sort of these low to mid 40s per share. And so kind of goes to show that it's really been an underperformer compared to many of its tech peers over the last few years that it's been a publicly traded company. From a trading standpoint, though, Jenny, I think even if this isn't a buy rating, even if it is a downgrade, it's clearly still an optimistic tone. And it's still one that you basically pointed out that analysts still generally have a feeling that they like it. And so the FOMO feeling, I think, is to the upside. I looked at a strategy, though, that would seek to kind of limit the exposure. So sort of falling into this outperform but not buy kind of rated area where we're buying a call counter for this trade illustration. It's risk defined. It will benefit from a move up towards 50, which quite frankly is a pretty big percentage move, be close to 15% rally to get to 50, but giving it a little bit of time for that to happen. Selling the August, buying September, 50 cents is the debit. That would be $50 in risk. So not a ton of exposure here, but needs a pretty substantial rally over the next, let's call it 2.5 months towards the end of summer for this one to potentially be profitable. Risk profile shows here mountain-like kind of risk profile, peaks out the apex of that profitability graph at the strike. There's tons of strike availability across the different expirations. So someone who has a different outlook or maybe isn't quite as optimistic or potentially is more optimistic, whatever it may be, adjustments to that strike, adjustment to the expiration can help hone in for those specific outlooks. This is just one way to look at it. Utilizing Uber and sort of coinciding with this price target up at 51 to set up a strategy that would benefit from a move towards 50.
And this name, of course, has outperformed Lyft by such a sizable margin over the last 12 months. Lyft is actually down 31%. Compare that to Uber's 104% rally. So the names have really taken off. So you can see the outperformance just from Uber versus Lyft has been just uncomparable. But we will leave it there for our FOMO segment today. Now, coming up next, we will talk all things Costco as it cracks down on its membership sharing. Renita Young will have that story for us coming up next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more.
Good afternoon, DIY.
Consider a membership at that point, because to me, if you're going to say someone can't go anymore, they have no interest in getting a membership, you're just cutting off potential sales. And while they're around the system, you don't necessarily want to do that either. But any final thoughts here on Costco? Doesn't seem like the stock's making too much of a move one way or another.
Not too much of a move, right?
Or
And
night
this
shift. What do you do
could be
night shift?
impact, but I think you're right, Alex. I think that they really just want to convert these folks.
Yeah, we've been listening to the court hearing
themselves, just
on
like
barbecue.
Netflix has done it.
Yeah, I completely
It's been
agree,
entertaining.
Anita, but I have
Ollie
to say
Etlin's
that
been
I
on the
read this
on the
press
stand.
release, and I think that you can still use someone
Glenn
else's
has got
online.
just
So
it's
I
just
may
a hot
be
mess like
my
yesterday.
understanding I might be in the clear, but I might have to double check that
A little
for
better
you
maybe
there.
than organized,
Appreciate all the
or
insight, Renita
a little more
Young,
organized.
correspondent for the network. Now, coming up
The
next,
judge
it's time for
loves
Undercutting,
Holly
looking at joke
and hates
aviation,
Glenn.
surging on the day, up over 30%.
I don't know
Break down
if it really matters to us either way,
so much on the
but
session coming up
it's been
next.
pretty funny to watch. Power plants here, holy smokes. So, like, don't let Chernobyl happen again, eh? Tired military? What do you mean at the same time? You're retired. That's something you have to actively be doing. Yeah, it's not bullish or bearish. I don't think this is irrelevant to us. Any shareholders? But we did get kind of a breakdown. If you do want to rewatch at some point, they just took a break. But Holly Etland had a nice monologue, just kind of breaking down the situation, the dire situation barbecue was in the last 6 months. It was when she was being questioned by 6th Street, I think, or yeah, her side of the party, the table, and it was put some clarity on basically all those filings and dockets and numbers. We just put it into words. Yeah, they were in big trouble. "28 years Air Force. Thanks for your service. Going back to work." So it looks like we are getting this handle. Big profits at low of the day. See if we break through it potentially. Any value to be a shell for some pump and dump? What do you mean? Geez, Trump is down 7%. That California thing? Why? I think he said 1:15, so that's 2:15 our time, so that's 20 minutes, I believe. I've got it. We got it pulled up here, so we'll hear when they start talking again. Turka's up today. 17%. Good chance to exit. GME is up 3%. I kind of bouncing there, back up to VWAP.
So there might be a little bit more utility for this ride-hailing aspect of the business, where maybe somebody could just, on their phone, schedule a time for their flight and be able to get to point A to point B in a matter of 10 minutes or 20 minutes or what have you. So I think that's a little bit of a different scale for their business, a little bit of a different target market than Virgin Galactic, where, as you kind of talked about, I mean, it's very expensive right now, and I think they're really trying to traverse vast amounts of mileage in a short amount of time from an intercontinental standpoint.
Yeah, Kevin, to your point, completely different companies, and at least with this name, you're staying somewhat in our own atmosphere, which of course has been done many, many times. But we will leave it there. Appreciate all of the insight, as always, Kevin, Senior Markets Correspondent for the network. That also does it for today for Alex and myself for Next Gen Investing. Coming up next, we have the Watch List with Nicole Pedalides.
U.S. officials consider tightening the export of AI chips to China based on computing power. This was the news that dumped NVIDIA last night after hours. 101 counterparties take 1.945 trillion at the Fed reverse repo. Trump is the only Republican who will lose to Biden in 2024, says Paul Ryan. CNBC on Apple 3 trillion market cap watch. Kiss of death. What? OPEC shuts Bloomberg, Reuters, and Wall Street Journal out of oil conference. Deutsche Bank cuts 2024 Brent price forecast by 8.3%. 2023 outlook by 1.5%. MicroStrategy acquired an additional 12,333 Bitcoin for $347 million. An average price of 28,000 per Bitcoin. Jeez. NVIDIA CFO sees no material impact to earnings from China export. Shareholders seem to think different. NVIDIA says China accounts for 20 to 25% of data center sales.
There's a reduction in retail inventory that really weighed on sales. When you take a look at the breakdown, North American retail sales rose 2%, North American food service sales up 7%. The pet category, which I'm sure maybe you are familiar with the pet food segment, that saw sales grow 7%, but the international segment sales were down about 1%. So that was a weak spot there. Also saw gross margins come under some pressure due to higher input costs. So, that also kind of came in disappointing. But then looking ahead to the coming fiscal year, General Mills said it sees adjusted earnings growing between 4 and 6% on a constant currency basis. Compare that to this year, that was about 10%. So definitely seeing some earnings slowdown there as well. They said input cost inflation is expected to come in around 5%, due in large part to wages. So I think that just kind of suggests that they're
What's
no
ICT stand for?
They're no longer able to make up for
Why would I
slowing
know that
sales with
acronym?
higher prices at this point. So we're seeing that really weigh on shares. They're off about 4.5% right now, and they already were lower year to date. So this was an underperformer as it was, and certainly not getting any love today after these mixed results.
And when I think about General Mills, I mean, you would almost think, oh, Cheerios and Nature's Valley and the
Betty Crocker.
Price point seems to be what people are looking for when you think about value, but there were other things that came into play. You mentioned North American sales, which saw some up arrows, but they're not stocking the same amount of inventory. A bright spot when I had this conversation with two analysts, one from CFRA and one from Mizuho. The CFRA analyst had a sell rating, and they were talking about at least you have a dividend, right? You have right? They raised the dividend by 9%, and just on the pet stuff, the CFRA analyst didn't like the spending that they were doing on the pet segment. So. Just because it was the treats and things that weren't doing as well as the main food. The food I think was doing better, but the extras weren't doing
maybe a
as well.
sign that
So
consumers are even pulling back on their pets. They're spending on extra legroom on flights, but no longer treats for their pets.
No treats for you, right? Just good boy. All right, Caroline Woods, thank you. Thanks. Now let's take a look at the bigger picture. What's going on here with the markets? Hugh Roberts is with us, head of analytics at IQ Quant Insights. Thank you for being with us. Your thoughts, even on the volatility that we're seeing today? I mean, we've seen some back and forth action. Your thoughts on what's been going on? Because we're not too far off the highs, the 52-week highs that we've seen recently.
Just want to remind you of Generac here, Archer.
But I think actually
It's up 400%,
probably price
or 4%.
The last couple of weeks has been more a function of positioning.
Broke out.
It felt like a lot of investors have been underweight, and that's across the board. That's the kind of slower moving,
Fully broke out.
type stuff, even the faster moving high
Filling
frequency
gaps.
guys.
200.
And it feels like
200's coming, man.
A big spate of short covering. A lot of the surveys, a lot of the anecdotes around flow suggest that you have seen a spate of short covering, and I think that makes sense into the end of June, month end, quarter end, half year end. So I think what will be
You made money on it, but
is when we get into July and
you have so much time.
Quarter, price action I think could be a bit cleaner, positioning could be a bit closer
anyways,
to home.
let me look at Richard Godson.
Macro fundamentals start to reassert themselves.
I can tell you like this chart setup. A lot of the plays you share, it looks like some sort of Wyckoff accumulation type pattern.
Yeah, so we at the moment our macro momentum is still positive. We pulled together all these macro variables: growth, inflation.
I like it though. Got kind of inverse head and shoulders there.
Spreads, and we distill that into a single number. And right here, right now, fair value, for example, on something like the S&P 500 is 4,280.
Not a whole lot of confirmation of the move yet, but
is pretty close to that. But the critical thing is the trend is still up. Macro momentum says that overall economic conditions are still favorable for US equities. So at the moment, that is still the primary trend. And we're really left in a kind of tactical trading environment where you're looking for times when things overshoot. So mid-June, for example, everything got too far ahead of where it should be.
what's your time frame on this? Are you like
So we had tactical kind of
You can
pullback
just scalp it.
signals on that.
You said an Amazon
Now
trade
back close to
yesterday,
fair
and
value again,
you were hyped
so
after it ran
we're
like
kind of
0.5%.
watching and waiting. But the primary trend for the time being, at least, looks favorable for U.S. equity markets.
That call might go up at some point.
That being said, when you
Today
think
or
about
tomorrow or
consumer confidence and different segments, how about something like consumer discretionary?
you got till November, so I imagine you'd want to hold it. It's out of the money, dude. 100.
Investing. Tell me about some different
Oh, you're looking
areas
for that
that you
gap
think
fill.
may be making some headway and maybe some good ways to go.
Yeah, and I think that's going to be the critical question at the beginning of July. People start to think about, okay, well, if I am still constructive on U.S.
Call
equity
for
markets,
November.
then most people will probably think that the rally has to start broadening out. You know, we all know it's been about the Magnificent Seven, the tech-fueled rally, the AI frenzy. If it's going to continue, you want to see a healthier, broader market. Now, one of the things we're watching closely
IV is
if you
cheap.
look at a sector like consumer
I like how you
discretionary,
find
to your
cheap IV
conversation
plays.
earlier about the health of the U.S. Consumer confidence numbers were strong yesterday. That might lead investors to focus on something like the consumer discretionary sector. We look at that. We have a strong macro model. It's in regime. Macro's doing a good job of explaining price action, but it looks very rich on our metrics. Now, that's primarily because of the Amazon and Tesla effect. They are 24 and 20% roughly each within XLY. But there are other ways that you can play consumer upside. For example, Invesco have an ETF RCD, which is the consumer discretionary sector. But instead of the conventional XLY, which is market cap weighted, Invesco do it on an equal
I like that
weighting
crossover
basis.
too.
And that particular ETF is actually in line with macro conditions. It's not rich. So
I know that's
guess
crazy,
we,
Cameron.
like everyone
I know I
else,
was
are
hearing
kind
those
of
numbers.
looking for
I was muted still,
laggards,
but
looking for
like,
clearer,
dang,
efficient
barbecue's killing
ways
it.
to play the upside
That
if
was
we
just
are indeed
over the
constructive
weekend
on
after
the
they had all
market.
those liquidation sales. They were expecting what, like 7 million or something?
Looking more for value. It sounds like maybe things
I know. Well, you can see on the revenue, doing over $1 billion a quarter. Like, they just got to figure out how to get rid of debt and cut their costs. If you got the revenue, that's the hard part.
Yeah, it's interesting you say that because we put out an insight just today on gold. What we do a lot of is we study the kind of the drivers, the macro factors driving price action, and these are the narratives that drive markets.
Yeah, the broadening wedge, that's what you like.
Now, the regime that everyone associates with gold is it's a safe haven asset, it's an inflation hedge. It's
I like the
we've
zoom.
grown in times
I'm not
of
going to get as
trouble.
much time
That's
or as far out of the money, though.
wisdom. But these dynamics change all the time. The narratives, the stories driving markets change. And what's interesting on gold right here, right now, is the biggest driver
Sounds like they're
of
back.
gold prices is actually the economic data. It's economic growth. And it's a positive relationship. So stronger growth, stronger gold prices. And I'm sure a lot of your viewers will have heard that last sentence and say that makes no sense. Gold is a safe haven asset. It rallies when things are getting tough. But that's not the pattern that we're seeing at the moment. So at the moment, gold is a function of growth, economic growth, that is. And if we continue to see the data remain okay, then gold can kind of hang in there. But actually, the reason I think gold's price action is so poor, to your point, is because we've had a spate of some soft
climbing
data.
up a little
Obviously,
more.
Yesterday was okay, new home sales, consumer confidence, but the PMI numbers on Friday were really poor. And that kind of rekindled some recession fears. So it's slightly counterintuitive, but these stories change, and that's why you need a bit of an AI-driven process to kind of help your investing, and that's what we do.
I see. All right. Anything that we've left out? Because I know you talked about, for example, home builders too, thinking that maybe that too was seen as a little bit rich at this point, because it too has been running up. It's at 52-week highs, much like some of the Magnificent Seven. So is there anything that I've left out for other areas that people can look for value?
Yeah, that's one of the weirdest things, isn't it? We all talk about a narrow market and Magnificent Seven leading, but then you've got one of the most interest rate sensitive sectors, home builders, doing well as well. So it's a really curious market. It just shows how crazy this cycle is post lockdowns and after COVID and all the stimulus we saw. So yeah, absolutely. We are looking for laggards. We're looking at more the equally weighted things. We're also looking at some of the defensive plays because there's a lot of research out there that suggests that this move in VIX that we've seen over the last couple of weeks may be potentially, at least from a seasonal perspective, coming to a bottom, that July is often the month within the calendar year where equity vol hits a low and actually then rebounds in the second half of the year. Now, if that's true, then you want to be looking at defensive plays, and you can look at both sector plays, so, the healthcares, the staples, the utilities of this world. But, there are ways that retail investors can play VIX direct. For example, there's a levered ETF, so caution is required, but there's a levered ETF, VXTLT, and we model that. And indeed, it looks cheap to macro on our models. So if you are in a more...
Get rid of debt and all of a sudden companies making money. Yep.
Well.
And large income. Nothing specific. This is just...
Thank you.
This is about Bed Bath & Beyond, which is... it's actually, yeah, it's over at this point, so it really doesn't matter at all for us. It's been bought by Overstock, right? So it's just kind of semantics. Imagine with the money that's left over and finalizing it up. We're just waiting on baby. That's our only hope. Help me, Obi-Wan Kenobi. You're my only hope. I think I have that right. Does that sound about right, Cameron? Yeah, we're listening to it. You can hear them rustling with their mics. I guess you guys might not be able to tell because you think it's my mic, but all that rustling with mics is them, not me. Heart palpitations. Your calls would have been up 1,000%, I think, Al. Because mine are up 500%, and you had yours earlier, and I think yours are even further out of the money. I mean, it's in a full breakout. It's not like you can't still trade this. It's in a breakout, and there's a lot of room to the upside. Big gaps. With a pullback, I'm not only going to close my short call, I'm probably going to get another long call. I'd like to see this gap fill. I'll close my short call, get some more longs. Retest of the breakout. 137, maybe 140. You nailed it though. All this volume in here too. Mm-hmm. I was just saying, all this about Bed Bath & Beyond doesn't really matter to us anymore, right? Because it's pretty much wrapped up with Overstock. Our only hope is basically Bed Bath, or Bye Bye Baby. So it's somewhat semantics. Further out of the money? Oh, closer to the money, less time. Yeah, I like the closer to money, less time better. I'm getting even less time, even closer to the money. Oh, I just filled actually. Nice. Yeah, we're hearing the hearing. Alright, I got filled on that. Picked up a Zoom August 75 call. So I considered closing if we broke this trend line. For another dip entry, but I don't know, it's holding up such nice levels. Are they heavy into it? I like how low the IV is. I like how you find options. I don't know, is it high gamma? You and what, CJ Lee? CJ Lee, you listening? He gave me a Home Depot weekly. Couldn't believe how that thing moved. I hadn't played weeklies in a while either, but yeah, like this Generac one, it had hardly any movement. The premium went up crazy. That's beautiful. I think that's gamma, isn't it? I can roll this short call. Oh, what? Rolling Generacs out 2 weeks. Trying to get it up to 136 on the short side. GME up 3.5. 29.5 by what, next Friday? Thought you said, Archer? Oh, looks like it's bottomed at least. For now. That volume on barbecue. Expecting the 32-cent support from earlier. Sat in your hands all day. Resume. Back west up 1.5 almost. Yeah, this one might be set up. Might be a bit of an inverse head and shoulders, but hard to tell. Don't quite like it. I don't know. Maybe good. I'm gonna have one here too. Don't like that it broke that channel. Eyes moving up a little bit. Gotta give that down channel right there. IP up 2.5. Don't really like this chart either. Barbecue almost red. You'll hear when the hearing starts. 5 minutes, it says, but be late. Doc Rose over bye-bye baby sale process as parent Bed Bath & Beyond splits auction. $7, 29.5. Yep. There's a good start to that. Oh, Iron T's red. Still up 5%. Okay, let's see if this is the top of the handle on SPY. Could be a little head and shoulders up here too. About as far as I'd like it to retrace for a handle. Waited on my puts. Long time. It was moving so fast in here. It's like hit the top yesterday with our resistance, made a head and shoulders, came down quick, bounced on the low of the day, started making the handle, and then it's like had my time frames with that same accelerated time frame, but slowed way down in here. Needed to chop it up a bit. Yeah, there's no way that's going to be out of the money. Or if I should close my Tesla play. Just need above 1 or 2. What is it? These Tesla's so high. Need above 250 by Friday. Hold above that. Made its cup. Made its handle. So maybe not. Nice looking bull flag, but I'm gonna close this thing. I think SPY rejected anything higher than that handle too. Might as well, I'm up 70% on it or something. Oh, sorry, TJ. I saw your comment. I forgot to reply. Instanet? I haven't. 55 billion wave, 2 years up till game squeeze. I don't know what you're even talking about. Can you share it on our Discord? I'll check it out. No one is spamming this chat. If you're spamming, you'll know, because I'll have timed you out or banned you. But before that, I would have told you stop spamming. But no one hardly ever spams in here. Just those bots. And they don't even spam, they just say it once or twice. I don't know. I have share it on Discord. I'll check it out. The MACD on Zoom. What do you mean we say monthly? What time frame of candles? About daily? You always got to say the time frame of the candles. What you're viewing on your chart is irrelevant. That could be anything. I could view 1 day on daily candles. I could view a whole month with 5-minute candles. I don't know if that's trading view that gets you guys to say certain time frames, but you're not talking about the candles, you're talking about what it's actually showing you. You are talking about 1 month candles? Okay. Good, I appreciate that. That's an unusual time frame for me to look at, so I thought you were talking about view, and everyone always brings in view, so yeah, that's a crazy looking chart. That makes me want to get more time. But I mean, this was all COVID, so I see upside, but I don't see anywhere near this up here. I hated Zoom, man. I was shorting Zoom this whole time. It took forever. Yeah, we can do yearly. There's yearly candles on Zoom. The bull flag with a full retracement. Barbecue, testing the support, down 1.3. GME 3.5. Climbing. Hey, Emperor. Has it been a while though? Okay, I rolled my Generac short call. I rolled it from this Friday, 135 to 2 Fridays from now for 136. So then my long call, I only have 1 more week on it. And we're gonna try to get back some of your barbecue money. How are you doing that? I don't know if it's the right play on Generac to do that. Like, I could just close where it's at now. I feel like it'll pull back that short call to close. But I'd probably just leave it. Because now it's a nice spread. Max profit on it's now 1800 instead of like what was it before 600 something. So it does end up closing above that price. Which it might. This might keep going. Buys flushing there. Barbecue 3280 did bounce off of that support so far. I did close out of the shares there on barbecue. There's the trading shares. It rejected that 3570, which was an OTC high. Broke this trend. Thought about closing up here when it rejected. Thought about closing it when it broke this, and had to close it low of the day. So we'll wait. We'll wait and see. It could be setting up kind of a head and shoulders up here. MACD flip bearish. Price action still pretty bullish, but the indicators and patterns look more bearish. So yeah, I think 28.90 or 29.89. I think we could still see that as a support, basically 30 cents or potentially 27 cents. Would be the cup? I don't think the whole or the handle. I don't think the whole handle formed yesterday. It's gonna take some time. The fact that we didn't break back out of it yet, and we've used that as resistance, kind of confirms that it's gonna take time. Whereas now we're in a more downtrend. The uptrend here, broke. All right, I closed out of my Tesla call debit spread for 70%. It was just a weekly one, so no reason to try and hope it stays above 250. And I think this buy might have made its handle and inverse handle. Same with Tesla. I'll take some profits on stuff. Yeah, I'm doing. I should close my Beyond call. Hold that. Still looks pretty good. You are? Don't really like the chart, but the news on it's pretty good. Ace is up 10. Barbecue dancing on that low again. I want to get some more iron net. I'd like to see a break out of this. Out of the trading shares, yeah. I have some shares I've not been trading for a few weeks now. But yeah. I'm not as confident about this exit as I was about this one. This one was much harder to do, just because of all the excitement. Yeah. To the upside, if I'm getting back in, I'll want it to find 357 as support. If it does that, then I'll jump back in. I'm thinking more of a dip buy though, maybe 27 cents. Be probably the bottom, I would imagine, but it might just be 30 cents again. So I'm not too far from here. Kind of taking some risk off with the bye-bye baby going on right now. If we hear something on that in the next couple days and it's crap, I imagine the stock's going to dump.
Keeping matter, Exhibit 6 is the first day transcript that we've referred to in Ms. Etlin's testimony.
Okay.
I'll start again.
Okay.
Exhibit 6 in our binder is the first day transcript that we referred to both on direct and cross of the first day hearing.
There we go.
I believe we have a stipulation to move that into evidence.
Okay. Is there any objection to that? I can't imagine there's an
No objection, Your Honor.
Thank you. Okay. Ms. Etlin, I'll try to be very quick. So you testified earlier today that the quote unquote dip was not repaid, and someone told me that I asked a potentially inartful and vague question, so I'm going to ask again. Has the $40 million of new money been paid under the dip?
So we have commenced making payments to the FILO lender in accordance with the terms and conditions of the DIP. However, how that money is applied is up to them. And it's my understanding, they tell us after the fact, but it's my understanding that some of the money that we've paid to them has been applied to the new money DIP, and some of it has been applied elsewhere. So I can't tell you that it was paid first or second, or if it's fully satisfied or not.
Let me ask you a different question. Do you know whether that amount is more or less than $40 million?
That we've paid to the lender?
To the FILO lender, yes.
I believe it's more, but I'd have to look at the budget to refresh my recollection.
I'll move on. So you testified about this 54 million that was provided to the company the Friday or the weekend before the filing, correct?
That's correct, yes.
And I want to be precise about that money. Did they, the ABL lenders or the FILO lenders, write the company a check for that $54 million? Or did they allow the company to use $54 million of receipts that otherwise they could have swept and had dominion over?
So the 54 million was an advance to us outside of formula. In other words, we were limited at all times to borrowing by the ABL borrowing base, and we were not entitled to that money in that week. They actually overdrafted us to give us that money.
Okay. But they didn't wire you the $54 million, did they?
They put it in our bank account.
Okay. And when you say they, was it the ABL lenders or the FILO lenders that put it in your bank account?
They both had to agree.
That's not the question. Who put the money into your bank account, ABL or FILO?
I honestly don't know.
Okay. Now, you testified earlier on your counsel's questioning about the use of cash collateral. Now, I understand that you prefer cash collateral and you like to avoid cash collateral fights, but it's not uncommon for companies to exist for a limited period of time, or in some circumstances, the entire case on cash collateral, right?
In my experience, a multi-billion-dollar retailer, that's not the case.
Well, this is not really a multi-billion-dollar retailer anymore. This is a retailer that's financing a liquidation, right?
Yeah, but it still has the same complexities, Mr. Glenn. It still has, 500 stores, $1 billion in inventory, 12,000 employees, et cetera. So for a company that size, the answer would be no.
Okay. And one of the things that cause you concern is that the lenders would not provide you with cash collateral during this Chapter 11 case, right? They wouldn't agree to it.
I'm not sure that we had even approached them on that topic. I think it was always in the form of we'd need extra money to be able to operate the case.
Okay. And in the case of the ABL lenders, they have consented to your use of cash collateral during this case, have they not?
So yes, they have, in the context of the group deal. Remember, their loans are also intertwined with those of the FILO.
Okay. And on the $54 million, do you know whether the FILO loan balance went up by $54 million over last weekend? Oh, I'm sorry, the weekend before the filing?
So again, I'm not sure who advanced the money. I suspect it was the ABLs that advanced the money. But again, the two of them are bound together in a single borrowing base and a single intercreditor agreement. It's the way these deals are done when a FILO gets added behind an ABL. It's just two different sets of lenders in the same facility taking different kinds of risk.
Understood. But there's a difference between writing a check and consenting to someone else writing the check. And in this case, with that $54 million, it's likely that the ABL lenders funded it and the FILO lenders just consented to it, correct?
First of all, it's going to have to be second.
Yeah, you got to go back a couple of steps on that, I think, because, first it was a likely word, and then, you're not.
She testified that she believed that. That's where that, your belief is that the ABL lenders were the ones that advanced that $54 million, correct?
And I'm sorry, but that's part of the reason I said that, is that because she didn't really testify that she wasn't sure, and that's I think part of the objection.
Well, can we clarify? Do you believe it or not?
So again, Mr. Glenn, I'm going to say that I wasn't sure. If I had to guess, it would be the revolver that did it, and the plain revolver would be the ABLs. But that meant also additional money because of the structure coming ahead of the FILO lenders. So it kind of involves both in a fairly big way, no matter whose cash it is.
Okay. And you'd agree with me, I think your budget speaks to this. You're conducting liquidations for the primary, if not exclusive benefit of the ABL lenders and the FILO lenders in this case, correct?
I'm conducting liquidation sales to maximize value of the estate for all parties.
Okay. Do you have any projections that 1 penny of the GOB sales are going to go to anyone other than the ABL lenders and the FILO lenders after all the other expenses? It's completely relevant. She testified on questioning that the company couldn't have lived off of cash collateral, that would not have been the right thing to do. I'm testing that now.
Well, except for that we're several months into the case, right? And so what matters.
I'm allowed to ask questions.
Wait, let it finish, sir. Speak up.
Yes, temperature down. Yes. What matters according to the motion I read is what was known or knowable on day one. This question is about where we are now. And that has nothing to do with this is the emotion.
I'll withdraw the question and I will deal directly with that. You testified earlier, Ms. Etlin, that in your first day declaration, that $718 million projected for the sales would be reduced by corporate overhead or other corporate expenses, and that would go down to a number in the $400 million range, right?
Approximately, yes.
Okay. So using that number, which you put in the first day of the case, that amount would not be enough to repay the FILO lenders or the ABL lenders, would it?
So solely from inventory proceeds, that's correct, but we're selling other assets, all sorts of other assets, most of which are their collateral.
Right. And those sales of their collateral are going to go to them, right?
Until their liens are satisfied, that's correct. But as I've also previously testified, there are other assets that will potentially, on the high end, well exceed that.
Okay. Now, we've had you testify about the circumstances of this reserve for the Warren Act liability. Now, isn't it the case that that reserve is going to go, at least in some part, and maybe you can clarify this, to the employees who are assisting with the liquidation of the lender's collateral?
It's going to go to the employees who are assisting with the liquidation of the entire business, which is not just the liquidation of the collateral. As a matter of fact, the majority of the employees who are working on the liquidation of the inventory are not New Jersey residents, so it doesn't apply to them.
Okay. You're not paying Warren Act liability claims for anybody outside of New Jersey? Is that your testimony?
So no, because they all got Warren as applicable in other states, which is a 60-day Warren notice, and the stores are taking 90 days to liquidate.
Right. And isn't it the case that one of the reasons that reserve is being funded is that the directors of Bed Bath & Beyond could be liable for that amount? Isn't that one of the reasons why the company decided to fund that reserve as part of the DIP?
Object. Extended calls for legal conclusion.
Yeah, that does call for a legal conclusion, and I guess, maybe the directors could be liable, but certainly the employees would not be happy, I don't think.
Did anyone tell you in words or in substance that the directors of the company could be liable if?
No, I don't recall having that discussion at all. I recall the discussion being solely about attempting to comply with literally being the first test case of a new law.
Now, you testified that you wanted to avoid a cash collateral fight and that a DIP is necessary in a multi-billion-dollar case like this. Have you ever seen a lender succeed in a case of this size, in a case of this complexity, in a case where there's ongoing liquidations of stores, where the lender moved to lift the automatic stay to conduct that liquidation process outside of a bankruptcy court?
Lift the automatic, I'm sorry, maybe I just don't understand your question. Lift the automatic stay in a bankruptcy to conduct something outside of bankruptcy?
Exactly.
You mean kick us out of bankruptcy?
Yes. Or to liquidate and foreclose on their collateral outside of a bankruptcy in any retail company you've ever been associated with.
Well, I've seen lenders attempt to foreclose on their collateral, which resulted in a bankruptcy filing, but I haven't seen somebody take something that was already on file and put it back out.
Okay. Now, you testified before on the cross-examination about your concern that the lenders, after a Chapter 11 filing, could sweep cash. Do you recall testifying to that?
Yes, because if we don't have authority to use their collateral and we're selling their collateral, which is inventory, and turning it to cash, that's their collateral.
Okay, but you don't know whether they had the right to sweep the cash collateral automatically or whether they would have to go to the court before they would be able to do that.
No, that's a legal conclusion.
Okay. Nothing further.
Right.
No questions, Your Honor.
Questions? Mr. Hillman or? No question. Mr. Hubner?
Nothing, Your Honor.
All right. Well, is that when you may sit down? Thank you for
What's the conclusion of all that? Well,
being here to testify today on such short notice.
Thank you, Your Honor.
what was the punchline? What was the what?
All right.
He just proved himself wrong. And
I guess that leaves us to the next step, which I think is closing argument, unless I missed something, or maybe there's some exhibits that have to be introduced into evidence. Or...
No, I think we're okay.
Did he get all his questions answered?
Nothing further from the debtors before closing. Yeah.
All right. So then, in other words, I don't recall everything that was in the exhibit books being admitted into evidence.
That's correct.
So, but that's the way we're leaving it.
Correct, Your Honor.
Okay. All right. All right. So then, I just spoke to Binder. We're gonna go to closing arguments, and are you prepared to do that now? Do you need a few minutes, or?
If you wouldn't mind giving us a few minutes, I think that would be helpful.
Yeah, because I'm going to ask for a few minutes after the closing arguments are done to gather my thoughts and do what I have to do as well. So
Bullish.
why doesn't everyone take a few minutes?
In what way?
Maybe everyone prepares their whatever
fundamentally?
their closing statements are. And,
Technically?
that way it'll be only that one break and the break by me.
Nothing happened.
Thank
He
you.
just kept asking questions and she answered and then they concluded. I don't know. It seemed like he got the answers he was looking for and the whole point to go to trial was debunked, or not debunked, but pointless.
Well,
you know,
Mr. Glenn, you said
10 minutes.
10.
Yeah,
Yeah. So why don't we say, because lawyers always estimate short, why don't we say 3:15?
He was digging.
The meaning.
Right? He was just digging for something and I think he came up short and so it was over. Unless there's something else. I don't know. Cameron, what do you think? Did the judge get some sort of fraud from that? From the other side? Maybe he just couldn't find enough evidence from her testimony or anything legit, so there you go. Yeah, something like that, Daniel. Very slow to form this handle. All right, Tasty. Yeah, I know. Glenn just kept talking about liquidation, like it's not trying to get restructured. They just wouldn't get over that. I mean, if bondholders get the short end of the stick here, he wants to make sure he at least put up a fight, or he could get sued for malpractice. No matter how good or bad he is on the stand or at the podium. Yeah, none of this matters to us, Tasty. Just kind of entertainment, I guess. Bye Bye Baby auction is today. That could actually affect us. The Bed Bath, once Overstock won the final bid, I think that's pretty much it for us on that asset. Bye Bye Baby's last chance, but we're not going to hear about that. Not today, I don't think. Yeah, I mean, you don't win the favor of the judge if he feels like you're wasting his time at all, that's for sure. It seemed like he had some credible evidence that caused him to bring that up. But it wasn't enough for him to be able to prove it, or it was proved wrong. But realistically, he didn't call for the trial. The other guy did. He came up and he's like, I don't want to be questioned like this. I want a full trial or whatever. That was awesome. Yesterday. Like, that's enough of this. You're undermining us and all this, and I call for a full trial. Things got heated. GME, yep, 4 1/4. Archer's calling for 29.5 by next Friday, so there is always that. Up 4 1/4 today, not too bad. Eyes coming down. Yeah, so far RC's the best trader out of all of us. And he's literally directly fighting against the shorts, because when he bought barbecue, the shorts directly attacked him. Stock. Because he bought it right here. We had the pump on the news, and then it proceeded to dump for months and months and months. To multi-year lows of $4. This whole run up was nothing to do with RC buying. But he was able to actually get out with a profit, which is epic for him. Like, rug pulled on you, whatever you want to think of it. He traded it well. Eyes coming down there. Why did my parents love me? Yeah. How are you gonna piss off Marantz if you can't comment in his chat? You're banned. Working in the office for the birds. Peace out. I'm back up on my futures. I'm gonna put in a stop order on it. It stopped out, but I don't want to go back negative. We could still see low of the day, potentially a break of that low. We are now in power hour, so I sell on barbecues. Probably the worst time to sell, because it's basically low of the day. But looking at a longer time frame, it won't matter too much if we do break through the support. It's 32 cents. It's not a whole lot of difference really. What, like 7%? Works at Costco. Pretty good job. Good benefits. They give you shares if you're high enough up. Yes, everyone should have exited when you did. Pretty clear. You can always get back in. Oh, timeout. Put you in the timeout corner. Here comes SPY. Handle confirmed. Low of the day test. See if we bust. Front runners trades. Super good as long as lunch. He didn't ask for trial though, Daniel. It was the other side. They were losing their patience with them accusing 6th Street and whoever else on that side that they were hinting at them committing fraud basically, and they were just querying all these interesting, like, questionable things, and they didn't like it. So he was like, it wasn't Glenn that actually, he didn't want the trial. He didn't know what he was doing. He didn't have enough evidence for anything. He was just poking at them, and they said, all right, let's have a trial. They called his bluff basically. All right, there we go. SPY, letting loose. Yeah, they're just taking a little recess. We'll be back with their closing statement, so I think that'll be it for Bed Bath. It was the plan. It was always the plan. He had nothing but his lunch when they got there. Yeah, you could tell when he said, all right, I want a full trial. It was like the party. Glenn was like, well, we don't need that. We just, you know, this and that, and I don't know. He's like, no, we want it. Let's do it. Oh, okay. Alright, I'm gonna wait. Don't just wick all the way back up there now. Consolidate down for a bit. And then let's break through that low. Do it. Oh shoot, I totally forgot my options. Oh, my options, I was green on them. Didn't get my exit. Forgot I even had options. Maybe it'll still come down. Dang it. Just looking at the future, forgot about this option. The small amount. It's just nice to have green day on the daily buy options. There we go. SPY, you got a big bounce. Look at that wick down there. Holy crap. Get stopped out of my futures here. Well, maybe that was the test. I don't know. I'm gonna have to test the breakout, really, the breakout of this channel. Yeah, it's gonna stop me out. Dang, I wish I didn't think about my options. Second fail today on the options. First with not doing a market order. Defaulted to limit. Guys, what in the world? Weird. Yeah, that was it. It was just a retest. The market's pretty clear though, on this being a top now. Big bounce on SPY. Kept taking the calls in that low a day. Holy crap. It's going all the way back up to VWAP. No shouting. They worked it out. Then couldn't find much the evidence to prove his point, and so he just stopped. They do those emojis. Yeah, GME might be today might be a good exit on it. It's up 4%. I don't know if you're up on it. AMC pop, yep. All Sony. AMC's up 2.2 there. .4. Let's see if it fills this gap to 4.5. Today and tomorrow. $10. Probably sold BBBYQ for 20.5 million. Can't pay bondholders for 54 million. Money's gone. It's Chinese.
Here, I appreciate that, Colin. I might have primed you sending my newsletter, so thank you for the.
This chart you're showing, though, is how I like to think of this scenario. So
I love this.
This looks a little more confusing than it really is, but I'll explain it, succinctly here. So basically, the way to think about this is that the current economic environment has basically what's called a bimodal distribution is the way I like to think of it. So you've got, say, an 85% chance of a soft landing in our baseline scenario with a 15% chance of a hard landing still. Now, what happens in a higher for longer scenario where the economy is actually much stronger, you actually potentially get this sort of whipsaw effect where the higher they are for longer, the higher credit risk is across the entire credit system. And so that weirdly will increase the risks of a hard landing going into 2024.
Yeah, AMC's kind of popping here. It's up 3% with some volume.
You actually get this sort
They
of
have something
higher risk in the scenario
court
that
news?
you're laying out where, yeah, you're getting
Oh, I guess just that the court's going on.
But that big bounce in the trampoline is going to create other risks in the
Court
economy,
hearing
especially coming
tomorrow.
from the Fed, keeping credit markets really
It's popping in anticipation of the court hearing.
Are those risks
I don't know. Maybe FTDs or something. Who knows?
in the bounce back scenario? Would we need to see
Did a little wiki.
start going higher, or maybe even a precedent with jobless claims going back lower, or maybe PMIs going up? Would we need to see something like that to then force a mistake from the Fed?
That's absolutely the scenario that the Fed is most concerned about. So they've been really clear about this, that they do not want to repeat a scenario like the 1970s or the 1940s, where you got this sort of double bump in inflation. The inflation rate started to come down, then the Fed kind of
They're still pulling in a lot of revenue.
off the language, and then they got whipped.
But yeah, they got stuck there.
Reared its ugly
They were
head again,
defaulting. You could hear
whipsawed back,
Ollie saying they
and then
kept
the Fed
defaulting
had to then backpedal
and
again
had to get bailed out, more or less.
That's the scenario that they're most frightened of. I don't think Powell is going to make that.
I'd say they had a hard time selling Baby. She said talking about the whole thing. Couldn't find a seller outside of Chapter 11 in time. Again, because they were defaulting.
Anyone who's ultra conservative is going to be clipping 5.4%.
So they've done really well in bankruptcy. I think they're like maybe turning a profit.
For the ultra conservative investor, but it creates this very uneven risk for the more aggressive investor.
I think we've heard there's multiple bidders for Baby.
Credit risk where you then have the
And there were like 3 or so for Bed Bath.
Other higher risk markets.
I don't know if the other ones were higher or not than Overstock. But
Do you see the Fed still their priority? As you said, that their worst nightmare basically is this type of bounce back, kind of unhinged inflation potential. But then he didn't hike. So, I mean, it seems like we could argue that at least over the last month, he's been more concerned about regional bank fallout.
Are earnings supposed to be tomorrow on AMC? I don't know. Doesn't look like looks like some kind of market maker or some sort of FTDs or something. This is not a normal run up for earnings. Or some news came out.
Gosh, I mean, it's hard. They're not getting a lot.
I don't know. AMC just for whatever reason it always bumps on $4. Like that might all change with their court hearing tomorrow, but it's been pretty consistent. No matter what the TA looks like, $4 has been a good buy for since what, December of last year. It continues to bounce in the support, given it's making lower highs for the most part.
They're basically priced to 5%.
But
well into
got a gap fill up at $4.5.
The Fed is more or less.
They might fill it right.
Yeah. Well into next year, based on what the market expects right now, which I think that's probably exactly where they're going to end up. So, it's weird though, because inflation is coming down. It's not coming down as fast as they'd like, but they've sort of reached this moment in time here where I think they're starting to feel really comfortable with where they're at. And the risks are starting to sort of move, especially when you start to look at things like the rate of loan growth and credit growth, and of course, all the stuff going on in the banking system. They're trying to sort of thread the needle here, where they don't want to start to raise rates so much more that they really increase the probability of that red scenario that I laid out earlier.
Colin, let's say that these risks don't come to fruition and that we are able to have some stability in the economy without stoking inflation again. What do we look for to confirm that? Can we trust the stock market? Is that the message that's being sent by this? Or what do we look for? Something new in terms of credit spreads or conditions? Like, Because right now it seems the stock market is the most powerful signal, or at least has the most conviction about that situation happening. Do we trust it?
Yeah, I mean, personally, I would look at things like credit spreads and especially the breadth of the market rally. So right now, I mean, the
He's not really waking up with this, but it is up 4.5.
It's largely driven by tech. The market cap weighted indices are beating the pants off of anything that's equal weight or even the Dow.
Barbecue just hanging out with that support.
Some increasing of the breadth of the rally here before we can start to say all's clear, because there's still a lot of unevenness here. I mean, you look at things like the regional bank index, that thing has barely bounced at all, which is, that's sort of a signal that that part of the market is still very, very skeptical of everything going on in the macro economy. So I'd like to see the breadth of this rally increase, and that
Little babies
give
want
you a
towels.
signal that, hey, yeah, things are starting to clear up. But definitely, I mean, I think the biggest signal
No, you didn't miss anything on. They're gonna do their closing statement here in a little bit on Bed Bath.
absolutely have
Hey,
an all clear.
There it is.
We are back on the record, and I neglected to ask one factual question about something in the papers of the debtor that I had highlighted for myself, because I don't recall hearing it in the testimony, but maybe I missed it. Is that it's really right in the beginning in paragraph 2 that the second to last sentence is about actual cash results have been posted publicly for weeks.
Jerry, they paid down of their
I
$5
heard
billion debt.
testimony
They
that
paid
they were
down
provided
to like $1 billion.
the
So
lenders
yes, they're in a much better place.
and to the
That's
creditors
what bankruptcy
committee after it was
protection is
formed,
for, is to try and get
but
into
I
a better
wasn't
place.
sure if that was what publicly meant or if it was referring to something else. I think it might be, yeah.
Good afternoon, Your Honor. I can respond to that. Hi, good afternoon, Emily Geyer from Kirkland Ellis on behalf of the debtors. I'm just glad to be able to stand up finally and have a moment up here to speak about a couple things. That is that's correct. They were not publicly posted. Let me clarify that. I'm happy to submit a revised objection to clarify. They were posted to the various parties and interests that have access to those materials in these cases. Had a party requested discovery of those, we would have happily provided those. So not publicly posted, but available starting as soon as the week was over.
All right, and so that's what you just said is kind of the next sentence. This wholly non-controversial information would have been readily available to movement at any time.
That's correct, Your Honor. I think there was the distinction there is just simply what we view as like the public data room being the committee. The U.S. trustee has access to this information, all the various lenders. So that is information that we would have made available, but we are happy to correct that on both either on the record or by submitting.
Well, I think I'm going to deem it. I'm going to just deem this to be the results were provided to the lenders and the unsecured creditors committee for weeks. Is that the?
That's perfect, Your Honor. Thank you.
All right, that's what I thought I heard in the testimony.
And there's no evidence of the rest of that statement, so.
Well, the publicly one.
Publicly,
Right.
or even available to us, or even available to us. I have exhibits that show that they weren't available to us, and I didn't go into them because they weren't put into evidence on Ms. Etlin's testimonies. That's not in the record.
Okay.
Okay.
All right, you can start.
Thank you.
Mr. Glenn.
Thank you. Thank you very much for your time, Your Honor.
Thank you for your presentations, all very professional.
Thank you. And we would have liked to have been here today with full discovery, with complete access to all of the company's books and records so we could verify what has been presented in court today. But we're proceeding with what we have. And what we have is a narrow question before the court. Okay. The question is, under Rule 6003, the court's inquiry on the first day of a bankruptcy for the incurrence of DIP financing is very limited because There's no creditors committee appointed yet. We showed up after being hired after a few hours. There's no one there to protect general unsecured creditors other than the court and the debtor, who has loyalties to various stakeholders and not necessarily to general unsecured creditors. And that's why Bankruptcy Rule 6003 states that the only expenses for the incurrence of debt that the court can approve are those that would avoid immediate and irreparable harm. So what happened in this case? The company, not at its own insistence, this is not necessarily the company's fault, because the company, as Ms. Etlin testified, wants money. They want money. No one is suggesting that a debtor shouldn't get money. That's not the inquiry in a first day of a case. I'd like someone to give my debtors $1 billion. Okay, obviously, debtors want more liquidity rather than less. And having a dip might be prudent. Having a quote unquote need for a dip might be important. But the expenditures and the incurrence of that debt is limited under this bankruptcy rule only to the expenses that would cause immediate and irreparable harm. Now, I asked Ms. Etlin a series of questions going to that, and she admitted, at least in some of the categories, and the transcript will speak for itself, that the deferral of those expenses did not, in fact, cause immediate and irreparable harm. Okay, the court in the first day transcript asked the $64,000 question. You asked, Your Honor, does the company need a $40 million dip, and why now? Those were your questions. So what you were told by the debtor is that there was a $30 million liquidity hole and that they needed to fill that liquidity hole up. And if you look at the numbers, that liquidity hole was caused by the WARN Act and priority claim reserves and the payment of the rent, which they did not in fact pay in the first week of the case. And that wasn't disclosed until the wind down dip budget was published.
But I'm sorry, I have to interrupt you, but wasn't that all, that was what was learned after, I'm not sure I agree at all that Ms. Etlin did say that there was any irreparable harm at all. It was a post facto. And is that the way I'm supposed to analyze it on that day when I'm told that there's no money forthcoming? There's no money in the debtor and there's no money forthcoming until, unless this is approved?
Well, you're supposed to rely on those representations, okay? And if those representations prove to be inaccurate, as opposed to, okay, I understand this question. You may not know, the company may not know what money's coming in. Projections, the stuff that deals with external stakeholders, that is a different category. And I'm going to get to that. But this, Judge, is the company telling you, representing to the court, they needed to pay those expenses in week one. They must. They had to fill that hole. That's what they told you. That's not an external factor. That wasn't out of their control. That was something they told you. They said that's what they needed to use that money for, and they didn't do it. Okay.
Well,
and so
didn't they say they needed it for, among other things, the reserves and to pay other expenses, but also to gain the confidence of the employees and the vendors and the ability to at least try to sell as a going concern?
They did.
Whole or in part? Did she testify to that?
She did, but that's not the relevant inquiry. The inquiry is not whether that's going to inspire confidence. Okay, we all want to inspire confidence. That's a laudable goal. Okay, but the legal standard is immediate and irreparable harm.
Well, that's good. Okay, I'm sorry, I didn't finish it. And then that's what she said was the immediate and irreparable harm. That's the testimony, and it's in the declarations.
That's conclusory, because what she didn't testify to is if that wasn't paid, what would have happened, right? You know, they didn't pay, they paid the rent 2 business days late. Okay. That was nothing to them, nothing. Okay. The Warnock Reserve, yes, they wanted to inspire confidence in their employees. Okay. They didn't pay that in the first week. Okay. They didn't fund it in the first week. Employees haven't received it. Okay. So the money was in the system. Okay. We walked through the projections. That money didn't have to be paid on day one, week one, didn't have to be paid on week two. It had to be paid when the employees were terminated. And if you took out the $40 million, the money was there. It was there. And so the failure to pay that money, as a matter of fact, did not cause the company immediate and irreparable harm.
But I'm sorry, maybe I'm not being clear on my question. Although I know you used immediate and irreparable harm repeatedly in your papers, and there's no quarrel about that. But am I supposed to judge immediate and irreparable harm after the fact, or based on what's presented to me?
Based on what's presented to you. And that's why this is newly discovered evidence after the fact that allows you to reconsider that decision.
Okay, I understand.
If I tell the court, you know, Judge, this business is going to shut down. It's going to shut down if we don't pay landlord X. Okay. And then I pay landlord X 2 or 3 weeks late. That casts some doubt on what you were told on day one. You are allowed to rely on the debtor's representations. We are allowed to have the court reconsider those matters if those representations prove to be inaccurate. So what we have here is, okay, a $40 million dip, okay, a dip of $40 million, one draw on day one. Okay, it's not a dip that goes to week 2, week 3, week 4, week 5, week 6. One draw. Okay, and Ms. Etlin testified that she doesn't even remember whose idea it was to have the one draw. And what happened in this case is that the lenders, okay, I think they took advantage. They perceived what you perceived, which was they had a lever. They had a cudgel where the FILO lenders, that is, could roll up $200 million because this need was presented to the court. Okay, and there was some colloquy during the first day hearing, you know, and I think Mr. Sussberg originally thought that it did not have to be approved on day one. Mr. Hillman insisted that it must be approved on day one. And so Your Honor did it based on those representations. And you know, no one blames the court for what you did. I mean, the courts do what you did all the time. But this is not a $300 million dip. This is not a dip that needs to be used for the complete span of the case. Ms. Etlin said, okay, this is a multi-billion-dollar company. Okay, $40 million of new money for a multi-billion-dollar company, by her testimony, is a rounding error. It's a rounding error. But what was the effect on us, on the general unsecured creditors? Okay, the debtor doesn't know. And I think that was, you know, a really critical concession by Ms. Etlin, because she's very focused, and Ms. Etlin is the best. Okay, you know, she is literally the best. No one's here questioning Ms. Etlin's credibility. She's the best. So let's get that out of the way. But Ms. Etlin, what she said was, hey, I need to protect my employees, right? I need to start these GOB processes. We looked at the $718 million that was projected for the GOB sales. It said net amounts. There was no disclosure of any further reductions from those amounts. So a reasonable person looking at those numbers could conclude that $718 million would cover the ABL loan and the FILO loan. So again, the roll-up, if that were the case, if those were the numbers, wouldn't really affect us, okay? We allow roll-ups all the time in cases where the lender is demonstrably oversecured, because there's no real economic effect on the ultimate recoveries. What there is an effect on is we can't restructure that debt using the tools in 1129. We can't do it. And the lender bargains for that, and we bite our nose, bite our face to let that happen, because that's the cost of a potential reorganization. What we have here, okay, is, and I'll be candid here, it's a liquidation with a Hail Mary of a reorganization. And God bless the debtor. I hope they come through with it. Maybe they're going to find more money than we project, but this is a liquidation. It's a liquidation that started on day one. The budget on day one contemplated an immediate liquidation. And so what is the consequence of that? The consequence of that is the collateral that we're dealing with is their collateral. There's no evidence in the record that that collateral would cover anything more than the lenders. So
anything more than,
I'm sorry, the secured lenders and the secured lenders debts. There might be other stuff out there. Who knows? I got to deal with the information that I have today, because if I waited longer to see what happens at the end, I'm sure they would slaughter me even more than they're trying to today. But what was the cost of this? Okay, to give the employees their reserve, 20 some odd $20 million, more than half of the debt. That's in the record. To pay the rent in the first week that was ultimately moved. That's really the nub of that $40 million. Okay, what did we pay for that? Okay, we paid for that with $200 million of notional value given to the secured lenders to liquidate their own collateral. Okay, what this really is the employees are being held hostage to do something for the secured lenders, to get them their money. But where does that leave us? Where does that leave the general unsecured creditors? We're paying a $200 million tax on day one for $40 million that is likely now repaid. So going back to the irreparable harm standard, there is no evidence, at least no clear-cut evidence of immediate and irreparable harm that was presented to the court that's now been disproven, with the deferral of those expenses. And I venture to say, if Your Honor looks at the charts in the brief, which are in the record and in evidence, and you look at them and you say, okay, we take the position, and there is a issue of fact about that, for which we don't have discovery, that the company did demonstrably better than the DIP projections. I would be astonished if we waited 4 days, 3 days, 2 days after the first DIP hearing, when those actual results that came in, if for them to establish an immediate need, irreparable harm for the DIP financing. Okay, and so what the testimony is Ms. Etlin didn't know, that she didn't know, certainly with precision, what happened over that weekend. Again, we are the ones that bear the cost of them moving forward on that day versus the next day versus the next day. But even if the court looks at the budget that they presented, okay, which now looks like a pretty much a worst case scenario, they still had enough cash to live, not forever necessarily. Okay, this is their budget. Okay, so the question is, could they have waited 2 weeks, 3 weeks for the dust to settle, for general unsecured creditors to come in, to give the company a real bottoms up analysis like the creditors committee is supposed to do in these cases? I venture to say the outcome would have been massively different. So where does that leave us? Certainly, if Your Honor looks at the actual performance, there was no need for a DIP. I went through that with Ms. Etlin. The ABL lenders would have been repaid later in time, but again, there was still no need for a DIP. The $54 million was not money that the FILO lenders loaned. They consented to it, and God bless them that they did. They didn't want a liquidation. They were never going to move to lift the automatic stay to liquidate their collateral. I asked Ms. Etlin that question at the end because I think it's important. She wanted to avoid a contested cash collateral fight. Perfectly valid thing to do, okay? But the real question is, what alternative did the lenders have to liquidate their own collateral other than through the auspices of this court without a DIP when there was cash collateral available to pay the expenses? And I think what you hear is Ms. Etlin in 30 years has never seen that. And I'm sure Your Honor would not let this company shut the door over 3 weeks if the lenders were being unreasonable with their cash collateral. So where does that leave us? It leaves us with a budget that was approved and presented with the court the day before the second dip hearing. The night before, I think less than 12 hours before, Your Honor, held the hearing to approve that. You have the creditors committee standing up in court and saying, we cut this deal with the lenders. Okay. And what they said to the court was, we wouldn't have done this deal but for the roll-up. So there's a nexus between the roll-up and the resolution of the disputes with the lenders, because but for reconsideration of the first day order, there was nothing else they can do. Now, that necessarily is not the end of the inquiry. It's not necessarily doomsday for us, okay? What's doomsday for us is after that second dip hearing, when I asked the court for, where I informed the court that we were going to use that additional time period to see for ourselves what our fiduciary, the creditors committee, was doing. And, you know, we were gratified to learn they did the perfection analysis correctly. But then this came up, this wind down second dip budget came up, and it was startling to us. It just was, because it showed so much more cash than what they originally projected to generate. And the actual proves that they never needed the dip. And those are just the numbers. So we spent the next 10 days working, getting informal discovery from the debtor. Ms. Etlin graciously sat for 2 interviews with me. And the one that sealed the deal is the one I asked her about, where, you know, if we had become convinced that this roll-up was meaningless, right? That there was enough value from the collateral such that the unencumbered collateral was still left, we would never be here today. Judge, I've been doing this for 27 years. This is the first time in 27 years that any of my clients has ever moved for reconsideration in any bankruptcy case, in any other litigation. Because what we concluded was that that moment in time where there was no or little due process for that first day was case determinative to us. $1.5 billion, $1 billion of bonds. Okay, we talk about the dip lenders' money and the need for them to pay the employees. How much wages has the billion that we've paid, the other unpaid trade claims generated? And there's been no one here for us. So if you look at the standards, Judge, for Rule 60B, okay, Mr. Huebner asked Ms. Etlin, you know, has there been any evidence of fraud, misleading? No one is suggesting that. And if that was conveyed by anybody, we certainly didn't mean that. But I think a mistake was made. I think there's been newly discovered evidence that warrants a look at this again. And frankly, what do we want? We're not asking to subordinate the dip lenders $40 million of debt. Okay, I think under Swedland, that is what is actually protected. We can debate whether on a motion for reconsideration, 364E even applies, because by its terms, it doesn't. But what it does not protect under Swedland, and Mr. Stoltz reminded me to tell you this, that his view is that under Swedland and the panels he's discussed on, that the understanding is that it only protects the new money, and that's how we read it. It's the roll-up.
What was that?
I'll strike that. Anyway, so they don't have protection for their pre-petition debt. They didn't give the money to the company for that pre-petition debt on a post-petition basis. It's the roll-up. It's a roll-up. So they can get their $40 million back. The roll-up should be struck. And we should move on with the case in the way we think it should have been handled on the first day of the case, or the roll-up should be reduced to a point that is appropriate for this case. And I don't think there's any amount, but that would be something the court can do. I'm not aware of any precedent for a 5 times roll-up. Mr. Hillman suggested to you that this was more of a, I think, 2 or 3 times roll up, given that $54 million, but they didn't give the company that money. That money just was advanced by the ABL lenders. So under Rule 364E, you're allowed to reconsider this even if they were in good faith. Under Swedland, if 364E does apply, only their new money is protected. That's it. And so what we're asking the court to do is not necessarily to blow up the dip in toto.
But isn't your motion asked to vacate?
Well, I don't know, I think it asks to vacate it, but I'm making clear that we're not asking for you to vacate it in toto. I think what you're allowed to do, I don't know if you can. I don't know what you're.
That's a hard one.
It is a hard one.
When you talk extraordinary.
It is extraordinary. It is extraordinary. And as I said, I wouldn't ask for this relief if we didn't think it was the difference between getting nothing and something meaningful. That's why we're here. And the unfortunate thing is, I said to the court, and Mr. Sussberg actually took me up on this. He said, we could talk and see if there was a way to resolve this, to give us some assurance that the roll-up either didn't hurt us or won't hurt us enough to fight about. I'm still waiting for that evidence. Ms. Etlin didn't testify about it. She testified that she didn't even really consider the effect of the roll-up. And how is that significant? Under I think, one of your decisions, Judge, to have a roll-up and to incur this kind of financing, you have to take into account not just one creditor, not just one creditor group, but all the creditor groups in toto. And I think the record is completely bereft. There's zero evidence that anybody before that roll-up was put to the court put any consideration into what that roll-up meant for the recovery of general unsecured creditors.
Well, I do.
Okay, but you're not the debtor, and it's the debtors whose judgment was proffered to the court. It's their judgment, and what you heard from Ms. Etlin.
Context I did. That's the context in which I considered it, in that I was told it was absolutely necessary and the product of months of negotiations with numerous parties, and was the best they could do. And that's what they needed to try to sell the debtor as a going concern in whole or in part, to keep the employees happy, to keep the vendors happy. And I guess my question to you is, what has changed? What is different about that now? Where is the difference after we've had a full day of testimony, in which I know you don't like that I didn't give you discovery, but I gave you some discovery, and I think you had the ability to get discovery before this on your own without me. But that's a whole nother thing. I just keep coming back to the whole Rule 60 standard and your irreparable harm argument, and it just seems to me that everything comes down to what was said in the papers, that you can make now you kind of, and in all candor, you've backed off a little bit because you said, you're not alleging any kind of fraud or misleading or anything like that. And I appreciate that. I think
in the papers, in fairness, Judge, the papers never mentioned fraud. It mentioned mistake and newly discovered evidence.
Not fraud. No, you're right. Not fraud. That it was misleading, and that I wasn't told things that they knew or should have known. Right. So what is you're a 27-year lawyer, at least. When somebody says you don't say something to a court that they knew or should have known, what does that sound in?
I think barbecue's popping up there.
It means that they could have done more to give the court more information.
That's what maybe.
It sounds
that's what it means.
And omissions can be fraud, and that's what it sounded like to me. That's why I said it.
Okay.
And I think it was said repeatedly in the papers and even today, known or should have known. That's in 27-year lawyer. That's in every fraud complaint.
Well,
right?
what I'll say to the court is this: Ms. Etlin told us that she did not have the cash receipts until after the first day hearing, just as she testified here, okay? But then she said, well, you know, I had the sales results before that, okay? And she didn't tell us in that conversation before we filed the papers that she needed other information to sort out what the actual number would be, okay? She said that she used those words, and that's why we filed the papers. So I don't think we have to hit that burden. And if we got that wrong, and Ms. Etlin, you know.
But I'm going back to this. I'm going back to, let's get past that a little bit. But I'm saying it goes back to your irreparable harm thing. And am I supposed to decide the irreparable harm with the benefit of hindsight?
If there's newly discovered.
It's always, right? Irreparable harm is always potential. It's never that it's right there, that the irreparable harm is right there, and you know without a doubt it's absolutely going to happen. But in any event, you decide that on the basis of what is going on at that time, as opposed to, well, later on it turned out that, you know, Bed Bath & Beyond didn't need to have a DIP financing, even though they were hemorrhaging cash. They had $3 million in the bank the day they filed. They were in default 6 times on their loans. They, you know, all those things. I don't know. I think people were concerned about Bed Bath & Beyond and its viability deeply. And I was even concerned as just somebody who was reading about it in the paper, because it sounded like they were in a lot of trouble. And everything I heard here was that they were even in more trouble than I knew or I thought.
Every debtor, at least almost every debtor that I deal with, goes into bankruptcy with issues that create concerns. We're here because a company is in trouble. Maybe this one was in deeper trouble than others, granted. But again, concern is not the standard. The standard is immediate and irreparable harm, okay? And the only evidence you were given of immediate and irreparable harm was that there was a hole in the first week of this case, a $30 million hole that needed to be filled. That's what they told you. You are 100% entitled to rely on that representation. And I am 100% entitled to come back to you and say, that representation was wrong. Maybe it was a mistake. If it was a mistake, you're entitled to review it under 60B. If it's newly discovered evidence that we found out about afterwards that would have changed the calculus about whether what you were told was actually true, 60B applies. And I think that's where we're having this debate, which is, I'm not disagreeing with almost anything that you're saying. It's appropriate for you to be concerned, okay? It's appropriate for you to take into account how the world views a debtor before your honor. It's appropriate to look at a company like this and try to preserve and protect it. Okay, there's nothing wrong with that. But Rule 6003 says that on the first day of the case, which is a special day of the case, unlike any other, and in this case, outcome determinative, you're only supposed to approve expenses or financing for expenses to the extent necessary to avoid immediate and irreparable harm, okay? Now, we also wouldn't be here, right, if the cost of paying for that allegedly immediate and irreparable harm was $40 million, okay? What you were told, and why we're here now, was that the cost of that immediate and irreparable harm that they represented was to charge the general unsecured creditors $200 million. And so this is extremely prejudicial to us. And I think if you look at it this way, if you look at it that if you balance the prejudice to the DIP lender, the prejudice to us, the company's actual prejudice if those expenses had been deferred, you have catastrophic, potentially catastrophic result for me. You have a DIP lender who's going to get the same recovery either way, and you have a debtor that's going to be able to pay all the expenses that it needs to pay anyway. We're here because this hurt us. And we have no other recourse after the first day of the case to do anything about this.
Well, what about the challenge? And what about discovery from April 24th to now?
So
what about that?
What about that, Judge? I mean, the challenge was to determine the viability of their pre-petition liens and claims. Okay, Mr. Hillman told you on day one that the roll-up was final. There was nothing left to challenge at that point in time. That was not preserved. And so, we have no.
You say the make whole premium and all that, all those other interest rates and all that. That wasn't part of the challenge?
That was part of the challenge.
Yeah.
But the challenge in the technical sense of the term wasn't for the roll-up because that was final on day one.
Right, but
I mean, if it's not final, I think that if it's not final, then you're entitled to reconsider everything. Then you're not under the 6B standard, Judge.
No, believe me, you said you want me to reconsider everything. That's what the order says.
Yes.
That's what the motion says. So you're already there. You don't need anything more to get there.
I'm just talking about whether it's a challenge under the terms of the DIP order or a motion for reconsideration or to vacate the DIP. And it's definitely the latter, not the former.
All right.
Thank you.
Thank you. Who was there? Okay. Bye.
Good afternoon, Your Honor. I'm Lake Ira from Brooklyn else on behalf of the debtors.
You put the microphone closer to you because it's a recording from that happened.
How's that, Your Honor? Oh,
see?
Wow.
It's
It's
different.
much better. Okay.
Yeah, okay.
Now we can get started. Okay, Your Honor, I'll try to keep this brief because I do believe that Your Honor hit the majority of the points that I was going to raise. You know, among these specific issues that you raised, Your Honor, I think that the immediate and irreparable harm, just to speak in response to the points that were discussed, on the immediate irreparable harm, it is hard to tell based on this record what is immediate and irreparable harm, if not the timely payment of obligations, if not the maintenance of employees and keeping the stores open, if not the pursuit of a going concern. And I think what Your Honor was getting at is that this inquiry about immediate and irreparable harm is ex ante. And how does one reach a conclusion about the movement's motives from day one without ascribing some kind of bad faith or some kind of intent there? So if there was good faith intent, good faith belief, as Ms. Etlin reaffirmed on the record multiple times today, even regardless of what the changes were in the budget or the actuals, that the DIP need was there, as long as that good faith held belief is present, I'm not sure that you can merely reach a reconsideration or relief from final judgment on the basis of it was a mistake. Now that we see that, you know, the debtors failed to get the money out the door because of banking issues, it was a mistake. And now that we see that, you know, we couldn't get an account open to adequately, you know, reserve the funds in a specific reserve account instead of just below the line as sort of cash waiting until it had its bank account ready.
Well, he's saying 60B says mistake.
Right. 60B says mistake, but mistake is evaluated at the time that it occurred. But more importantly, there was no mistake. And perhaps that's the easiest way to put it, is the substance into the inquiry, is there was no mistake, legal or factual. The testimony really elucidates how frivolous this motion was when you start week one with $3 million after you had to receive and disperse $54 million in critical obligations just to get to that point. There was an uptick of a mere $11 million in sales, 4 million of which Ms. Etlin noted on the record she either was or should have been aware of at that time, but not the ultimate conclusion of how much of that 4 million would actually be seen by the debtors until after the first day hearing.
What about that 54 million? I think the argument is that that was really no skin off the ABL lenders back. I mean, the LIFO lenders back because, you know, it was just in there anyway. And
Right. Well, Your Honor, I think the most important point on the 54 million, aside from how critical it was to actually get that funding and disperse it, is that the consent was required of ABL, Philo. They both had to consent to that payment. So we absolutely recognize that it is the Philo effectively, and I think we said this at the first day, effective, and Mr. Hillman, I believe, said on the record, they effectively loaned $54 million before a dip, before we even filed the cases, which is how, you know, in most ways you would really frame this as a 2-to-1 dip. They did not want to loan those funds in advance of the filing. We absolutely needed, because we were facing shutoff notices and the like, as I believe Ms. Etlin said on the record today.
The implication is that 54 million really wasn't much of anything that would justify a $200 million roll-up. I think that's the argument that's being made.
Yes, Your Honor, without those funds, we wouldn't have been able to file Chapter 11, much less keep stores open, much less pay our rent. It would be the end, the ceasing of all operations. So I think you can trust Ms. Etlin when she says that those funds were absolutely necessary to keep the lights on, freight moving around. And I just want to note briefly on the disbursements front, there was this idea that, well, it's not immediate irreparable harm. You know, you made a mistake. You could have just waited a couple of days to pay your landlords. Well, Your Honor, I'm sure that we both know that landlords are not going to sit around and wait for their funds to come. They absolutely needed to see and wanted to see and actually requested to see the budget that had their line item. This was very important to show those timely payment of obligations. But moreover, it's in the bankruptcy code. Section 365D3 says on May 1, you owe the landlords those funds. And so we had every intention, of course, to satisfy our legal obligations while in Chapter 11, because that is the price of admission. That is the price of admission to Chapter 11 protections. It's the same reason why the DIP was constructed the way it was, and the notice about what the irreparable harm meant to the debtors, which was not just merely, can I keep the lights on, which also satisfied that standard if that were to be it, but it was the only path to preserving a going concern, the only path to ensuring those immediate funding of operations, and to the payment of all of these various administrative expense and priority claims, without which there is a question to be called on the first day whether we have a right to be there. So that was the debtor's most important, negotiated benefit on that first day. We fought very hard for those reserves to be funded. I hope that it's been made abundantly clear those funds have to be paid ahead of general unsecured claimants. And so without reserving them from the DIP liens, there is no recovery to the unsecured claims before that. There was also.
What about, I think Mr. Glenn was saying, not really looking for the relief that we asked for in the papers, but something short of that.
I don't think I even need to ask the question, Your Honor. The DIP is a deal baked. I think we said yesterday, can't be unbaked. The roll-up was the central component of their demands. It wasn't possible to get the $40 million that we needed without that component. Would we have loved to have no roll-up? Of course. But without it now, to try to unwind that, unwinds the rest of the benefits and provisions. In fact, that the Unsecured Creditors Committee and the debtors negotiated for in terms of sharing of proceeds, which is a very significant benefit that is not really being adequately noted here, would go away. So you can't, with a settlement, there are compromises, there are benefits and compromises. There's no guarantee about reaching the threshold because they are projections, but projections aren't mistakes. nor is the actual to be considered newly discovered evidence, particularly when it's available at the second day hearing. You know, it was attached to the final order. Newly discovered evidence must be available but unknown and not part of the record at the hearing. So there's no, it doesn't satisfy even that threshold requirement to become newly discovered evidence.
Well, it's okay to do that one day before, and then all of a sudden it's not something new. I mean, people don't have a chance to evaluate things and, you know, take a breath and
I agree, Your Honor, that
analyze it.
I think that there is absolutely something to that. It's not newly discovered evidence because it could have been examined with due diligence, which was not performed. Justice Alito said in Better Box Communications, he noted that a movement did not show due diligence in its attempts and denied a motion for reconsideration on this basis of newly discovered evidence, specifically denying because the movement did not attempt to depose or subpoena anyone. That's a quote, did not attempt to depose or subpoena anyone. But what we're really getting at when we talk about newly discovered evidence and that 24 hours or whatever exactly it was before the hearing, you're talking about due process. You're talking about whether a party has had notice and an opportunity to be heard. And we hear that indeed facts and circumstances are somewhat limiting in this regard. We had a deadline to get the final dip order on file, a milestone that needed to be satisfied, and a settlement that was believed to be very good news to share with the court. So in that way, it didn't seem so bad on its face. But here, where the underlying fact is something that could have been known, could have been found out just simply by subpoena or deposition, then you're in the world that's more analogous to Metal Source Corp, which is 136 BR 260, Western District of Pennsylvania, where the interim wages order was entered. The committee sat on its rights and the reconsideration motion was denied for the same reason. There was a lot of opportunity to dig into and to satisfy those due process rights. There just was no further inquiry there. And so I think maybe if we were at a different point in time here, the discussion would be different. But due process requires notice and an opportunity to be heard. The movement received actual notice and absolutely received an opportunity to be heard. In fact, at the hearing, stipulating that the only request that it would be seeking would be potentially to seek cause to extend the challenge period. So based on—
The argument is though that that's what they thought until they saw the budget and had a chance to analyze it.
That's correct, Your Honor. And I'll note that even the Supreme Court has ruled on this in the United States. Aid funds versus Espinosa, 599 US 260, disagreed that bankruptcy noticing requirements violated due process because where subsequent notice does give that notice, and this gets into another area, which is actually something that was not pled. Rule 60B4 is the provision that would be the relevant provision for a violation of due process, but it was not sought here. Applies only in the rare, and to quote, Rule 60B4 applies only in the rare instance of where in violation of due process that deprives a party of notice or the opportunity to be heard. Continuing, and due process provides notice reasonably calculated under the circumstances to apprise interested parties of the pendency of the action and afford them an opportunity to present those objections. So understood, Your Honor, about the ability to review those documents. It was tight timing. Frankly, I think that we have now accomplished that substantively. And I think we have satisfied the record more than needed about where we were on the first day, and whether that dip need was indeed required.
But you're saying that the record based on the first day hearings and what transpired subsequently in the time period that transpired provided due process and also allowed for challenges and allowed for discovery and things like that.
That's correct, Your Honor.
All right. Thank you.
Thank you, Your Honor.
Mr. Hillman?
Thank you, Your Honor. David Hillman, Proskauer Rose, counsel for 6th Street as the DIP agent and the FILO agent. So 64 days ago, you entered the interim DIP order. There's a motion for reconsideration. As best I can tell, Rule 60B, I think the movements are alleging a mistake. I stood before you yesterday to try to shut this down before we had a one-day hearing. But you resisted that because Mr. Glenn, his clients, threw into question integrity, candor, the process. You gave them their day in court, which respectfully they did not deserve, but we're here. And now you are asked to weigh the evidence of whether or not the movements have met their burden to demonstrate that you should use the extraordinary remedy of reconsidering a DIP order entered 64 days ago, which I submit, and you haven't heard anything to the contrary. The ad hoc group has not identified a case to demonstrate that that measure is available. And I'll come back to that because I want to talk about the evidence. I want you to have an opportunity that you asked for to weigh the evidence. And here I submit there is a stunning failure of evidence on the question of mistake, on the question of whether there was a need for a DIP loan, the one that was presented to you based upon any facts that were developed after the court entered the order. On the one hand, you have the testimony of what Mr. Glenn agreed was testimony from a preeminent expert in the field of restructuring, Ms. Etlin. He praised her experience, and she said in her capacity as CEO, CFO, someone whose expertise is beyond question, that in her business judgment as a fiduciary for this debtor, there was a need for DIP financing when the motion was presented. She reaffirmed that there was a need for DIP financing even after being confronted with evidence of projections that showed differing collections and sales and cash. That's evidence. Now let's look at the other side. You have argument from Mr. Glenn, who should have made his compassionate speech on the first day of the case, not 64 days later. And it would have also failed on the first day of the case. But we're not here to judge what would have happened if you made it on the first day of the case. We're assessing on the 64th day. And what does he do? He's a lawyer, no expert. He's giving you his opinion. He's making arguments. He's making arguments with the benefit and clarity of what he perceives to be 20/20 hindsight on what he would do if he was a trusted fiduciary to take what he believes was an alternative path. Well, guess what? The debtor's view, certainly other stakeholders' view, that would have been a reckless and frivolous exercise to go down a destructive path and take a gamble. He asked you to go down a path of what would have happened. Look, they might have recovered cash from better than expected GOB sales. That's not how cases are run. Imagine if they had done that and it would have been the opposite and the cash wouldn't have been there. Mr. Glenn would come in here and say, why didn't you take a dip? You would have avoided this issue. To judge this decision with the benefit of hindsight is dangerous. And this notion of immediate and irreparable harm, that was a case presented by the debtors, reaffirmed today after hours of testimony, I'm not sure how long it lasted, based upon facts that were known and knowable on that day. There's no evidence that says there was other facts known or knowable. Mr. Glenn asked Ms. Etlin, did you know about these facts? She said, no, she did not know about those facts. On direct or cross or redirect, she said, even knowing of those facts, it wouldn't have changed her view. So it's important that if the facts played out differently later, that's not a mistake. Every projection is wrong. Could you imagine if every debtor has to, and every DIP financing gets to be reevaluated as we look down the field to see how are things going? No DIP lender would ever make a loan if you can find yourself with the rug pulled out from you because the debtors outperformed projections. So I want to walk through methodically. I want to hit on every question that you have, but I want to start with 364E. What do we know that's uncontroverted? One, there is no stay of the interim DIP order, and there is no stay of the final DIP order. Yesterday, I sought to have this exercise dismissed out of hand under 364E, and you said to me, Your Honor, that our good faith was put into question. I didn't hear anything today whatsoever that puts any evidence to contradict the sworn and uncontroverted testimony of Mr. David Kurtz, whose affidavit was part of the first day and the final at docket number 36. And there's testimony supporting good faith at paragraph 2, 22, 23, 24, 29, 33, 35. The ad hoc group was present at the first day hearing. Mr. Glenn's partner was here. He showed up. If you may remember, he was the gentleman who was in Connecticut who couldn't make the trip to Newark that day in April. And he was given the opportunity to cross Ms. Etlin. He was given the opportunity to cross Mr. Kurtz, and he declined to do so, saying that maybe they would reserve rights specifically to the extent of DIP liens on avoidance actions proceeds, which the first day interim DIP said that the DIP liens were not going to attach to DIP of avoidance action proceeds until final order. So that reservation was ice in the winter. Everything else was available. He could have probed. He could have done what Mr. Glenn did here today. They chose strategically not to do that. Now, I submit that the ad hoc group in their papers, he was up here arguing, supposed to be law, not testimony. No case from any jurisdiction of any court where Rule 60B was used to eviscerate Rule Section 364E when a creditor, like the ad hoc group, had notice and participated in a DIP hearing. The relief they are seeking is completely unprecedented, and as I mentioned yesterday, would absolutely wreak havoc on the DIP financing market if DIP lenders confine themselves after they have advanced capital to have the protections eviscerated. Now, all of a sudden we start to dance around this notion of, oh, we don't want to tear up the order. I read the prayer for relief. It says tear up the order, vacate the order. Instead, what Mr. Glenn says, he says, take out the scalpel. Let's just remove the things we don't like. Well, that remedy's not available. There's no scenario where you can just cross out the aspects of the DIP order that a particular creditor doesn't like. I feel compelled to also say, he says $1 billion. I believe that the 2019 statement filed by Mr. Glenn is that his clients own 14% of the $1 billion. I think it's roughly 130, 150 million. And the record needs to accurately reflect that the indenture trustee who represents the $1 billion+ of bonds is on the creditors committee. And the creditors committee will speak here, and they have supported the entry of the DIP order. So it seems as though Mr. Glenn and his clients have an issue with the indenture trustee and that this is just a misdirected exercise. So staying with 364E, I wanted to address the point that you asked Ms. Geyer. There's this notion of, and it's made up because there's no evidence, the $54 million rescue loan on the week before bankruptcy, it's somebody else's money. It's not the DIP lenders. Well, where's the evidence of that? He asked questions, he doesn't know, but yet he can stand up here and say that it wasn't from the FILO lender's collateral that it was that let's roll back the film. Let's talk about the facts as opposed to what the argument that you heard. And I'm glad that he put the transcript in the record, because I stood before you on the first day at page 49, lines 8 through 19, and I explained to you exactly what the rescue loans were. And I said the loan was nominally made by the ABL lenders. I was transparent and direct. But because of the overadvance, the debtors had no right, as Mr. Glenn says, to simply use cash. The lending syndicate was sweeping cash. There was a request for a new loan. And as a result of the overadvance, the economic exposure of every dollar advance came from the FILO lenders. So to suggest that it was not our dollars at risk is contrary to reality. Yeah, I think you asked Ms. Geyer, I think you said, weren't the funds in there anyway? I mean, that's what Mr. Glenn was suggesting. It's just using the cash. Well, that's not how things work. The company can't just use cash. It was swept. They don't have any control over it. It was swept. They were in cash dominion.
That was 54 million of your collateral is what you're saying. And if you didn't allow the use of it,
it was swept and readvanced. And every dollar of the $54 million that was readvanced effectively reduced the dip, which would have been $94 million down to 40. And so it is absolutely appropriate when you look at the roll-up, not as Mr. Glenn describes it as a 5-to-1 roll-up, but to look at it as close to 2-to-1. 54 plus 40, $94 million to a $200 million roll-up. So I want to focus not only on the fact that the relief sought under Rule 60B cannot rewrite the bankruptcy code to take out 364E, the fact that there is no stay, the fact that there is no evidence on a lack of good faith, that's case dispositive right there. We should stop. But like the Ginsu knife commercial, wait, there's more. We will continue on to make sure we cover everything. So the other pieces, Your Honor, in the order you entered at paragraph 35, you said specifically what would happen if there was, excuse me, do you mind if I just grab my copy of yours?
Which order are you talking about now? The interim?
I believe the paragraph numbers are the same, whether it's the interim order or the final order. I just picked up the final order. I believe it's paragraph 35. I'm flipping to it now. It's on page 78. And it deals with no modification or stay of this order. And I'm paraphrasing that based on the findings in accordance with 364E, any modification, amendment, or vacatur shall not affect validity enforcement of any advances previously made hereunder or lien claim, including the roll-up obligations or priority authorized or created hereby. Even the order, which in effect memorialize what's in the statute, the bankruptcy code 364E, is another barrier. I won't belabor the record on this point. I made it yesterday. Rule 60B doesn't apply to interim orders on its face. Today, you said you wanted to have a hearing on the merits, but I think you can also use the terms of Rule 60B, which I would submit to you. If you look at the ad hoc group's objection,
they took out the word, I remember.
They took out the word final.
I remember that. But doesn't the court have inherent authority always to look at its own orders?
I would submit that whatever equitable authority this court has, certainly the record doesn't justify vacating that order. I'm not aware of any authority, none has been cited by the ad hoc group, that Rule 105 can be used in isolation to trump another provision of the bankruptcy code, Rule 364E. I'd like to hit reasonable time, and that's another part of the movement's burden. I didn't hear a lot of airtime on this one. Rule 60C, did the ad hoc group move within a reasonable period of time? This is another one, another point that eviscerates the ad hoc group's attempts to reconsider the dip order 64 days ago. The facts, again, uncontroverted. We know they were here at the first day. We know that they could have sought discovery every single day until the final hearing. It is not an excuse to say, no one gave me information. That's not an excuse. He's a trial seasoned litigator. He knows what Rule 9014 does if you file a dip objection. He knows the rules of this court if you file or seek 2004 discovery. When he asked discovery from me, I said, what's your basis? He never responded. When the Third Circuit looks at, and this was in our letter to you, Your Honor, diet drugs decision, when you look at reasonable time, not surprising, it's a case-by-case facts and circumstances. What's the reason for the delay? The practical ability for the litigant to learn of the ground relied upon earlier and the prejudice to other parties. None of this was concealed. It was all available. Now I want to focus on prejudice because prejudice here is extreme. This is high stakes litigation gamesmanship, and we know the prejudice is real because we, the FILO lenders, relied on the interim dip order. We advanced $40 million, and that was also based upon providing the $54 million just a few days earlier as part of a negotiated package, which, as I submit, reduced it, and you heard from Ms. Etlin, reduced the dip on a dollar for dollar basis. That's the testimony. And we agreed to the reserves. The notion that the reserves are so critical, and it is something that is conveniently put aside by the ad hoc group because it's not going into their pockets. They don't care about it. They're myopically focused on their own self-interest, as opposed to the fiduciaries, the debtor, Ms. Etlin in particular, and you'll soon hear from the creditors committee. Fiduciaries have a different view. They view the reserves as meaningful. We agreed as part of a negotiated integrated compromise to allow the debtors to use, at the first day hearing, $36 million of our cash to fund things that I submit we didn't have to agree to. We didn't have to agree to pay money for a wind down. We didn't have to agree to have money pay for some unsecured creditors. We didn't have to agree to the warned claimants. But as every negotiated compromise exists, the debtors insisted on benefits on its part of the bargain. I would like, you know what? I would like to strike that from the motion too. The debtors wouldn't let me do that. Right? You can't just take out the red pencil. So we've agreed to fund that. And today, you may remember yesterday, we agreed to extend the time. Today is the date that our liens are supposed to be released on those funds. So there is urgency to dismiss this. We've consented to millions of dollars to fund the DIP budget. Just looking at my notes to just make sure I hit every other point, I'm almost done. Then there's this argument, not evidence, just argument that this DIP costs $200 million. Where's the evidence? None. Zero. In fact, at the beginning of the case, there was an agreement entered that said value is inherently speculative. We don't know what anyone's going to get. I heard the ad hoc group agree, and I'm sure Your Honor has this recollection. It could be well higher, such that general unsecured creditors, I've heard them referred to as GUCs here, may be in the money or may not. We still don't know. There's still time on the shot clock for assets to be monetized. And now he says there's a DIP that costs $200 million. There's no evidence in the record.
Well, I mean, you did get the roll-up. I mean,
there was a roll-up.
so it wasn't ice in the winter, to use your phrase.
It is 100% true that in exchange for the benefits we provided, we also received some benefits.
All right.
And that was one of the benefits we
Yeah,
provided. We
it's a
received.
significant benefit, and I was concerned about it. There's no doubt about it. That's why I asked you the question I asked you then.
Yep. And we had this very same exchange, and I know the U.S. trustee raised the concern, and I made it clear that these were the only way that our clients would provide the financing. And none of that has changed. And then, so the last thing I think I would end with, 2 points, is again, argument. Lenders took advantage of the situation. I just want to vehemently.
Everyone used whatever leverage they have.
Thank you, Your Honor. The last point that I would make is, unless Your Honor has any questions for me, I would ask that the court swiftly and directly deny this motion. And I would ask that you do it today. Thank you. Unless Your Honor has any questions for me.
No, you hit them. You hit them all. Thank you.
Thank you.
Thank you. All right. Going to hear from the creditors committee now.
Good afternoon, Your Honor. Brad Sandler, Pachulski, Stangzell, and Jones on behalf of the committee. I am going to be extremely brief, Your Honor. I am not going to repeat things that you've heard already. I do want to just point something out to you, and I mentioned this to you before, that the committee consists of trade vendors, landlords, and the indenture trustee. Collectively, the committee represents, call it approximately $1.5 billion of debt, a substantial amount of unsecured debt. I think I had mentioned in one of our hearings what the primary focus of the committee was. It was to hopefully achieve a going concern, hopefully achieve a state that is administratively solvent, and to get value to our constituency in a form that each member of the constituency likes. And that was the overall goal. Obviously, we're all aware of what happened at the first day. It's been discussed a lot. U.S. trustee, in fact, even though the committee wasn't formed yet, I had listened to and watched the hearing. I saw the U.S. trustee get up and she did a great job trying to argue against the roll-up. And the trustee, before the committee is formed, often represents the interest of creditors. And certainly she did an admirable job. At the end of the day, we know what happened. So when the committee was formed, we came out, we took a lot of discovery. We got tens of thousands of documents, emails, conducted interviews, et cetera. And what we decided to do was to go down a different path. Why? Because we're fiduciaries, right? We don't have the luxury of rolling the dice and gambling with other people's money. So what we ended up doing was we decided to go down a different path. We ended up negotiating with the various parties, the FILO lenders, the ABL, as we all know, was being paid off, so they weren't really part of the process. We worked with the debtors, and at the end of the day, we came up with what the committee believes is a value maximizing settlement under the circumstances. We believed it when I mentioned it to you the first time, when we were here on June 14th, and I believe it today. In fact, if you look at the papers, the ad hoc group, they even have a chart in there showing that the benefit of the settlement is higher than without the settlement if the roll-up is granted. And of course, what do we have? We have marshaling, we have sharing of various assets. We can't just gamble with other people's money as a fiduciary. And you have two fiduciaries in this room, only two. You have the committee and you have the debtors, both of whom support.
You said?
What was that?
Three. Ms. Etman too. She's
well, I'm counting her as, I'm sorry, I'm counting her on the debtor side. Although she has been on the committee side before, and we would love to have her. In any event, Your Honor, so the fiduciaries in this case support the entry of the final dip order.
What about-
They support
said
the
they were
settlement.
hamstrung. That's what their whole argument was of the ad hoc committee, was that you were hamstrung and you were negotiating from weakness.
Your Honor, it's part of the bankruptcy. It happens. Would we have liked to have seen something different? Sure. We were dealt a hand of cards. I think that we have made the most. We've made a value maximizing settlement here. And the committee is fully behind this. And again, the committee represents about $1.5 billion of unsecured debt.
That includes the bondholders.
That includes, correct. So, Your Honor, with that, I don't think I need to say more than what has already been said, but the committee supports the entry of the final dip order. Thank you. And obviously denial of the motion.
I appreciate that.
Thank you.
Okay, we have one more, I think, Mr. Huebner.
Yep, I'll be quite fast for any number of reasons, including the lateness of the hour. Your Honor, imagine for a minute that this was the dip hearing on the actual day that it happened. And Mr. Glenn stood up and said, Your Honor, I'd like you to roll the dice and reject all the testimony and not do the dip, because maybe, just maybe, the debtors will eke through and you'll be able to save the company without the roll-up. I'm going to guess that he would have lost by an extraordinarily wide margin in the face of the testimony from the debtor's fiduciary, that was unbelievably imprudent and totally inappropriate. Now imagine a thought experiment where the dip hearing was 2 days later and the very preliminary results of a weekend of disbursements and receipts was in, and things looked slightly rosier than when Ms. Edlin actually knew at the hearing. You heard her testify under oath today that it would not have changed her decision, that having the $40 million cushion was absolutely the right answer, even had she known. So had the final dip hearing been 2 days later, once a few days information of receipts and disbursements were in, he still would have lost, and he would have lost badly. This is a 60B motion, which is one of the most extraordinary motions known at law, when a trial has finished and someone says it was so perverted and inappropriate as to outcome that the entire trial should be shredded. Newly discovered evidence means things that existed at the time that were in essence hidden from the court. It is essentially sort of lying by omission. And we have nothing remotely, not a whisper of a hint of a shred of a peppercorn of anything like that. What actually happened was that subsequent to the dip going into place and the announcement of the liquidity and the agreement with the lenders and the ability to pay debts, the company did somewhat better, which is great for everybody, than was expected. That's not newly discovered evidence. That's events that took place for the first time after entry of the order. Everything you heard today is in essence analytically irrelevant to a 60B motion, because it's realia that happened after, and as we'll talk about in 1 second, because of the relief that this court entered. Why do I say because of? I only asked Ms. Etlin 4 questions, but I kind of think that they were important questions. Why? Because what Mr. Glenn kept trying to sort of create an atmosphere of is, if you deduct $40 million from the debtor's numbers, look, it was okay. So they could have done without the $40 million. But Ms. Evelyn testified to, as someone we've all agreed is a living goddess who strides across the globe like a colossus with 35 years of experience, is that that's not what would have happened without the money, without being able to tell employees, landlords, vendors, counterparties that the money was there and they were in the budget. What might well have happened would have been an unthinkable disaster. Her testimony then, but even more emphatically today, because it was my third question, I believe, is if employees didn't hear that the money was there to fund their essentially severance, and had they not shown up, the receipts could have been 0. I believe Mr. Glenn's number was $714 million of post-petition receipts. I'm not going to testify. It's not what lawyers are supposed to do. I don't know the exact number, but I know with 100% certainty, the debtors have taken in hundreds of millions of dollars of new receipts since the petition date. And Ms. Etlin testified today to give you absolute complete comfort that that was because they had the stability of an organized filing and sufficient liquidity. And that's why it worked. Here's another thought experiment. Imagine, Your Honor, if a debtor came to you and said, Your Honor, we need to buy liability insurance. You see those motions all the time, right? Comfort orders to buy insurance. And then 90 days later, it's a 90-day policy, Mr. Glenn moves for reconsideration and said, Your Honor, no one got hurt during the 90-day period. So it turns out they didn't need liability insurance. So please make the insurer give back the premium, because based on things that happened after the hearing, it's turned out to be imprudent that they bought a policy because, look, once they had the policy, they sort of didn't need it. And that's kind of what he's asking for. He's saying there was no need. He said it maybe 15 times. There was no need for a dip. There was no need for a dip. Well, unfortunately for him, there's only one witness, and it's not his. And that witness actually testified again and again and again how much of a need there was for the dip, because it was the dip that gave the entire ecosystem of Bed Bath & Beyond's everybody, employees, vendors, shippers, warehousemen, the comfort they needed to do business, which brought in hundreds of millions of dollars, which is why, and this is what I'll close with, and it was a great point by the two fiduciaries, many people in this courtroom, not us, the ABL lenders were always incredibly oversecured, right? And just to be clear, Mr. Hillman and Mr. Glenn are all right, and the committee said as well, we weren't really in the equation because we had a massive collateral package. The FILO lenders had the junior lien on the collateral package, which is why, in fact, they had to consent to the $54 million emergency loan. The debtors couldn't even get into Chapter 11 without it. Our clients certainly extended the loan, but in the real world, we were always oversecured. So that, like the business day before the bankruptcy filing loan really was part of the equation. And so, but I'm not a fiduciary. I'm not going to pretend otherwise. But from my vision on the camera, the entire left side of the courtroom is fiduciaries. Debtors have sworn obligations to all stakeholders. Committees have sworn obligations to all unsecured creditors. Ms. Etlin's federal common law duties as a debtor officer override even limitations in state law documents. This is a through the looking glass hearing. There are like 23 fiduciaries on one side who are at peace and stand by their decision. All the evidence is theirs, all the testimony is theirs, all the law is theirs. On the other side, you have one guy with a small subset of holders saying, if I knew then what I know now, maybe you shouldn't have the dip. And even that is not right, because the testimony of the most experienced person in this courtroom is, even if she knew then what she knows now, she would have done exactly what they did on the first day. And that's uncontroverted. So to even be in a world of 60B relief on a record like this, with law like this, is really, the telescope is exactly backwards. And we ask that the motion be denied. And, Your Honor, thank you for allowing me to appear by video.
Thank you. Thank you, sir.
Knew what I knew now.
Just very briefly, Joshua Susper, Kirkland Ellis.
When
First,
I
I
was
want to thank the
younger.
court and your staff. I don't think you were planning on having a Wednesday quite like this. But I actually appreciated your suggestion yesterday, because I think this was important. I think we needed to have a record, and we needed to have the facts. And I think the facts speak volumes, as does the law. And I would just tell you, not to give the court comfort, but just because it's a fact, 7 out of 7 days of the week, 365 days of the year, even with the actuals being presented in this circumstance, there is no company that we would be advising not to get a DIP facility and not to have an opportunity to try to reorganize the business as a going concern every single day. And the testimony today was completely uncontroverted that Ms. Etlin would do the same. So there is no world in which we would ever roll those dice. And we really appreciate the time, Your Honor.
Thank you, sir. Mr. Glenn?
Very brief reply. Yes, I stand alone before the court today. Yes, the courtroom is filled with people opposing the relief that we're seeking.
It's not a numbers.
It's not a numbers equation. And Mr. Hubner, what he told the court, he's very, very persuasive. He's very compelling, but he is changing the standard of what Your Honor is supposed to decide today. They're all doing it. They're all doing it. Okay. Mr. Hubner gave the example of an insurance policy.
Yeah, that's, I understand.
Okay.
That's a little bit.
If the cost of the insurance policy is something massively expensive and there's no risk or no material risk for that insurance policy, yeah, I think you can reconsider that. But let's go to, it infuriates me. It infuriates me, their perspective on notice and due process and reconsideration. They think it's okay that they can file the DIP budget the night before the first day. When creditors are scrambling to find lawyers, a lawyer shows up that day, not educated in the case, and therefore just by showing up that day, you've prejudiced your client because you don't know what's going on. You can't ask that witness intelligent questions without discovery. You may not have any background in the case. And what happened that day was final. What happened that day was final. Mr. Hillman has told you that over and over and over. So then let's fast forward to the second day hearing. Oh, we had due process. They filed another DIP budget the night before the final hearing. So what they're telling the court is that somehow we have an infinite, continual, unmitigated obligation to seek discovery after a final order is entered on all the components of that final order. I dare the court and your clerks, they're going to work really hard to find a case that substantiates that theory of due process. So
That's either that. I didn't think what Mr. Hubner said was actually.
I think Ms. Geyer said that. I think Ms. Geyer said that.
I'm sorry?
Ms. Geyer said that we had notice and opportunity to be here both those times.
Well, no, about the insurance policy.
No, I'm talking about the notice of the hearing, that somehow we had, because we were here, we're bound, and that we have no right to question what happened that day with what we learned afterwards.
No, and I'm having this hearing.
Exactly. And look, we appreciate it.
You didn't have a right to file a motion for reconsideration. It was just, as I said yesterday, it was a surprise because.
It was a surprise to us too. It was a surprise to us too. Yeah. So we understand what the court is facing, and what you're hearing is from fiduciaries, from people who are debtors counsel all across the country. Mr. Sussberg does this everywhere. And the question isn't need, as Mr. Hubner said. The question isn't whether Mr. Sussberg in every one of his cases would refuse to go into a court without a DIP. The narrow question before the court is, was there immediate and irreparable harm for the company not to pay the expenses that it was going to pay from the proceeds of the DIP? Ms. Etlin said repeatedly what Mr. Hubner just said. He's right. She said they thought they needed it. That's not the standard that the court has to look at for this interim DIP relief under Rule 6003.
I think she said they thought they needed it because it would cause irreparable and immediate harm to the company.
Yeah,
that's what I thought she testified to.
She might have said that, but there's no evidence of other than that conclusion.
She's the chief financial officer, the chief now executive officer of the company. She was on the line.
She freaking knows.
That's what she says. That's, in my mind, that's evidence.
Under oath.
I don't know. Is that how is that not evidence?
Well, she didn't pay those expenses when they were supposed to be paid, and there was not immediate and irreparable.
And now we're back to the question that I asked you before: is do I look at immediate and irreparable harm retrospectively, or when at the time of the hearing when I was being asked to decide it? And we would all like to do things with the benefit of knowing later on what happened after. But she did testify that even if she knew those things, she would still want the DIP. And not because it's in every case, but that's because what she wanted.
That's correct, but that's not what Holly Etlin wants is important. But it's not the standard under Rule 6003. The standard is immediate and irreparable harm. They told you if those payments weren't made in the first week, we would have a disaster. There was no disaster. They were paid in the second week.
We are right back in.
Yes,
we're right back
it's circular. It's circular.
Barbecue
But what's
strong.
happened has disproven the very predicate of the dip.
That's what she
Thank
said.
you.
Thank you. All right, I just need, it's 10 to 5, and I would like to give you my decision today. I don't know. The only problem is that you know, I have people here that have other obligations, but if we can stay a while, I'd like to do it. Is that okay? Yeah. All right.
A question that God is.
We got the okay from the important people. I'm gonna go back to my office and give you my decision this afternoon.
Thank you.
Okay? Thank you very much.
Oh my gosh. we're going longer. Holy smokes. Market's been closed, guys. Don't they know this? Judgy Wudgy. Barbecue is not trading anymore. Dude. Ace, your pictures. Oh my gosh. And then Glenn. I was trying to think of the movie. I couldn't think of it. It was when? I still can't think of it. Yeah, this, I don't think this really matters a whole lot. With us shareholders, it's just hilarious. And Jerry, are you still in here? You guys were having a sissy fit with old Jerry there. Jerry, I was fine with you to hang out and stay. I don't think you quite understood what was going on. You came in late to a bankruptcy court hearing that we've been listening to for weeks now, today for 6 hours, and you didn't understand. This was the bondholder's attorney trying to fight for money for them. He wants liquidation and the bondholders to be made right with that. And the fact that Bed Bath & Beyond did so well in their sales, they didn't even need their dip financing. They're all upset about that. So it's not bearish, it's bullish. It's they did so good that the people that thought they were gonna do bad and financed them, trying to get you know, say, oh, you didn't need that money. It really doesn't matter though, as far as us shareholders are concerned. I'm pretty sure for us it's just up to baby at this point. And yeah, this is just funny though. Bullish? I don't know if it's bullish for us. Not necessarily. Like, I guess the numbers that we heard from Holly and yeah, that stuff, like that's kind of bullish, but nothing else really is. I mean, Bed Bath & Beyond is done, right? It's with Overstock, unless there's something new that comes about with the Bye Bye Baby hearing. So this is just people trying to pinch their pennies in the last stretch. But I don't know enough about it, honestly. Like, I'm not a CPA or an attorney or anything. Definitely not a bankruptcy attorney. So who knows? Maybe it means something for us. Yeah, Glenn's argument they didn't need the dip because they paid the rent 2 days late. Honestly, I don't know who would be better for us. Like, I don't want to be making fun of Glenn or Holly or, you know, who knows. Yeah, not sure. Seems like Glenn doesn't have a case, but I don't know, maybe he does. Maybe they were maybe they were trying to pull the filings and stuff in really late so that they didn't have time to respond. It seems like they had plenty of time, but not sure. It's just funny though. Glenn does need to buy the dip. Things still emerge without a buyer. Yeah, it sounds bullish. Yeah, because they did so well, that they're upset that they didn't need the dip financing. That's bullish for the company, but yeah, exactly. For shareholders, might not mean anything to us. No, they're gonna come back. He'll come back and give his judgment, I guess, his verdict, I would assume. Yeah, that's what I don't understand, Cameron, and maybe you or anyone in chat can clarify why I guess bondholders, will they benefit the most if it's a Chapter 7 and they just liquidate all the assets? I mean, why does he want that as opposed to it getting restructured and living on in a Chapter 11 that comes out? I mean, I know bondholders are higher up on the list than shareholders, but would they only want, I guess, a liquidation because they don't think there's any value if the company carries on? Or what's Glenn's motivation for it to be liquidated and not reemerge? Solid buy way to move forward. Get up, thief, at Uncle Glenn. Ace, this one's actually really good, man. This looks legit. Why haven't you made any thumbnails for me? What the heck? Completely holding out. Only represents 140 million in bonds. There's like $1 billion or something in bonds that he was saying, though, right? The other bondholders on the creditor committee want Chapter 11. Why aren't they represented? Why is it just Glenn? That is how he makes it seem. That's why I'm trying to figure it out. More green dailies. So they're just assuming liquidation would be best for bondholders, and they would get a little piece of liquidation. But I mean, they could have the upside if it doesn't get liquidated and it reemerges is much greater, right, than Chapter 7, even for a bondholder. What, kitty? Overstock sees a future in calling itself Bed Bath & Beyond. The online retailer is renaming its website and its mobile app after buying the intellectual property of the bankrupt home goods store. What? I'm sure that's an insurance company picks up. Oh, so they're trying to get paid from the insurance company? I don't know. You think, Mo, you think he's calling out Holly because they're trying to get paid from the insurance company? I don't, maybe. I see it as kind of the bondholders. I mean, the bondholders, someone hired him, and if they're not getting, you know, if they're not getting much out of this whole deal, and they think they could have, then they have grounds to sue him as their representation, you know, as a malpractice. So that's kind of how I saw it without knowing much. Just, you know, lawyers get sued all the time for malpractice. But talking about getting money from insurance is very interesting. Oh, snap. I don't know. It's pretty special, Ace. I liked it. 1 billion bonds outstanding. Yeah, that's what he was saying. Interesting, Mo. Yeah. Yeah, I guess you have to consider insurance in this case on both sides. Trying to have a claim. Freaking insurance in this country. Oh, there's insurance for everything. Insurance company picks up liability for bondholders. Wow. Wow, Mo, that's a crazy thought, man. Fraud. Interesting. So Overstock is changing their name to Bed Bath & Beyond, or what did you say up there? Bed Bath? Yeah. That's crazy to think about. Doubting Mr. Glenn is like basically the kamikaze pilot for them, just falling on his sword for everyone. Alright, kid, let's check it out. Dude, I'm not subscribed to the New York Times. This is trash. You have to copy it. I'm not. Try to set her up. That's crazy though, Mo. Like, yeah, I mean, you might be right. I feel bad for Glenn if he was put in that situation, honestly, then. Like, try and prove fraud and conspiracy from this woman who's been doing this for 35 years and won't take crap from anybody. and they just called for a full trial. Here's the mic, good luck. Disable JavaScript in browser, allow you to view it. Even on Edge? Yeah, that's true. This is just a JavaScript that's popping up. Don't I want JavaScript? Let's see, how do I disable that? JavaScript is allowed. I'll just disable that for now. Yahtzee! Well done, Cameron. This will block all ads, won't it? Just totally gave me the cheat. Web browser script blocked her. You know, I had Chrome, and then I was lagging a bunch. And then my genius IT guy, you guys might know him as Relocate, was like, hey, instead of fixing it, let's just try you on Edge. And actually, I've been liking Edge. It's legit. It has a lot nicer features than Chrome. However, I'm still lagging. But it does learn. Soon, Overstock will become Bed Bath & Beyond, at least in digital form. Overstock, which last week paid $21.5 million to acquire the bankrupt retailer's intellectual property, said on Wednesday that it would start operating its website under the Bed Bath & Beyond name. The change will roll out in Canada in early July, starting in August, about a month after the final Bed Bath & Beyond stores in the United States close. Customers in the country who visit overstock.com will be redirected to bedbathbeyond.com. Wow, they're actually keeping the website and everything. Roll out in Canada first, huh? Hey? Overstock's mobile app and its rewards programs will also be rebranded. Company executives plan to eventually bring back Bed Bath & Beyond's popular... Wow, dude. Overstock just killed it, man. Seriously, what did they pay? 21.5 million? Want to buy Overstock, right? I mean, that's why it's been rallying on all that news. That's an insane deal. Valued at 1 billion. That's interesting. Huh. Overstock's mobile apps rewards program will also be rebranded. Company executives plan to eventually bring back Bed Bath & Beyond, popular Reddit. As Overstock folds the bankrupt retailer's assets into its own operations, it is considering renaming its business entirely, said Jonathan Johnson, company chief executive. It might settle on Bed Bath Beyond, he added, but other names are being considered also. I can't tell you how many times I've asked over the years when we're going to change the name of Overstock, said Mr. Johnson, who has been at the helm since 2019. Overstock got that name because of they basically bought that. They bought stock from, or not stock, but merchandise and apparel and whatever from retailers and resold it because the retailers were trying to dump it in their inventory space, and they could sell it and they had a markup on it from the super cheap price they were able to get it from. That's what I remember Overstock from. For years, Overstock.com has been trying to find a way to update its image as a liquidator, which is how it started in 1999. There we go. The company has since moved away from selling only furniture at basement bargain prices, but ultimately Mr. Johnson said its name was holding it back in the eyes of consumers. Yeah, that's true. It was more furniture, I guess. It's betting Bed Bath & Beyond's name can help change that. We will probably have both logos for a bit, but the goal is to transition as quickly as possible to Bed Bath & Beyond. Yeah, Overstock's taking over Bed Bath & Beyond. That's interesting. When the home goods retail filed for Chapter 11 bankruptcy in April, Mr. Johnson saw an opportunity for his own company. In 2018, when Patrick Bryan, then Overstock's CEO, wanted to sell the retail business to focus on crypto, Bed Bath & Beyond was a potential buyer, Mr. Johnson said. That deal never happened. Oh, Patrick Bryan, that's the guy, yeah. The tables turned when the pandemic hit and Overstock sales surged. Bankers approached the company suggesting that it should purchase Bed Bath & Beyond. On the other hand, Bed Bath & Beyond was financially battered by the pandemic like many retailers. It had to temporarily close its stores and its supply chain buckled as the company sought to keep up with demand in online shopping. Sales fell drastically as company executives made several merchandising and marketing missteps. We've been watching and watching, and last year when Bed Bath & Beyond fell in some troubles, we started thinking, gee, if it goes bankrupt, we might have the opportunity to purchase what we like without purchasing what gave us pause before, Mr. Johnson said. Overstock does not purchase Bed Bath & Beyond store locations or inventory. Patrick Burns, Mr. Burns. The week after its bid for Bed Bath & Beyond's assets became public, Overstock added more than 100,000 bedding and bath items to its site as vendors raced to do business with the company. This was after months of Overstock's courting them and making concessions like agreeing to hold inventory in warehouses, a rare move for the online retailer. Now Mr. Johnson said he does not think his company will have to do with that to win vendors over. The acquisition also gives Overstock a trove of customer data. It has information on what Bed Bath & shoppers bought online and how frequently they visited the website. A helpful tool as Overstock contends with its own falling sales. On Wednesday, the company said it expected its second quarter revenue to decline in the low 20% range from the year before. Overstock sales peaked in 2021 when more people bought furniture during the height of the pandemic. Active customers have also been declining, and it said in April that it had 4.8 million users. Bed Bath & Beyond's active customer list for its online shoppers is twice as large. Overstock expects that its customer count will increase in the coming months, while the average amount that shoppers spend may shrink because the small appliances and home goods that Bed Bath & Beyond was known for are less expensive than the couches and patio tables Overstock normally sells. The online retailer will also spend more on marketing to make consumers aware of its branding changes. As for the fate of the Bed Bath & Beyond famed 20% coupon, will always be a couponer, will always do the site sales. Whether we run at 20% as frequently as Bed Bath & Beyond, probably not, but it'll be there for the beginning. So what I learned from that was disable Java, so I don't get pop-up ads. Thank you, Cameron, whoever said that. What I wanted to overstock, yeah. Overstock looks nice. Its valuation though, 1.15 billion after this run up. I mean, I'm not a financials guy necessarily, but operating income has been dwindling and the revenue isn't great. But maybe with Bed Bath & Beyond they could do well. Dilute shares like 10,000%. Your copy TA says it'll go boom boom. Oh, Overstock? Yeah, Overstock's looked good. As you see my lines on there. Had a breakout of this resistance. Kind of retested it, but fell through. But now it's holding back above it, so it does look nice. Breaking out of this wedge. I mean, I don't know. Yeah. Agree with Baby if the buy for Baby is massive, it could get converted to Baby shares or acquiring company. How massive can it be though? Because if there's not much demand, it's all depends on demand. Someone's going to pay more than they have to. Olava, thank you for your insight, man. That was very interesting to think about the insurance and how that would play a role. Bed Bath can merge newly and rebrand it, get purchased, and merge Chapter 7 and die with no shareholder value. Chapter 7 and die with shareholder value. Yeah, that is kind of the interesting thing. We're invested in a stock, but we're looking forward to another part of the stock that's not being highlighted. Yeah, I haven't seen Baby specific financials. I've heard about them, I guess. Speaking of barbecue here, some are asking us 32 good support. They were asking that here, and I said it's holding, and I sold, and I said this is probably the worst time to sell unless we drop through, and it was because that was support, so we ripped up from there. No big deal. At any rate, I still would like to see over this 35.70 area and that support. Otherwise, yeah, I might be buying back where I sold at 32.19 area. If it holds, if it flushes through there, I'm just going to wait until we find other support. Because this also was kind of dropping out of this aggressive channel that we've been in. We've been bouncing off that support for like a week now, really. Let's see, not really here. Actually, it's just been the last like 3 trading days. So I think it is slowing down, even though we did have that run up at the end of the day. It needs to get over that price for us to break these highs. Until then, I think we'll probably kind of start pulling out the downside. The daily looks very interesting. Because we're at the resistance and we're just kind of making these big dojis. So it still looks like a cup to me. It's fighting though. The buyers are fighting for sure. Potentially this was the handle we had in the same day, which was yesterday. But now that we're not breaking that resistance yet, I think we still could have a handle that comes out and 26 cents maybe higher, 30. But that's again without any news from the court hearing. Speaking of, we're still expecting them back, right? They're gonna wrap it up. think baby stores are still open. Maybe some got closed down. The non-profitable ones. You prove some type of conspiracy? You mean Glenn? So close to something huge. It sounds like some huge kind of dump if Glenn is proving conspiracy. Inventory showing out of stock unavailable on Betty? Yeah, there's nothing. It's just nothing new. They're actually coming back to finalize, I think. The judge is gonna give his final judgment. You'll know if there's something legitimately good or bad because the stock will reflect it. It'll go crazy up or crazy down. Not now because it's closed, but tomorrow. Yeah, that's what I've heard too, Cameron. Is it better margins? Yeah, higher net income. Thanks, but no. Motion denied. It seems like that's what he's gonna say, but I don't know. Now, I was confused because is he denying the motion just what Glenn brought up, or is this the end of all of it for Bed Bath & Beyond? I don't know. It seems like this is just the motion for today what was brought up and not, or is it the end of it, of the bankruptcy hearing for Bed Bath & Beyond? Just Glenn's motion. Jeez. Yeah, yeah, okay. So we're gonna have more court hearings with Bed Bath & Beyond. Are we gonna get any court hearings with Bye Bye Baby? Or is it all encumbered in these? The 4th? What? Secret. So Baby's going to be confidential? Teddy's release date is irrelevant of all of this. That's just speculation. Right, Mo? And reporting a sale at a later date? Definitely risky. I'm just holding out of confusion. Just kidding. I sold today. I still have some. I still have 20,000 shares in another account. Sold the majority today, though. Baby Talk is confidential. Yeah, Jerry came in here and I just sold everything. I got really scared. He seemed smart and well informed, so you heard the bling bling, I sold it. You should go, Mo. Might be able to get in there. Go sit next to Ryan Cohen. Yeah, they'll definitely let you. You gotta go. CDB, yeah, we're a stupid bankruptcy. It's probably totally irrelevant to any of our investments. But yes, we're still here. Do it, Mo. Do it. We'll see you. We'll see you in the back. You can like wear a Kennedy face mask or something if you want your identity concealed. Dara. I don't know what happened to AMC. FTDs, some kind of run up because of court hearing tomorrow. I'm not sure. This thing's trading similar to like an OTC stock or some kind of sketchy stock like that where it just randomly rips, which is kind of how GME used to trade. But I mean, look, it's totally barcoding, and then just randomly a bunch of volume pumps in and it rips. So I think we're gonna get some news on AMC probably tomorrow. But I really don't know why it ran up into close. Good for my cash card puts, which I wanted to get out of before that hearing tomorrow. Probably won't hear news from it for at least a few days, maybe end of week. On a walk you can listen, yeah, for sure. I mean, it should just wrap up this little motion that our beloved Glenn brought up to really throw off the courts and the judge. And that's what everyone's saying. They're like, it's interesting how 6th Street all of a sudden like took the stance. You know what I mean? And he's like, he was all cool and chill, and now he's like, judgy wudgy, you're an idiot for doing this. We should not have even wasted this whole day of time. But yeah. Yes, Mo, dude, that'd be sick, man. Gotta point yourself out. We're still waiting. When you start hearing the judge, they're back. But yeah, at this point, they're not back. Yeah, I've got it there. Got it ready. Assistant to Liechtenstein.
Can understand, or where you can see the weakness, the trend to the downside here on the bigger picture.
All right, thank you for that. Final
Dark
thoughts
Man
here
too.
on all of this, Don.
Yeah, overall in the markets, there's been a real change of tone in the last, about 6 trading sessions, and we're starting to finally see some two-sided trade open up. I think that is what's going to be absolutely critical moving forward. What I mean by that is
Be dead horse,
NASDAQ,
yeah,
the
potentially.
massive up day yesterday, the day before that massive down day. You know, the NASDAQ feels broken, disconnected, almost wild, if you will, and chaotic. I think you're going to have some continuation of that as volatility starts to re-emerge to some degree here in the coming weeks.
All right, thank you for that. Good to see you both for the big three today. Good big three, great companies, Disney, McDonald's, and Baidu. Don Kaufman of Theo Trade and our own Ben Liechtenstein on the charts.
I mean, that wouldn't be good, Cameron, but that's such a small amount in the
ahead of its earnings. The projections
grand scheme of things, right?
Favorable. In fact, it's expected to post a loss and a revenue decline. We'll get more details next. More Trading 360.
Yeah, that's a good point. 40 million is it go a long way if they're tight for cash. 1,400 people on Twitch? Where the heck were they for my Twitch? That's crazy though. Like, it doesn't even matter for people that own BBYQ stock. Like, it's irrelevant. So that's funny still. 1,400 people. I had like 60. Surprised these guys are taking this long of a recess. Heck yeah, I advertise my channel on Reddit. I'm not just doing this for me.
Force are some of the leaders on the downside. Names like Travelers, General Mills, Smuckers, Home Depot, Freeport-McMoRan are weighing. So here are the numbers of the indices. The S&P 4376 down 1 point. The Dow 33,815 down 111 points. NASDAQ gaining 32 points after an incredible first half of 2020.
Thanks, Mo.
14,979, and the Russell is up just fractionally up 1 point. Joining me right
Dang,
now,
I wish I got that option here. I had 4 options, 4 contracts at 9 cents that turned into 50 cents. Just TD defaulted to limit not market. I got on the futures, but dang.
The projections are that they will have a loss.
On a swing during reset.
There are some headwinds even coming from Washington at this time. Your thoughts on Mike?
She's kind of BA, that
Nicole,
Ollie.
I mean, this news out of Washington D.C. is very, now I say concerning. I don't want to
David Simpson.
but they're going to put these more restrictions on trade with China on some of their lower end.
Gold giant boots playing Animal Crossing. Nice. I've been on the PP show. I don't have like tinfoil to add, so he doesn't care to have me on there, I don't think.
Because it's like, everybody's talking about AI and how it's going to be, so
I've got nothing to share other than response to other people that come up with crazy ideas, and I tell them logic and realism and how the whole world doesn't revolve around Ryan Cohen and Bed Bath and Beyond.
Expensive, and like you said, if these earnings, if Micron's
Talk about the gaps.
with a disappointing number after this kind of new news has come out, after these stocks have become quite extended, it gives people some excuses, to pull some chips off the table. You may not see a lot of that right at the end of the quarter, but as we move into next week and into the next quarter, people might want to say, hey, these groups,
yeah, I think our trading on barbecue has been pretty good lately.
take a few chips off the table doesn't mean
You guys been around here, you've seen him. We literally bought right here.
It does create a headwind.
Sold right here. So it's easy to see in hindsight, but when you're in the moment, that's tough. That's way more tough than diamond handing and holding. Like, you guys at diamond hand, that's not hard. It's easy. That's stupid. Just hold and hope. Okay. Great. That's not difficult though. Like, don't pat yourself on the back for that one.
But still, as you said, maybe the group is overbought. And today, the calls out of Washington is at least helping to
Big TA guy.
the stocks, the SMH.
Oh, okay. Yeah, maybe I've seen him CTB.
But we'll move aside from
Those guys, yeah, their TA is they use all the complex indicators, and I try and keep it very simple and basic with TA. Like, try not to confuse with all sorts of crazy things.
Some of his, a big chunk of his Microsoft position back in late 2021 was he saw that the stock had gotten too far ahead of itself, not because there was anything wrong with the company.
Short hedge funds attacking.
But their stocks seem to be a little ahead of themselves. You just want to be a little careful. That's my only real point on that.
All right. And
Thanks, Kitty Daddy. Appreciate you providing the liquidity.
Stress tests, and those will be
yeah, I mean, we sold here, and I bought some here, and did buy some more here. That's true.
And certainly a lot of scrutiny pertaining to the banks. One bank you like and think is a great company is JP Morgan. Tell us why.
Yeah,
Wine and boat. Oh, that ginger.
There are a couple. I don't want to
He's a TA guy, the ginger guy that
in terms of it being a really well
from the
run
Pacific
bank,
Northwest.
follow Lamar and Bank America being another one. But JP Morgan, I mean, it's you know it's the best run company in the business. They have their tentacles in all parts of the business. However, as you can see, looking at that chart, it's very interesting. You can see here for the last couple of months, it's had a tough time breaking out. So I'm a little worried about it on a near-term basis, but the stock is still very cheap.
RC confirmed.
10 times
It's stuck on 34.10. See, they're trying to pin it right between here, so you buy and sell, and then we can just short it down and make a lot of money somehow.
Again, well, I guess my concern
Hey, though,
on a near-term basis is that you know it's had a tough time breaking.
but some of you have noticed the borrow fee and the available shares have not showed up. So when these pop back up, like when these pop back up, the borrow fee might be much higher or lower, but most likely higher. Because look at this, 627. Yesterday, 11:45 was the last time it was updated with 2,000 shares. So don't lead yourself to believe that there's only 2,000 shares available. Now there's none. There's infinite liquidity. That is the thing. It's infinite. So, but when we share, there's only 2,000 shares available. We're just basing it on this, and just yeah. Anyways, 118%. When we come back available with shares, in quotes, there's always shares, but when we come back online on iBorrow and whatever else you're looking at, that 118% will probably be higher. 150, 200, I don't know. It's going to be higher, most likely. So, not to say that that moves the stock at all, but
rate hikes, not just two, the third one
causes some
and then, you know, again, we have these
hype.
global central banks raising rates. And
it's provocative. The people like it.
Big decline in inflation may not be as big as people have been projecting. Therefore, you come in, you know, gold. Like I like bear gold.
So market holidays coming from GME, that was always a way for them to push off their FTDs and to push off their swaps and rollovers. For whatever reason, it wasn't one more day. It was like pushing it forward 30 or 72 days or some weird obscure number if there was a holiday where they couldn't close or roll over on. So that is interesting. Do we have, I guess, 4th of July? Is Monday closed? Are we closed next Monday? I don't think we are.
Are you expecting some volatility?
Drexel's for spy and barbecue.
Would be one thing. A retesting of lows or big sell-off is another. Where do you stand here as we're not too
These guys are taking forever. Monday closes at 1, so short day. Okay. Good to know. Thanks, Cameron.
But we've gotten to this situation where we've said we're really worried about earnings, really worried about them, and then all of a sudden, no problem. Well, now the expectations
and then Mondays or Tuesdays fully open, huh? I can't wait for these judges, judgy wudgies.
Get some disappointing guidance. And we start off with those bank stocks.
So Monday closes at 1, but is Tuesday closed, or are we still open?
That's going to be low earnings for everybody else. In a market that's expensive and almost 20 times earnings right now, that could cause some volatility to pick up this summer. So I do think a move back down to 4,200 or even below could very well take place. Even if you're the biggest.
Of course, Tuesday's closed.
It's going to take off before the end of the year.
Good to know.
Be normal and healthy for the market to pull back.
I don't know. Market's weird, man. Closed on Juneteenth.
It's going to depend on how.
Explain that one to me.
But the guidance that they give over the next, as we move.
I'm gonna have to just leave this up and be back. Audio's still on for the stream or for the court. These guys are taking forever though.
Disruptors and DraftKings is on the move. The sports betting name. Well, it takes a turn, moving higher here. Looking at that 50.
I'll throw a little Yaz on. Nice quiet Yaz. And these guys are cranked up. Okay. I'll be back. I just have to kind of be in and out. I know, Juneteenth made an official holiday. They made an official holiday because GME was going to squeeze, and if they didn't make a holiday a year and a half ago, or whenever that was, the swaps and rollovers would have conflicted and worlds would have collided, and GME would have gone up to $12,000 a share. So that's why Juneteenth was created a bank holiday. Dude, these guys still aren't back. This total just leave us hanging. Oh, Jerry's back. Hold on, Jerry, stay. Let's talk. I think the judge went home for sure. AC John, I disagree with TA is irrelevant. I agree that fundamental catalysts will supersede them, but we've seen clear TA play out, and more so in OTC than we've seen with the NASDAQ. I think the stock is less manipulated with the lack of high frequency trading and dark pools and actual price discovery. I'll say every move. Yeah, I mean, it's minus the low volume barcoding, which is sometimes tough to see. You have to just zoom out. It's been very clear price action and price discovery. This thing has not looked as good as it has since it's been in OTC. I mean, look at this. This is OTC. Look at it before OTC. Okay, downtrend, whatever. Look at this. What is this? What? That's not real. That's not normal. That's not natural. That's why I'm like hesitant to these huge moves that anybody's calling for. Like maybe, but I'm not seeing a huge move in OTC. I'm seeing more natural moves like we've been seeing, not like 250% and crazy moves. We don't have any after hours trading for one, so we're not going to have 100% gap up. And then during the day, it's 30-40% on a good bullish day. Yeah, classic life cycle, yeah. And the moves we get when we weren't on OTC, they're just unnatural to the upside and downside. Upside was unnatural. That's why they have to halt it. I mean, it's a circuit breaker halt, limit halt, whatever. But that's because they've created an environment where you can have unnatural price discovery and manipulation, which causes unnatural moves to the upside as well as downside. $2 top. I mean, I don't have a topping price on. What the heck? Look at this. What happened there? Dude, look at that wick on the SPY on the daily. Oh, that's beautiful. Apparently SPY wicked up to 453.46 today on the daily. I don't have a top for without any catalyst. Barbecue. That's awesome though. I might just... Did I lose it? No, I still have it. I gotta just full screenshot for Discord. Even though none of you guys care about Discord and care about what I share. There it is. Beautiful wick up to whatever price that is. Go. Dude, they go home? The judge? Judgy Wudgy? 453 at close, honestly, like what the heck? That's literally this high. It's right at that peak. Look at that. Wow. We might be headed there. Very well could. I see the inverse cup handle. Today looked like it was a legit handle. Didn't contest that. Could change tomorrow. It's been an hour. Dude, what are they trying to pull? I have to go back to Nicole Petalides. Nope. Dude, are these guys serious right now? They're just they're not gonna show up? It's crazy. Yeah, PP Show can join the live stream. You know, I invited him to come on our show. I said, hey, we should collab or whatever. It's like, you should come on, we should chat and talk about BBY. He's like, no. He's like, you can come on my show if you want, though. Have you noticed that? He doesn't go on anyone else's show, but only allows people on his show. I'm like, all right, whatever. On yours. I mean, it's smart. It's smart from a YouTuber's perspective. Just bring in audience from other channels. I can't believe they're not back yet, actually. This is crazy. That being said, it's a secret buyer. It seems like the buyer has a big influence on retail. I agree, Mo. I agree. Dude, SPY is so bullish in after hours. Baby auction July 5th.
Okay. I have reviewed the papers, considered the testimony today, considered the arguments of counsel, and I now have my decision, which is not as in final, not as organized and as I would normally be, but I'm doing my best to get this done as quickly as possible. Because I believe this is a matter of substantial importance and to the case and even beyond. This matter is before the court on the motion filed by the ad hoc bondholders group, which we'll call AHB, or the group, to vacate the June 15th, 2023 final order authorizing the debtors to obtain post-petition financing, utilize cash collateral, granting liens and super priority administrative expenses, granting adequate protection, modifying the automatic stay, granting related relief, the final BIP order, and actually also the interim order entered on April 25th of 2023. That wasn't quite in the title, but it is in the papers themselves. The motion was filed with a request to shorten time for the hearing to July 27th, 2023, which was yesterday. The court initially denied that request for a shortened time because, as we'll also speak about later, because that was not what was contemplated in the prior proceedings before the court on June 14th, where the AHB was to file a request to extend the challenge period by no later than June 25th for a hearing on June 27th. And I was quite, as I indicated before, I was quite surprised by that because the motion sought far broader relief than what an extension of the challenge period under the final DIP order. So I initially denied the request to shorten time because to me, it was a completely different thing. And I had trial that day, as I indicated, and I didn't have time to review the actual motion in detail, and which sought vacation of the interim and final DIP orders. Notwithstanding that denial, the lenders, the ABL and the FILO lenders, who I'll call the lenders, immediately objected and requested that I hear the matter right away. And the debtors also filed an objection and requested that I hear the matter right away. So since the bondholders asked for the hearing on shortened time, and everyone agreed that it should be heard on shortened time, the principal parties in interest, including the creditors committee, I decided to hear the motion today, but not before we had an evidentiary hearing to supplement the record as to factual matters that were alleged in the papers that I did not necessarily see in the declarations and certification or declarations and other submissions of the parties. The AHB has filed various statements indicating how many members it has and what their the amount of bonds and principal that they represent. But I think, Mr. Glenn, you basically said it's $150 million in principal out of the basically $1 billion of total bond. Is that accurate?
It's a little bit more than that, but that's
a little bit more than that. I think you said that, and I have one that here that says 166 million. Had another one that says 185. So I wasn't sure, but it might be a little bit more than that. The motion was filed with a supporting declaration of Mr. Glenn and who represents the bondholder and bondholders, and also included certain charts and summaries that were prepared by in support of the declaration, that really there's no, I don't think there's really any objection to, other than that, there's challenges to on the merits. So I am considering all of that. And also there is a motion to seal. I guess the sealing is not much of an issue anymore. There was a redacted brief or motion filed on the docket, and Mr. Glenn's affidavit, I think, is part of that, and as redacted. Is that right, Mr. Kanoyan?
The Mr. Glenn's declaration, there is not a redacted version of that, so that actually still was subject to the seal. But I believe that the attachment to that declaration has now been made part of the public record.
All right, so just as a procedural matter, what the motion to seal is basically moot, isn't it? Except for as to the motion itself, as redacted, is that?
Yes, I think, Judge, if you wanted us to do this, the declaration can be redacted consistent with the motion, given the record now, where fewer things are confidential. I think the range of recoveries and that kind of thing is the only thing that needs to be redacted from the declaration. But I think as between the parties, there's an agreement on what should be redacted.
All right. Okay, this court has jurisdiction over this matter under 28 U.S.C. 1334B and the standard orders of reference entered by the United States District Court on July 10th, 1984, as amended on September 18th, 2012. In addition, this court has jurisdiction to interpret and enforce its own prior orders. Travelers Indemnity Company versus Bailey, 557 U.S. 137 at 151 and 2009 case. In that case, involving a confirmation order entered years earlier. This is the court proceeding under 28 U.S.C. 157B2A, D, obtaining credit, and O, venue is proper here under 28 U.S.C. 1408, and the court issues the following findings of fact and conclusions of law pursuant to Rule 7052, and to the extent any of them might constitute conclusions of law, they are adopted as such, and the reverse is also true. The debtors filed their voluntary petitions on April 23rd, 2023, and appeared for first day hearings on April 24th, 2023. Holly Etlin, debtor CFO and CRO, call her Ms. Etlin, filed two declarations, one in support of first day motions generally and one in support of the DIP financing. Mr. David Kurtz, Vice Chairman and Global Head of Restructuring at Lazard Ferez, I don't even know how to say that exactly, and filed a separate declaration in support of DIP financing. Those declarations were admitted into evidence at the first day hearing, and have been admitted, are part of the record here. The lenders here are the ABL lenders, with the ABL facility of which approximately 80 million was outstanding in principal at the time of the filing. The FILO facility, there was approximately 547 million outstanding at the time of the filing. Letters of credit of 102 million, finance leases of 61 million, for a total of 791,500,000 approximately of secured debt. The unsecured debt bondholders was about 1.2 billion as of the petition date, and they are represented, at least in part, by Mr. Glenn here and Mr. Knoyne. JP Morgan Chase was the agent for the AB facility pre-petition, and Sixth Street was the agents for the FILO facility, but it's now the agent for both the ABL and the FILO facility post-petition and the DIP loan. At the April 24th first day hearings, as I indicated, those extensive certifications, declarations of Ms. Etlin and Mr. Kurtz were admitted into evidence without objection, and I think they were described as robust in certain of the papers, and I would say they were very detailed, very specific about the substantial efforts that were made to obtain financing, and they did go in uncontroverted. Also, also relevant here is at that hearing, the ad hoc group was represented by counsel and just got into the case, but at that hearing, they indicated to the court, we also did want to no objections today on an interim basis, but we do want to, we do reserve rights to the final hearing, particularly would note that we may have issue with certain incremental collateral liens on avoidance actions going into the DIP. So even though they had just gotten into the case, bondholders and their counsel were clearly on notice of the case at that time, and on notice of what was in the DIP facility and the DIP order. And perhaps not having enough time to review it in detail, but did indicate they had issues potentially with incremental collateral or liens, and that's part of the objections today. And today is more than 2 months later. There was also a hearing on May 31st, 2023, which the bondholders were certainly on notice of, and my recollection is that they were in attendance, but whether they were or weren't at that meeting, at that hearing, the committee announced that agreement in principle was reached among the DIP lenders, the committee, and the debtors on the terms of a final DIP order, and that agreement was apparently not finalized until a couple of weeks later, when on June 13th, 2023, the debtors filed a revised proposed order approving the DIP motion on a final basis, which contained the wind down budget that was admitted into evidence here today and previously. This was part of the surprise that I was talking about earlier. Was at that hearing, the ad hoc group, although they had not filed a formal objection, they made it very clear that the only relief they sought was an extension of the challenge period, and there was a brief recess at that time. Where that was discussed, that extension was discussed among the lenders and also the debtor, and an agreement was reached. And again, I have to quote there because at that time. It was again made clear to the court when I asked to clarify what relief the bondholders were seeking. The counsel stated, to be clear, Judge, it's only the extension of the challenge period. That's it. And then the parties went out. The parties also agreed on language that was incorporated into the final DIP order that reflected that said that AHG would have the ability to seek an extension of the challenge period by filing a request to do so with the court by June 25th, 2023, with the extension having to would be granted if cause was shown for the extension. That relief was not sought in the reconsideration motion. This was not sought. So there's not really even anything to address as far as I am concerned on that, because that date has passed and there was no request, so there's no extension of the period. And then on June 15th, the order was entered. The final DIP order was entered, and at that time, the court directed, and as from everything I know, the parties complied with my request to provide informal discovery to each other, and apparently there was even a meeting or a telephone meeting at which the parties discussed the various matters between them, and the issues relating to this that form the basis of this motion were brought up. Is the way I would say it. The basic challenge here is to the roll-up feature of the entire DIP financing package, which included a $40 million DIP loan, initially 36. And then, as I indicated, that was modified with respect. Was it not recording all that time?
The audio cut out for about 10 seconds, but now it appears to be back.
I didn't quite hear that, but cut off for 10 seconds. Well, I don't know. Those pearls are gone forever, but I will continue as best I can. As I said, the principal objection relates to the roll-up feature of the DIP financing package, and I underline the word package because the uncontroverted testimony was that it was a package, that each part of the financing arrangement was integral to the entire whole, and that without all its pieces, there was no package. And that was uncontroverted. Also uncontroverted was that the debtors were in dire financial straits at the time of the filing. As Ms. Etlin testified today, the original DIP budget didn't include the $3 million that cash on hand at the time. Ms. Etlin didn't quite say this, but she did say $3 million is a very, very low amount of cash for a multi-billion-dollar entity to have, for any entity to have, and it was a reflection of the dire financial straits that the debtor was in, so dire that just a few days, it was either Friday or Saturday before the filing, $54 million of cash collateral, I'll call it, even though there wasn't a petition at that time. $54 million of cash collateral was released from the hold or the dominion of the lenders so that the debtors could get emergency, and there's no other way to describe it than financing that was needed to carry forward. And I will say unequivocally that when we were here that first day and I heard about that 54 million being put in a few days before the filing, and the 40 million that was put in the day after the filing, I understand that it was before the filing, but I also understand it was part of that whole package that included that the interim order that provided for the roll-up, and that without that whole package, the entire transaction was not going forward. And as was said at the beginning of the first hearing, the iconic brand of Bed Bath & Beyond and its ability to continue or hopefully continue as a going concern in whole or in part would have been severely jeopardized, if not destroyed. And there would have been, as I think the word I used was at the time, was a potentially chaotic situation where this entity no longer had the cash to go forward. And it was said to me at that time that that there was a $30 million hole that needed to be plugged to make sure that employees were paid, but not just make sure that employees were paid, but also to provide the liquidity and the confidence and the comfort to lenders, to lessors, to vendors, to other parties in interest, potential suitors, that the debtor was alive and around and needed and had the ability to continue going forward. As I said, the gist of the argument here is that the DIP financing was not necessary based on post-filing results that were not in line with projections, but each of which was explained today by Ms. Etlin, and the implication that the debtors and/or Ms. Etlin knew that the projections were wrong, and actually the revenues were significantly higher, expenses significantly lower, cash flow significantly better, were refuted by Ms. Etlin, and she didn't know them until after the budget was prepared and submitted to the court. But Ms. Etlin also testified very credibly and forcefully that the word she used was absolutely when asked whether the DIP financing facility was necessary and something that the debtor needed to go forward. And when asked whether if she knew the different numbers that came out for a variety of factors, I'll get into that a little bit more later. For a variety of factors, if she knew that about the different numbers, she still would have thought that the facility was necessary, and to avoid immediate and irreparable harm in the form of loss of employees, loss of confidence in the ability of the debtor to go forward, loss of confidence by landlords, loss of confidence by suitors, and the possible immediate shutdown of the debtor because they had no cash to pay, and they were in as they say, dominion, that weren't allowed to use cash collateral or those funds before the filing without consent of the lenders or here in order of the court. So then I think the debtors, with utilizing the business judgment of their chief restructuring officer and financial officer, of their management team, of also the Lazard firm, determined that the DIP financing was necessary for all those reasons and to avoid immediate and irreparable harm. And I found that, and I found that then, and I confirm that finding now, in the sense, on the basis of the testimony that we had here, that even without even with the new, in quotes, information, Ms. Etlin thought the DIP facility was absolutely necessary and a far better alternative than litigating over use of cash collateral. And although there's lots of issues and lots of arguments have been raised, ultimately the argument is that the debtor and the lenders knew or should have known that the projections were better than that the reality was better than the projections by the time the budget was filed, and therefore the DIP financing was not necessary, and effectively the $200 million roll-up was not necessary. I disagree. I find that those differing numbers were not known at the time of that the order at the budget was presented and the order was entered. I find that there was no misleading of the court or anyone by the debtors in the presentment of that budget. And I also find, I think importantly, and perhaps most importantly for these purposes, that you can't judge irreparable harm on the basis of what actually happened later on. You have to judge irreparable harm and its immediacy when it's being presented to you. And when it was presented to me, there was uncontroverted evidence of the immediate and irreparable harm that would befall this debtor if the financing was not provided. And there was similar uncontroverted evidence that the financing was not being provided without the roll-up and all the other terms of I think the word that was used was of the holistic package. So now let me get into as Ms. Etlin testified as to the known or knowable discrepancy between the DIP budget as filed originally with the interim order and then the final DIP order, which is the argument that there was no need for the DIP facility, and which was effectively and forcefully refuted by Ms. Etlin's testimony and the facts that you can't have a gamble on forecasts being wrong to your benefit in deciding whether to enter into a DIP facility. You have to use your best judgment based on what's before you. And what they had before them was the situation I just described. And then I'm sorry, I didn't, and this is part of my lack of organization that I complained about a little while ago. We also had the declaration of Mr. Kurtz, which described in detail the financing, the efforts that were going on for several months to try to obtain a better deal, and they couldn't do it. At the end of the day, Mr. Kurtz's summary showed that there was they were contacted over 100 potential financiers or equity investors or other kinds of investors, and they couldn't come up with a better deal than this one. And this is what they decided in their business judgment to do on the basis of decades of experience in restructuring and obtaining financing, and I understand completely why they did it. It's easy to second guess that now, whether you want to call it hindsight, being 2020, Monday morning quarterbacking, whatever the analogy or simile or metaphor is. You can't base those kinds of important decisions on post hoc knowledge that was not available to you at the time. You just can't do it. And as I said, those variances were explained in the unexpectedly high redemption of gift cards and with a lot of customers seeking to use those gift cards, double or more were redeemed in the initial couple of weeks, which led to the sales jump. There was a negative variance in the store liquidation sales because of a little bit of a delay in the startup of those sales. So not only did the debtors, not only did Ms. Etlin testify that she didn't know about it at that time, but how could that, how could she have done that? How could she have forgone entry into the DIP orders on the basis of those things, even if she knew them? And she said she wouldn't. I just can't fault them for not being 100% accurate on their predictions. And also, as I said, the disbursements were lower than indicated in the budget. That was because of a slight delay in the rent and the payroll that weren't dispersed on time. And then there was the testimony that that really did strike me as to the dire financial condition of this debtor, with 6 amendments to their credit facility as a result of continuing defaults, the cash dominion position that caused them to be short on inventory, that created further bad will and bad perceptions and bad sales in the pre-filing period. So that you just can't require a debtor to know about facts that hadn't yet occurred and base their decisions on that. I find it was a appropriate exercise of the debtor's business judgment in entering into the DIP facility. But that is, the claims that are made on the basis of that were effectively refuted by the debtor in today's testimony and the other supporting declaration. And then we go to Rule 60B, under which this motion was made, and there are various objections here on various grounds that. But generally, the Rule 60B requires which is incorporated into Bankruptcy Rule 9024, that a showing of, and the grounds here are 1, 2, and 6, mistake, inadvertent, surprise, excusable neglect, newly discovered evidence that with reasonable diligence could not have been discovered in time to move for a new trial under 59B, and 6, any other reason that justifies relief. The relief under Rule 60 and 9024 is considered extraordinary. See, for example, in Ray Lampman, 494 BR 218 and 222, Bankruptcy Middle District, Pennsylvania, 2013, and the cases cited by all the parties. No one really disagrees much on the standard, just the applicability of the rule. The party who seeks such extraordinary relief bears a heavy burden. That's Frisco versus Union Railroad Company, 379 F. 2nd 15 at 17, 3rd Circuit, 1967. And the clauses are mutually exclusive, and 6 can't be used as the 6 catch-all can't be used as a method of circumventing the filing and timing requirements of the other sections of the rule, such as 1 and 2. And as best as I can tell from this, it was the modified grounds were mistake and newly discovered evidence that could not, with reasonable diligence, been discovered in time to move for a new trial, and like I said, 6, but it wasn't that I guess indirectly it was that due process was not complied with, because the bondholders simply argued that they simply didn't have enough notice, because the initial budget was submitted the day before the hearing. Same thing with the final budget, and requests for information were rebuffed. However, that doesn't explain why sophisticated counsel representing parties with over $100 million at stake did not or chose not to file discovery requests that are entirely proper as a contested matter under 9014 and also as under Rule 2004. It doesn't even require a motion in this court, just 2004 examination and production of documents. And there's no question that the bondholders knew about the roll-up, knew about the make whole, knew about the interest provisions right from the beginning. Even though they were just in the case, they knew about it right from the beginning. And I have no objection, no formal objection from them of any kind until this motion for reconsideration that was filed more than 2 months after the case commenced and the interim order was entered. And that request seeks to undo everything, although it was modified somewhat in an undefined way. But the request was to vacate these orders after the money went out, after all the employees were comforted, or after all the going out of business sales occurred or mostly occurred, after the auctions were occurring, after all the things that allowed for an organized liquidation of this debtor's assets with a possible sale as a going concern for all or part. After that's all done, then okay, let's just undo it. The words manifest injustice are used in the 60B if it would result in a manifest injustice in cases in cases describing that. To me, in all candor, the manifest injustice injustice in the circumstances that we have here would occur if this court were to vacate orders that were entered on the basis of that testimony that I had before me in the form of declarations and now confirmed in testimony today. And without any formal objection being filed in the 2 months since the case commenced. And that, to me, let me just get to the issue of whether I have authority to review the interim orders and the final orders under Rule 60B. I certainly have authority to review the final order under 60B. In at least in some sense, I do. For example, if it was procured by fraud, I think that would be an appropriate grounds for reconsidering that kind of an order. So while I do have that authority, the argument has been raised that by its terms, it says the rule says a final judgment, and it does say that, and I acknowledge that. But as I said earlier, I think the cases cited by the bondholders say that under 105 and under a court's inherent authority, the court has the authority to review its own orders at all times. And in particular, this case, because with all due respect and candor, Mr. Hillman, the argument that you can't seek reconsideration of the interim order because it's not a final order, but the interim order did finalize the roll-up is a bit of a circle that you can't get out of if I were to adopt that interpretation, and I don't adopt it. I could reconsider it if I wanted to, if I found that there was sufficient grounds to do that, but for the reasons I'm stating here, there was no mistake. To the extent a mistake was alleged, there was no mistake by the debtor or Ms. Edlin. And then you go to 2, the newly discovered evidence was reasonable diligence that could not have been discovered in time to move for a new trial. That ground is not satisfied at all either. It's really not even close. I mean, if there was an objection to be filed, it should have been filed, even just as to the if there was a problem with the make whole and the interest and anything else, that should have been raised. And the challenge could have been brought, but it wasn't. And I also find that this is, and I'm not saying it's without any legal basis at all, but I am saying it has the effect of avoiding the strictures of 364E, which I incorporated into both orders knowingly, based on the records that I had before me and confirmed today, and confirmed in every respect today. Based on the record I had before me, I had to do that. So I have no basis for doing anything other than that. But on the evidence with reasonable diligence that could have been discovered. If the debtors weren't being responsive, if the creditor committee wasn't being responsive, you could have come to this court or you could have served formal discovery and got the discovery that you needed, and I would have done it. I would do that on to the extent it's needed on short notice or whatever is required under the circumstances. I have no problem with that. But in any event, where I was going was, it does have the effect of avoiding the strictures of the state provision, in the sense that without getting a stay, forget about not getting a stay, without even filing an objection, the bondholders would effectively get a stay, because they also asked for discovery and a full evidentiary hearing and all this on 2 days' notice, without posting a bond, and with no risk at all. And 364E said that the reversal or modification on appeal of an authorization under this section, whether to obtain credit, I'm paraphrasing now, or grant a priority or lien, does not affect the validity of any debt so incurred or priority or lien so granted to an entity that extended such credit in good faith, whether or not such entity knew of the tendency of appeal, unless such authorization and the incurring of such debt and the granting of priority lien was stayed pending appeal. That didn't happen here. Again, there was no objection, no formal objection filed until indirectly this motion for reconsideration more than 2 months later, and that was incorporated in large part, not in large part, incorporated directly into 364E, was incorporated directly into the final DIP order, and both orders actually, but was really extended by me in this case by applying it to any modification, amendment, vacatur of this order shall not affect the validity and enforceability of any advances previously made or liens created hereby. And as was pointed out by the so now I will agree with Mr. Hillman that of course the better view, in my humble opinion, is that 364E it should apply in this instance, even if that language wasn't in there, because as you would think, bankruptcy court modification of its own orders poses the same risks as does reversal on appeal. That's citing Cam and Nate Hughes, number 2, Inc., 908 F. 2nd at 1355 to 1356. And the policy behind that is, and which no one here will I think, no, I don't believe anyone here will challenge that. If creditors fear the rug will be pulled out from under them, they will be hesitant to lend, and would overcome people's natural reluctance to deal with a bankrupt firm, whether as a purchaser or lender, by assuring them that so long as they are relying in good faith on a bankruptcy judge's approval of a transaction, they need not worry about their priority merely because some creditor is objecting to the transaction. And that's the Sweetland case 16 F3rd 552 at 561. And then as to the timeliness of the motion under C, I'm also finding it's not timely because just waited too long. Could have done it before. Could have made a challenge. Just waited too long. Should have been done much earlier before all this happened, and all the benefits that were obtained, including the benefits of the settlement with the creditors committee, which unwinding this at this point, it just not only would be extraordinary relief, but it would be extraordinarily unjustified relief. So then let me just, I want to make sure I hit all the arguments because, looks like there's been a lot of paper filed in this, so I will try to be as thorough as I can be. Let me see. Okay, so the arguments that were made by the bondholders I've addressed in some respects, but here I addressed the argument, and I am finding that I have the ability to review the interim order as the bondholders argued, but as to cross collateralization, which, I guess this is the argument here, is that the roll up is in effect cross collateralization, and that I have to citing a case that I decided that the business would not survive and the proposed financing is in the best interest of the creditor body as a whole. Well, that wasn't exactly what I held because that was me describing what another court held, but what I said was cross collateralization is based on the financing being cross collateralized was necessary for the debtor to seek reorganization, and without the financing, the debtor would be forced to liquidate, and unsecured creditors would receive a greatly diminished recovery or no recovery at all. And then what I said is that's why a number of cases say that cross collateralization is discouraged. It is often used, and even courts that discourage it have approved its use. And I find here where the reorganization purpose is a liquidation, that a permissible purpose is the liquidation, that it does satisfy that standard. This was necessary for the debtor to do an effective liquidation that would be hopefully transformed to a confirmed plan and a sale of at least part of its business as a going concern, and that the creditors, I think, would receive a greatly diminished recovery if this was thrown into the chaos of no financing and having to use cash collateral, and employees possibly walking out, and vendors not providing goods, and landlords seeking relief. Is just it would be a very, very difficult situation that I again find would result in irreparable and immediate irreparable harm. I addressed already that the arguments that the debtor's projections were wrong, and that the order should be reconsidered on that basis, and the roll-up is unnecessary. And then I have to note, why couldn't the arguments about, let's say that you thought that the roll-up was done, why couldn't the arguments about the make-whole provisions and the interest provisions, why couldn't that have been addressed before? That's a rhetorical question, because it could have. then as to denial of due process, I'm now giving there's been more than due process from the very beginning. As I noted, the bondholders were on notice of this case and the DIP order from the very beginning. Yes, there was a few last minute filings, but that didn't prevent them from seeking more information formally or informally. Formally, if the informal requests were not heeded, as is the indication, and maybe, you know, eventually they did get it informally, and they filed this motion. And then the argument is that that if these facts had been known to the debtor, the court wouldn't have approved it, and the debtor wouldn't have needed the DIP facility and the roll-up and all that. And now that we have an even more complete record than we had before, I confirm the decision that I made before, that the debtor made before, that the DIP financing and package as an integrated whole was absolutely necessary to the go-forward conduct of this case, rather than litigating over cash collateral and trying to get other financing that the debtors could not do, would have just resulted in a lot more administrative costs, a lot more uncertainty, and I believe it could easily have resulted in significant diminished recoveries to creditors, if any recovery at all. So I think that covers it, and I am denying the motion for reconsideration, and I don't believe I have anything else before me in terms of the motion to seal, except for the seal as to the redacted portions, and that's it.
Thank you, Your Honor.
Thank you.
Your staff very much.
Thank you.
Thank you for your time. Thank you.
I appreciate everyone's attention and professionalism and diligence, and I hope everyone thinks they got a fair shake. I tried to give as fair a shake as I could. So onward and upwards for all of us, hopefully.
Thank you.
Thank you.
Your Honor.
So have a good evening. Have a good sports tomorrow.
All right, we done. Thanks for joining today. Sub up, like up, comment down. Happy Monday sticks around. You were watching the barbecue bankruptcy court hearing. Irrelevant to us. Jerry Damon, I hope you're on our Discord. I'd love to chat with you on there. Discuss in further detail everything you've got going on. Was it denied? I didn't even listen. Denied it? Well done. Well done. Thanks, Tao. Thanks, guys. We'll see you tomorrow. See you on Discord.